queued up here. Good morning. It is April 5th. We're going to be streaming stocks, options, futures, and looking at technical analysis and whatever seems to come our way. Wednesday, April 5th, and we have a short week this week of Good Friday. So Friday market's closed, futures will be open. We're going to get jobs data. Let me get set up here. Alright, put the Discord link in there. If you guys haven't joined, you're welcome to join. And I'm going to share on Twitter. Clean pair of shorts. Yes. Setup takes long time. Barron's, Bed Bath & Beyond's penny stock. Why Wall Street still covers it. Alright, I shared it on Twitch and Discordian. So I missed open, not a whole lot of time to look at some stuff. What I am noticing though is the volume on BBY since 5 after 8 is much more than it was yesterday. So that might be a good sign. 155,000 there, and a lot of this is in the 100,000 average or so. Compare that to yesterday's pre-market, a lot more than yesterday. So I'm not sure if that's significant of anything today, but we'll see. Yeah, very interesting. Morning, SHF. Decided not to be free after all. We will see. SPY's down a little bit, down 0.18%. We had that engulfing candle yesterday. I did grab some short futures last night, and we'll see. We'll see. I don't know if I'm gonna trade him and try and get another entry today, or just hold him. I don't really know yet. But market's pretty weak. We're back basically to the lows of yesterday, more or less. So bounce up to here might happen, which, yeah, we still could chop around up in this range, I would presume, until maybe next week, since the data come out this week is when the market's closed. So maybe closing these options before market open would be good. I feel like that's typically a good idea. Looking for Ravengle and a clean pair of shorts. Did you make that? Did you make that meme, Ace?
Thank you.
Made on your phone. Nice. Let's check out pre-market stuff going on. I think Twitter was down. Yeah, it was down yesterday, but now I'm not getting. Yeah. Yeah, Twitter's down, but it looks like our bot on Discord's maybe not grabbing the Twitter feed. We've got MCOM up in the pre-market here. So is that one we're watching with the reverse split? See what happens with this. So this already had it split. It also kind of had that spin-off, so might not be a carbon copy of what happens to Bed Bath, but yeah, might be similar. 12.5 pre-market. Thought about getting more of it. I don't know. Okay, Rivian. Okay, cash grid puts on Rivian. I think I'm gonna probably sell these BY calls at open again. sub X-ray. Rip back up. No. Like I said, I think it could chop around up here, but I think we're in the. I think we've hit a top. Not to say this is the all-time top, but I think the trend is reversing here. At this resistance and this engulfing candle now, I do see it coming down. Might do something like this where it comes down and kind of bounces and then eventually comes down, or we might just start coming down. Depends on your time frame. Intraday, yeah, we'll probably get a bounce somewhere. You know, might hit here, might bounce up here or here. Yeah, AMC is a little jumpy in the morning. Yeah, 4.8%. AMC ripped you. Did you have a position? About 4 minutes to open. Is Twitter itself actually down? Oh, Twitter seems to be doing fine. Your bot is messed up, maybe. Does anyone know how to reload the bot? I'm not sure how to reload this bot. I don't know. Okay, we've got Birds is up 3%. Corsairs down 2. Nice. EVTL is 0.5% green. GME is basically flat. MCB down 5.8. Nice. MU basically flat. BHC up 3%. Comes the bell. Uh-oh. No, I actually haven't opened up yet, so it shouldn't be a bell. Yeah, we shouldn't get a bell. Got about 1 minute. Yeah, I'm gonna be watching BBY. Probably get an exit on these calls. Hey, Jan. Got a beautiful, it's a bit of a loss. Really? Not gone too long. Yeah, I mean, yeah, maybe. It's still holding this level. I don't know. I'm still bullish on it. I want it to hold this level. This 187. If it breaks that, then I might have losses there, but I'm not dropping at this point. Maybe not a good idea, I don't know, but I guess I never had a big... Okay, there's the bell. I don't really know why I did that, actually. I can just mute the audio next time. Yeah, putting in an order for those. For Bed Bath. Buys down 0.18. This one? 4 AM, I'm not sure. Okay, I'm going to change that order to a 7 cents, so cost basis. Paying the commissions on the contracts. Buy's moving up a little bit. BBY is up 1.75. I'm holding on to my futures for now. Yeah. I don't have enough margin, I actually can't add to it, so I guess I'll just ride it. Thanks for your likes, guys. I appreciate it. Yeah, if you guys prefer Twitch, we're streaming on there also. Are they still doing the Amazon Prime, the Twitch Prime, whatever it was? I don't know if that's still going on, but yeah, if you got it, do it. MCOM up 9.8%. Should have gone just with the 7 cents. I'm moving up a little bit here. Yeah, I saw that consignment program. It's kind of interesting. Kind of a good idea. Creative way to sell product and kind of raise some capital. Ooh. MU's down 1%. Oh, MCP had a bounce from open. Whoa. Buy's moving up here. EVTL's up 2.5. Birds, yeah, I think I closed my bird shares. Yeah, didn't like it breaking that level, but let's see. Body is still living in the past. Free market life. UNG, is nat gas actually up? It's you, nat gas. 3%. I just short it here out of spite. Morning, Gene. Oh, GME. That's the level. That is the level. I go from long to short. What you gonna do? Needs to wick out of here quickly, or I'm not liking that. Whoa. That didn't wick, that flushed. Down 2% on GME. Not a big percentage, but that is a big level. Let's see if this little false breakout. It would make sense that it doesn't hold this at this point. TA looks up for it, but for how I'm seeing the SPY is kind of a top, doesn't make me as confident with the GME rip. But I could be wrong on one of those, so BBIG up 2.4, XXI up 2.4. Dang. Might have to close these calls. Flip to puts. 20 down a row. Easy go. MCM. MCOM. Alright, well. Looks like I'll be closing them. I'm gonna wait for a bounce. Yeah, you could tell that was a pretty big technical break. That's a big flush on it. Wait for a bounce, close the calls, skip puts. Price target 1940 first, and then after that, probably 17 or so. If it does, if it keeps going. Kramer said the price is going to go up on GME. We'll see. I mean, it's morning volatility. Could be a false break. Could just wick, but not looking too hot. The volume was pretty good too, pushing through that support. Might be. So I could either close these leaps or just do like at the money cover calls on them. But I figure I should probably just close them. Take the loss on them. Not down too much yet. It is actually crazy how much I'm down though for how much time I have on them. And my entries on them was like literally perfect. It was every time we hit this support, I would buy some. I mean, it would really just be a break of that support. There's no other... None of my other indicators are showing a bearish setup. That is something. I usually don't just swing trade on support and resistances. Let the gains begin. Morning, Christopher. Good, negative 10% day would be helpful. BBBY now red. Okay, I closed out those BBY calls. Really gotta act fast on them. That gas is coming down. I did take a little loss on it, unfortunately. That's the first time that's actually happened with the overnight. We even had a gap up. I wish this would wake up. I think it still should. EVTL back to break even now. Getty's up 5.5. MCOM 6%. Getty's had a pretty good run. Yeah, this thing's almost doubled last couple weeks. Crazy. You're funny. I know, IV on GME is incredibly low. It's like 60-something%. Yeah, it's not looking good. I don't even know if I should wait for a bounce. Oh, okay. Put an order and put an order at the ask, so a little bounce should fill. Unless there's just a little bear trap, I don't know. In the shorter term time frame is bearish.
I got a pink card.
Look at that. Well, RX-7. It's cool. BBY down 2%. FedEx is up 3%. Do they have earnings? There's 22. I just kind of hanging out down here at open, basically. Oh, look at FedEx's rally though. Wow. Right, the move from this earnings. Probably a nice long-term hold.
Does this one say that?
This one is it's like a prototype, like a Mustang. Yeah, kind of like a prototype Mustang. GME 2 little green candle here. See if I can get some of these closed. Bath, little bounce.
This is a little funny RX-7.
Fury up 7%. Chart actually looks kind of bullish. I think I have this in the long term. I was going to close it. I'll hold it for now. We're down 97% on it. Longeveron 4%. Dutch Bros 3.5. Weird stuff on the top of my watch list today. Again. ISPO's up 7.5. Nat gas is kind of holding its gains. Yeah, I'm not thinking this is a false break on GME. I'm not looking too good. Unless we get a big green spike candle and GME just rips past that support. Yeah, last earnings is I think historically that's their best quarter. And yeah, GME had positive EPS like 2 years ago that quarter, which I didn't realize that recent. They're crashing. It's a pretty big sell-off. Profit taking. And for that massive rally it's been having, we've got an RSI divergence here. Higher, lower. Okay, SPY's coming up a little bit. BBBY down 2%. Corsair down 1.5. Got a short on this one. EVTL back up 1.5. Bouncing off that 187, which is nice. I think we still could be like in an area like here on EVTL. I'm hoping. This volume still is pretty strong. CB, short's working out. Oh, to fill the gap? Oh, it made another gap. It gapped over the gap. Yeah, I think I'm actually... CB, I need it below 25 by April monthlies. Dang it, GME. Why did you have that? I kind of bounced a little bit there. We've got 408.66 for pre-market high. I don't know what the futures did. Then after hours high was 409.18. So could see some tests on those levels. GME is flushing. Trying to get out of those twos. It should fill now. 3.3. Put an order for some puts. Ah, flushy. That was a big level. BBBY just wicked down also. BY down 2.7. Morning, Dennis. We've got a little bounce on GME. Okay, I got filled on some puts. I don't like usually buying this early, but yeah, GME likes to. It rewards early sometimes on GME. So, not a whole lot of... These are actually kind of sketchy. Might not be holding these very long. Oh, this call. How about closing this call? Buy's moving up. GME's getting a bounce here. Alright, there's a little bounce on GME. Comes back up and retest that support. MCOM. Let's see. Gas is kind of holding. Won't close. Bed Bath down 3.5. Getting to yesterday's lows. 33.25 was yesterday. SPY ripping up here. SPY getting to that pre-market high. BoxD is up 50%. Oh, BoxDQ now, yeah, that's right. OTC. I hate the options on GME, I really do. I don't know why, but this one stock, they just screw you always on fills. You're always having to chase it. Amy gave back that bounce already. I should try closing them one at a time. I'm trying to just do all of them. I don't know how TD does it. Cannot get this thing to fill.
The tissues on my back.
GME down 3.5. BBY down 2.7. Support held up like bag cleaners. eBet up 4%, Dutch Bros 3.5. Oh, Cosmo Kramer with a little pop. Little inverted head and shoulders there. Hourly. Yeah, you can see it on the daily there. Interesting. Also have this RSI divergence. A little bit, yeah. I cancel this and try and do them one at a time. I might be screwing it up. Yeah, it's the old put your order in and then bid ask moves down. Then you're at the ask. Move back to mid. Then you're at the ask again. Hey, I got one filled.
Okay, this time.
There we go. What a mess. Okay. Whoa, SPY got poppy there. 10 a.m. was there data? Oh, there's a flush. Yeah, we did have data today. Oh, SPY's flushing there a little bit. Oh, ISM manufacturing. So, economic optimism, non-manufacturing business activity, non-manufacturing employment, ISM non-manufacturing new orders. That just came out. ISM non-manufacturing PMI for March. A lot of data at 10. A lot of manufacturing stuff. ISM non-manufacturing prices for March. Focus Weevil and their trade restrictions? Whatever do you mean? Wish I got Closer to the money or more time on these GME puts. I have one more call on my trading account. Wish down 2%. Kind of setting up its own little inverted head and shoulders here, maybe. EVTL still up 1%. A down 3.6. Dude, there's been not really any relief. The one little VWAP move turned into a red candle. Okay. Oh, I have 4 of these? Ugh. Realize how many. Yeah. Oh, there's a little flush on GME. Realizing some losses on these GME calls. Oh well. Down 4.5%. I'm just looking around to see what I'm long on and just considering closing. Wish, trading account, and EVTL are the only ones really. Everything else I'm pretty much short on. Pretty big red candle there on SPY. This I'm just riding till Valhalla, I guess. I got stopped out on HKD yesterday, so we can expect a rally on that thing soon. I'm up 3.25. SPY's bouncing here at the same level, just a little choppy. Flat, basically. Yes. Got long on some stuff. These charts still look good, but weird a big sell-off. Sketchy. AMC's up 1.9%. I guess that pre-market volume on BBBY didn't mean anything. Back to yesterday's lows. GME is flushing down 4.3. 1940 will be maybe some taking profits for me. Probably won't happen this week. Maybe next week. SPY breaking through this support maybe. Yep, new low on the day on SPY. Broke through pre-market lows. Next level is yesterday's lows of 407.24. Scared for my longs. Rivian's coming down 3%. Wow. Those cash good puts on AMC are like actually might work out. That's crazy. They were down so much yesterday, now they're not down that much, I think. Or maybe this is how much they were down yesterday. Bad news. Bad news was that it broke that level. Oh, Ron took a sell off too, down 3.5. $19.40. Buy bouncing on that level. Yeah, I mean, everything kind of took a dump here this morning. Yeah, this did double top, but it still could be up and handling. Market keeps coming down. It's not looking too good. Still an inverted head and shoulders here. I don't know what the beta is like on Carvana, if it moves with the market all that much. I don't feel like it does. So it might be safe. GME down 4.6. Those puts are up 15%. GME oftentimes makes most of its move in the morning. Kind of strange. Sometimes we'll get like those afternoon like rallies. Like when it rips. But I feel like to the downside, it's usually starts right away, and just you can see what's going to happen in the first 5-10 minutes. How it's going to be. How's it gonna be when you don't know me? Of course, they're down 3.5. This is a nice little quadruple top playing out. See if find support that 50 moving average like it did here, or if we get a bigger move. I guess I have spreads on that, so I just need it below 15. Got just over a month. Kind of aggressive. EVTL still up 1%. Eyes coming down a little more here. Short on Ulta. Yeah, I think he's come down quite a bit. That's a pretty big candle, you're right. A lot of profit taking. Just wish hold up. SPY moving down a little bit. Getting close to yesterday's low. BBBY down 5.8. Also getting close to yesterday's low. Bigger the dip, bigger the rip. Oh, SPY bounced on that level now. Not ready. It's still early. Only been like 45 minutes. Queen moon. Last night, actually, full moon. Full lunar base. Almost 5% there on GME. 5% on BBBY. Bets up 10. MCOM 1.2. Get back some of its gains. SPY's bouncing there. I don't want to just hold these. Only 5 contracts. Spy should consolidate at the low, set up a little bear flag. Probably gonna flush through. He's ripping it down 4. Had that RSI divergence on the hourly. Yeah, this is a better day to get into Rivian. Never gonna go bankrupt. SI's down. Bouncing on that level still though. Similar to GNS. I mean, the catalysts are totally different, but yeah. GNS I think still going to fill that gap. Options aren't very liquid though, so I left it alone. GNS was a totally different catalyst than what BBY has. Unless if they do what GNS did, which even if they did, I don't think they'll get the same. Oh, maybe. Might get the same reaction. Yeah, I select the Rivian chart. I just got a bad entry on it. And the market looking so bearish, I'm nervous. But that said, I did want to go long on this, I think. Even more. Long Rivian, short Crocs. Yes. Yes. I don't know about that Croc short. What are you doing on Rivian? You're doing a spread? Oh, just a 20 call. Buy's bouncing there a bit. Let's see.
So we're going to be at a point where we're going to start to see unemployment rising and the Fed not lowering rates yet. So that's going to be a spot where we have not been in some time since the Great Recession, where the Fed hasn't just been in there to knee-jerk, quick react and give the market what it wants. The Fed's going to have to stay firm. At least they've been saying they will. Whether or not they will, I mean, maybe the market disagrees with them, but it's going to be an interesting case to prove out. I think the Fed, to have any credibility, they have to just keep rates where they are, even if the economy slows down, until inflation gets to closer to their target.
Right, I like it. Well said. It seems like a fair description of where we're at here. A little bit uncharted territory. Thanks, as always. Appreciate it, Joe T. Gang. When we come back, let's talk some small caps, a little activist investing from the team at 180 Degree Capital, looking for a turnaround in the ComScore business of media analytics, to name one investment. Russell's been struggling here this morning again.
Yeah, I saw the launch of the new vendor consignment deal. Kind of interesting. kind of bouncing on that support. Scared to go on the Oblivion. You got a ton of time. Spy bouncing there.
Where's the other cargo?
GME bouncing a little bit with it. Not bad bath. Cocoa Global Performance total asset sales have exceeded 20 billion since the company inception. That's not BBY. I mean, yeah, that's who they're doing a vendor thing with, but they're only getting what 120 million from Cocoa.
What is the man? Thank you.
BBBY just broke yesterday's low. Too low there. It's down 6.5%. 30 cents incoming. Wait, why do you guys want to go to 25 cents? There's BBBY flushing. 7.5. Good company. Yeah. AMC's up 2.7. No little bounce from that overreaction. I don't want to go to 25 cents. You guys on Discord, you guys are talking about 25 cents. There's some magical thing that happens at 25 cents.
Just fell out of favor because Silicon Valley Bank goes out, and you're worried about the next bank going out, and the credit cycle is negative, and people are worried about liquidity and whether companies like the small caps can actually get funding. Yeah, I mean, the market is ripe for opportunities if you've got a little bit of a time horizon that lasts longer than today's lunch. And when we get to a place where there's rosier times, or at least investors feel more comfortable about the economic environment, many of the stocks that we own, many of the ones that we're looking at, have the potential to double. And so, it's painful coming in every single day and watching a stock that you think has the potential to double go down another 5% or 2% or 3%. But, we're long-term
thanks for the gifted membership, Ace.
This is a great
I don't see it
opportunity
on.
to create significant wealth for folks if
Gotta pay closer
if you've got a
attention.
little
Thanks, man. I appreciate it.
patience.
Sure.
We just don't headed towards Armageddon from an economic perspective.
Good, I swear.
This isn't 2008 for us, and people are treating it as if it is.
Yes, he's right.
We don't see it that way, and we think
You guys are
small
not a
caps
member.
will
Ace
outperform
Ventura just gifted a free
once we get
membership
back to a
for
little
the
bit of a
taking.
risk-on environment, which may not occur for a little while.
I'm
He
glad you
certainly
bring
is a
that up,
legend.
not to be harsh, but
Thank you guys for
Turn as
thumbs
a
up, too.
stock Down about 27% over the last year is doing worse than
21 of
Russell,
them.
down about 14%.
That is neat.
I'm wondering if, to your point, are you making bets on companies that will need some economic strength, or is it more that the market is just getting very extreme in its view about what economic impact is going to
Bed
be
Bath
in
down
those companies?
7.8.
Yeah, we're a
Remaining
small
Razor Curse.
company and a turnaround
Need to
in and of
figure
itself.
out how to force
We
them
got
to have
here
it.
6 years ago, and the first 5 years were fantastic. We almost tripled the value of our business, and
Forever
we
great.
made our business.
Forever.
I
I
think
wanna
Turn
be
stock is
forever
indicative
great.
of any other small cap stock. It's not
Vivian
necessarily about
Flushing, they get
fundamentals.
filled.
It's
Oh.
about liquidity or the lack thereof. And if somebody wants to exit,
This is pretty
Turn,
sensitive to the market, it looks like.
and they've got 50,000 shares for sale, you've got
Vivian
to find a
is.
buyer on the other side. And there's not a lot of buying of small cap companies these days. And so the added pressure of being small adds to deterioration in the share price. Doesn't necessarily mean that our business is performing worse than the index, because it's not. But it does mean that when somebody wants out, they can get out. And unfortunately, they're not going to get. This is not Google or Amazon or Microsoft, where you sell 5 million shares at last sale. It doesn't work that way in the small cap space. So
There's
indicative of the
retesting that low again.
community of companies that have really struggled to outperform.
To that point, it's almost kind of like the stock itself sort of has a kind of implied almost leverage, not like a financial leverage in a
Moving
way, but kind of like
down.
a psychological one where investors are thinking small caps, also investing in small caps. So it seems like an explanation that makes sense what you're saying. Let's talk about some of the companies. Last time you were here, we talked Potbelly. That one's done quite well, actually, where you guys have had a role in that turnaround. But one that you're focusing on right now, I want to talk about is ComScore. You sent a letter to the management recently, last month, right? A company that I think kind of flies under the radar as far as media and analytics go. What do you want from this business?
I want the board to focus on the employees of the company and common shareholders. The business is performing well. They're taking market share away from Nielsen, which has really struggled here in the last year or so. The board, however, has unfortunately been focused on themselves, paying themselves excessive compensation to the tune of $4.1 million in 2021. Some of that was catch up from 2020, but excess compensation to themselves. You've got three preferred shareholders, Cerberus, Liberty, and Charter, who are focused on extracting capital for themselves vis-a-vis preferred dividends and also the potential for a special dividend. The stock has gone from, it's essentially down 60%.
I can make it automatic. I know, I don't even know. Let's see.
And the market needs a little clarity around the preferred shareholders aligning themselves with common shareholders, because they seem to be running this business for themselves. And the purpose of a board member, the fiduciary responsibility of a board member is to the common shareholders. And they've let the common down. So they've got to figure out the capital structure. They need to stop paying themselves as much money as they have. And they need to start focusing on the common stock. If they can, this stock has the potential to go up 3- or 4-fold because the business is performing well. They're taking market share, and the leadership under John
Okay. Let me see if I can find it.
Good job of running this business in this economic climate.
So you want cuts to compensation at the top, reducing the compensation rates. You want prioritization of the shareholders and a more kind of streamlined capital structure. You're what, the second or third biggest holder in the company shares right
green
now?
candle there.
We are, and we're going to keep at it. Yeah, we're going to keep at this until the board is responsive to common shareholders. You know, it's not okay for them to ignore the fact that the stock is down 60% when they control the outcome. They can easily convert some of their preferred shares to common shares at a price that doesn't economically disadvantage them. They can easily convert part of their special dividend and take that in cash or take that in stock at last sale. There's a lot of ways that they could stop the slide in the stock if they took action. But this board appears to be dysfunctional, not working for common shareholders.
I know, I've seen that happen too.
Write letters
where they just randomly gives it to people
until this board starts.
I even looked it up. No, I'm curious about it because
not just themselves.
All right.
Can I just go back one second for a second?
Yeah, sure. Go ahead, Kevin, real fast.
I don't think the cursed ones will be able to get it, but
I just wanted to say, you know, the stock's trading at $4.93. Well, the fundamentals of the business, we have close to $6 a share in cash and liquid securities, plus, you know, a few more cents in our private holdings.
Oh, wow.
So our value is near $7. So just because the stock price is $5 doesn't mean that's the reality of the health of our business. I just wanted to backtrack on that point, just as we were talking about term before.
So even just essentially the cash and equivalents take you to what, $1.50 more, you'd argue? Well, I guess it's not an argument; it's math, basically.
Yeah, it's not an argument; it's reality. So just the cash and liquid securities alone are 20% higher than where our share price is, which is why most of our management team has been buying the stock on a regular basis, and will continue to do so until the market gets a little more reflective of the realities of our balance sheet.
Okay. Like the details and the transparency. Appreciate it, Kevin.
Good seeing you. Thanks for having me.
All right. Last time we heard the case for PBPB, Potbelly. Today the case for ComScore and an implicit case on Turn as well. Like the perspective here on how one stock has gotten wrapped up in the selling that we do see extend this morning. We did just touch new lows for the NASDAQ a moment ago. Now basically on pace with the Russell, both lower by 1%. Thanks to Kevin Rodino, CEO at 180 Degree Capital. Coming up, we got some charts. We're going to take a look at the very exciting and hugely rewarding business of sports apparel and shoes. On Holding has become a sensation.
I wonder if it has to be like...
We're going to discuss a downgrade, though, kind of going against the recent rally. Albemarle's on the list, trading near lows, and United Health as the market here is pivoting back towards some of the safer stuff out there. Healthcare is showing up as one of the best performing sectors.
I need more levels. I don't. It's not an easy. It's something I need for like Chat GPT because it's not an easy one to Google. BBY down 7%. GME bouncing there to VWAP. I'll probably have to watch some videos on it. No, you don't need to research it. I'll just have to watch some videos on it. I'm not seeing anything written. I want. You know what it is? It is automatically gifting them. The people that are getting it are having to accept gifts. I think that's what all of them are doing. You know what I mean? So they're not clicking on it to get it. They're clicking on the link. Favors people engage more. They're clicking on the link to allow gifts on this channel. So then it's automatically giving it to them. And so we're seeing it like they're clicking on the gift to get the gift, but they're really just allowing the gift, and then it automatically gives it to them. So if we got people that came in here that already had that enabled on this channel, it would give it to them immediately when you did it. I think that's what it is. So basically, I think when they all expire, I bet if you gift some, it'll automatically give it to them, because they've already enabled gifting on this channel. I'm a genius. That's why you're here. Not here for the stocks, here for YouTube tutorials. But yeah, I think that's what it must be. Because I was just reading through it, and it's like, people aren't accepting it, they're just allowing gifts on the channel. And then it's immediately giving it to them. So I'm pretty sure that's what it is. I'll have to wait until someone that's allowed it isn't a member. And you haven't allowed that to happen, so.
Buying at the levels that they have. I mean, on alone, those 75% year to date, that's something that sort of raises the alarm
type
for
in chat.
Baird. Sure. You know, and so they're waiting on the sidelines to
Interesting.
see.
Yeah, maybe you do have to type something, but I know you have to allow gifting on
or
it.
if it'll,
So
you know, potentially get even worse than
I think most people have probably not.
Because
If they
the
probably allowed
sentiment
gifting
could
and haven't
possibly
already
be
had it
pressured
allowed on here.
if slower consumer
So I guess you have to do it for
spending
each channel, which is
beyond March.
kind of weird
This
if I
is
just
not
enable
bearish
it
note,
for all.
It is a cautious note, right? So they had
Buys,
the
hitting out the
buy rating
lows.
on it. They're bringing
Very,
up the
very
price
flat
target
today.
basically to where it traded yesterday, and they're saying that's it. We're stepping aside for the moment, reduce exposure, and we've seen more and more notes like this for stocks.
That
that
gas is
this
coming
far.
down.
You see analysts come out and basically play a little bit of a timing game and say that's enough. So we touched the target yesterday.
I want a short on
and now
oil.
It comes down, Rick. Any break to the trend because of today's drop?
Well, you know, we did break down a little bit here. It was looking okay a little bit after the market opened, but we're since falling down below this steep trend line here. So
Buy a new low.
I get
There it
why
is.
they're
Broke
perhaps a little
yesterday's low
cautious in this
also.
name. We had a large gap upward. We're up about 44, 43% since we had this earnings event right here. Falling
I'm being
wedge-shaped,
patient.
it
I'm
was
going along on
absolutely just
Rivian.
shattered by the earnings move.
I'm gonna wait.
Now, I also have standard deviation channels on this chart. Standard deviation channels. We have our linear regression line, our blue line
AMC is
here,
not
line
moving
of
up
best fit.
percentage-wise,
And
but
then
it's
we
moving up
just
in my
take
watch list
standard
because
deviations plus
less
1,
and
plus
less
2
stuff is
above and below
green.
this line, and this helps us gauge whether prices are at a fair value or an extreme level. Now, my anecdotal observation is that stocks typically don't go too far beyond +2 or -2 standard deviations from this yearly line. However, we were above 3. Yesterday, we were well on our way to 4. So that was telling us that this, relative to its own price history, we're seeing some very extended volatility, big moves here. So that could be a sign that, you know, you should be a little bit careful with this name right now. Look as well that momentum is
I made a
falling
new
off
low,
sharply.
but
Momentum
hanging out
crossed
above it
back
now.
below the overbought area, which is a
MCOM
bearish sign here.
up
So
1.5.
couple that with a break below our trend line and a break below this overbought area, they kind of confirm each other here. So in terms of support and resistance,
BBBY
this
bouncing a little
+3
bit.
line near 31 now becomes a resistance mark, this red line
Just a
right
little
here.
bit.
To the downside, we could fall to the +1 mark, this orange line here, which is almost in confluence with our yellow 21-day EMA, coming in right around the
Their
just below
SPY's
the
kind of flushing a
$28
bit
level.
now.
Okay, pretty
Look
fun
at that
chart
inverse with
because
BBBY.
it seems to have really broken free from a range in which it traded at a ton, given the volume profile, and now trying to find a home somewhere here above 30 bucks or so. We'll see if it can maintain that. Clearly, a sudden winner that caught some of the investing world, off guard a little bit, where suddenly now we're having this stock in the same conversation as Lulu and Nike and other major athletic brands. So pretty good looking chart still, though, generally speaking, despite the downgrade. Okay. And not the most bearish note out there. Let's talk maybe a little bit more discreetly, kind of bearish, negative downgrade in Albemarle, Renita, shifting over more towards some of the supply chain of the electric vehicle world. What's going on here?
Yeah, that's one of the things driving this downgrade at Bank of America. They're downgrading this stock to a underperform from neutral, taking the price target down to $195 a share. That's from
kind of
the
flushing
previous
a bit.
one of 262. That's a close to a 2% move to the downside from where it's trading now. But this is all about, or primarily I should say, about lithium. Lithium prices extremely volatile lately over the past year, impacting those stocks that are tied to lithium. Of course, we know that EV demand drives demand for lithium-ion batteries and the lithium that goes into the batteries, and therefore impacts the companies that are exposed to it as well. The lithium ETF, the LIT ETF, has also been reflecting
I think that's where we're headed.
And so Albemarle had, how exposed are they to lithium? They already
pretty big vacuum
supplied
down
Tesla
there
and other
probably
big vehicle makers with lithium ion for their batteries, and it's building also a $1.3 billion lithium refinery in South Carolina rather. But Bank of America says that also lithium carbonate prices in China are they're continuing to contract, and that creates an earnings risk
like that
for
level too.
Albemarle. Additionally, the analyst says that Albemarle is at risk of it's more at risk than its peer
gap down there
in
too
the
at 403,
industry, which is Livient, because of their contract pricing model. Now, Livient's contract pricing model is a lot more conservative. They do pricing fixed and adjusted year-to-year basis, but Albemarle's contracts, they're based off of the more market-based mechanism. And with the fluctuations in the price of lithium these couple of years, that can absolutely impact the price, the stock price, or everything else that happens within Albemarle. So, yeah, this analyst is saying it's way too exposed to that type of thing happening because of that as well. And also, Bank of America, it's estimating that for the company to reflect softer chemical markets and a reversal in the price of a key mineral that's needed in its process. So it's got a whole lot of warning signs on this stock. Definitely more bearish than what we've heard.
So there have been other times that
I've
taken short on the futures at the top,
sales
or
model
larger
with
position. Unfortunately, I'm down.
Which you've seen, be about
I have
as volatile
5
as
of the micros.
energy and EV stocks themselves. Albemarle chart's been pretty crazy, and then also now maybe some input prices that go up for them as well. A little bit of pressure there on the margin. I mean, it is a volatile stock.
I thought it was 418 that I got a short.
We're back below that 195 price target as well, just within the past few seconds here. So, interesting chart, like you said, very volatile. And drawing trend lines can be more of an art than a science. It's more of a subjective type thing. It depends on the person looking at it.
Sure.
So I found that there were 2 potential trend lines to be looking at today. The first one is this steep one going off the intraday high that we had before, this yellow line. And that, by that measure, we've broken through a downtrend, but we're still, struggling here because
almost up
we
100%.
moved to the side beyond it. Today we're below it once again. The other one I was looking at was this white dash trend line going off near the closing high. By that measure, we didn't break through it yet. So
this thing just kind of moved at the market, so
perhaps
look
at both. Consider both aspects to how this works. There's different people are doing different things, and they're making trading decisions based off of those things. So it can be worth looking at perhaps 2 different trend lines
6.8.
if they makes sense to do so. One off the closing high, one off the intraday high here. So either way, though, the picture is the same. We had some support near this 210 mark right here, where we bottomed out a few times. We closed there right on the money almost yesterday here, breaking through it pretty convincingly today.
Corsairs down 4%.
The 190 to 195 level
40%
is
on that
perhaps buying zone here. That's some points where we bottomed out here, where we had roughly our low close. But it's not looking very good for the bulls here. Momentum trending downward into that oversold area below the 30 mark. Bearish signal here, especially considering we're breaking through to the downside through a downward trend line. That's not good. Okay. Looking a little bit closer here, just at some potential support and resistance. This area right here that we mentioned.
Never heard of this.
That area where
Albemarle?
we saw
I even say that.
some well, prices were bottoming out right around that point, between about 190 and 195.
Got it.
Albemarle.
Okay. Nice. So it seems like Albemarle might have a little bit of support here if we get something to change.
Albemarle.
But bearish downgrades are not going to
Never heard of her.
We got something positive to end on, though,
Yes.
Renita.
Wish
let's
down
talk about health real fast here.
5%.
Healthcare always brings us up, right?
That's
well,
right.
Right
It's
now,
one I
Raymond
like,
James,
but
it really does. Raymond
sell
James
off of the market.
upgraded to a strong buy, United Health, and raised the price target to $630 up from $615. That's around a 26% move from where it's trading now. But this stock is down more than 5% year to date. And it's because of those year to date underperformances that this analyst is more constructive on the shares. He says that the setup going forward is way more favorable because many of the policy overhangs that were
being
on
down
this stock
5%.
lately, last year, the past couple of years,
New lows on
he
there.
says that those may be actually clearing up right now. One of those he's talking about within legislation as well. He says that those legislative risks are becoming minimal right now. It previously had changes made to Medicare Advantage payments within United Health,
trader.
and he thought that the company rather thought that would create headwinds, but it's actually turned out to be something good for the company because the way that it's rolled out. So for now, this analyst is calling this a win, not just for United Health, but for the industry as it sort of goes through these big changes to the Medicare plans.
All right. Like it. Nice wrap there. Shares seem to be kind of waking up again. Certainly helps to see the market overall down, and healthcare stocks tend to kind of catch that safety bid, but it looks like this is really picking up the pace, Rick.
Big breakout from this falling wedge type pattern here. Big move above our old highs
UNH
near
up 2.5.
486. This green dashed line right here. And it was looking like perhaps maybe the move was going to stop the past couple days here. We stalled out right here at our purple 250 two-day EMA, as well as near and kind of stabilized near our volume profile point of control, which is just below that here. So in the meantime, though, we did break through our yellow 21-day EMA and our 63-day EMA in orange there, as well as the trend line here. So it was looking not too bad. But perhaps
anyone
seeing
on
a little
Discord
bit of
able to refresh
consolidation.
this bot?
Now today we're moving above the highs that we established over here. This
Twitter
red
bot.
dashed line near 500, we're just cruising through that this morning here. Momentum looking pretty strong. We passed above our previous peaks in the RSI. We're mostly just following the price action.
I don't
now.
know if it needs to be
Above the 50
re-added
line, so
or-
bullish. Not quite in the overbought area yet. That's what bulls would want to see here.
That
The
somehow.
510 mark to the upside. If
Very
we
weak.
zoom in a little bit here, we can see that
Jimmy
this
did the
point
same thing yesterday?
was our old highs right about here. So 510 to the upside could be a place to look for some potential resistance.
Sort of, yeah.
Then
Spy's coming down,
here,
Jimmy's
as we mentioned,
not really
the,
caring.
Purple 250
But to me, it's all
two-day
different now.
EMA
They broke that
volume
support.
profile point of control right around 494, 495.
All right, so the first step to a reversal.
I see them both just coming down now.
A trip higher might
Spy,
be a
new
card
low
on
there,
range
406.52.
for United Health after breaking out from the little wedge to the downside. Okay, nice way
I
to
do
end with
healthcare
a
stocks.
positive note in a down market. Thanks, Renita and Rick. Good
Inverse
stuff
the
here.
market.
Very busy morning on the sell side, and that includes CrowdStrike.
Or is that not a thing?
Let's go to
That's what
New
he was
York,
saying.
where Caroline Woods standing by to look at the security company down here after the management had an investor day.
Hey there, Oliver. Yes, it could be that virtual investor briefing that CrowdStrike has that is sending shares lower this morning. As you said, down almost 7% today. That being said, you know, kind of
3
looking
cents,
across
very
my
funny.
screen in terms of some of its competitors, we have Okta down about 5% today. We have Zscaler down about 7% today. Palo Alto's down about 2%. So it could also just be kind of negative market sentiment, concerns about a slowdown, all of those, you know, worries coming back into the marketplace. But yes, in terms of that investor
moving
briefing,
down.
the company did discuss some key metrics and longer-term financial goals, all pointed to growth, really. They talked about having 18% market share in the industry, the #1 position,
can get
highlighted
a
their
short on oil
rapidly
if I have enough.
expanding customer base. They expect 44% year-over-year growth on that front. They forecast 55% subscription revenue growth this year, 48% annual reoccurring revenue growth this year. In terms of free cash flow, expecting 55% growth. Also gave some new margin targets in terms of free cash flow margins. 30
Got a lot of making up to do on that
plus
nat gas
this
long
year,
that
operating
went against
margins
me
at
for
20
so
to
long.
22% and subscription gross margins of 77 to 82%. So really all pointing to growth. Not quite sure what would be weighing on shares other than this kind of negative market sentiment. I will say we did see some analyst reaction both price target hikes and a cut. All analysts, though, that we heard from are bullish on the stock still. Barclays is overweight, lowered its price target to 162 from 165, so just really scaled back by a few dollars. And as you can see here, it's trading at 127.34, so still quite a bit of upside. The analyst there said the company's investor briefing reiterated the $5 billion fiscal 2026 annual reoccurring revenue target and provided new long-term targets on cash flow margins that we discussed.
Was
that
hardly
he says
moved.
underpin the stock's free cash flow-based valuation. Needham, meanwhile, boosted its price target to $175 a share from, or I'm sorry, 170 from 165, maintained an outperform rating. RBC is also now at $170 a share in terms of the price target and an outperform rating. But when you take a look at this company, 90% or almost 90% of analysts are bullish, despite the fact that it is up about, what, 21% so far this year. The median price target's 167.50, so that still implies about 30% upside from here. So down day today, but overall analysts still very bullish on this name. And as I said, we're seeing a lot of its competitors down pretty significantly today as well.
Okay. Pretty big move across the board here, down for cloud stocks. I mean, the market as well fading, but in particular, some of these cloud companies that had this nice run are giving a chunk of it back fast. Thanks for taking us through it, Caroline Woods. Appreciate it.
I got a micro short on oil.
Kevin Hanks and out in Salt Lake. Scott Durfee.
Only 8,000 notional value.
Discussion this morning. Kind of an ugly day here shaping up, Kev. Is the Russell was early, but the Nasdaq followed,
big
and
move
now
on
they're
oil.
actually exactly in line.
Yeah, interesting. Remember, you and I talked this morning. It started with the Russell. It started yesterday with the Russell. It began today with the Russell. It was weakest, but now the Nasdaq is starting to catch up. You're right, Oliver. It's basically down the same percentage, about 1.4% on the day. So this is that hesitation. Remember, you've got big cap tech earnings coming up in the next 2 weeks or so, and people are starting to get a little jittery. You've had some
kind of wick down there.
Large rallies in some of these.
Got a little further to go, I think, before it really finds support.
Hesitating here,
405.90, I'd say.
But certainly a little shaky here as we go into first quarter earnings.
Yeah,
maybe a little bit past that.
At least kind of free fall
that nice
mode
little
here,
head and shoulders up there.
Since the open,
Beautiful
basically.
signal.
Really, since the data came in, another day, Scott, where our data were soft. The economy printed some weak numbers here, and we're selling off. So it seems like we're a little worried about the direction things are going economically.
Yeah, I think we are, and I love what Kevin just said about a catastrophic rally. It's interesting how those things that seem like they can be so important and so beneficial to investors and traders can actually kind of maybe work against us. We did get some data out today that is not really supporting a rally today, obviously, in the markets. In fact, the information we got today from
MCOM
ADP and the ISM, the Institute for Supply Management, both indicate, Oliver, that we're looking at what we feared was coming. We know that there's been some contraction now in hiring. We also know that the Institute for Supply Management is also indicating that can be that in fact is the case. And so I think that we're finally getting these indicators that maybe we've been waiting for, that kind of corroborate our approach to the markets, and that we've still got some tough stuff to go through here.
Definitely, the ISM here really showed us the way deflation, or rather I should say disinflation, or even just slower inflation, correlates with slower growth. It seems like that's really the only way to do it. We saw the prices paid go down for ISM, but then new orders took a dive right next to it. They're both still above 50.
There you go.
But to see those together basically is like, all right, it seems like, maybe the Fed's right. The only way out of the inflation paradigm is to crush demand.
Right. For your viewers, remember the baseline is above 50 expansionary, below 50 contractionary. So still all positive and above 50, but shrinking back towards that 50 level. And big new orders, 62.6 to 52.2 Price is lower as well, 65 to 59.5, and employment still expanding, but dropping back towards 50, 51.3, Oliver.
Okay. You know, the Dow trying to hang on here, positive. The, I guess maybe it's not like a silver lining, necessarily a good thing. You see the healthcare companies, the staples doing their job functioning in this market. But what I was going to say is that, the banks are only down 2%. They are making a new low, the regional banks, but to see the NASDAQ on par with the Russell, this just kind of seems like more of the sort of broad economic concern as opposed to like a singular risk point, which I feel like is the better of two bad scenarios to some degree. Instead of having the banks, just crashing like we saw for a few days there. All right, thanks guys for the thoughts. Helpful, good context on the data. Scott Durfee, Kevin Green, Kevin Hinks, appreciate it. We got a lot of Kevins here. All right, that's it for me. Trading 360 with Nicole Petalides is up next. I'll see you this afternoon. Market on close at 2 p.m.
Where's that? Is that Chicago? Must be. Oh, maybe New York. Which one was that? Alvo? Alvin!
Many option traders tend to focus on price and
Alvotech. Grow. Monoclonal antibodies. Super long term. Oh, is this a SPAC? Did pretty well though. Didn't get the curse of the SPAC. You've got kind of a head and shoulders here. Bearish MACD, red on the 9. I presume it's gonna probably keep coming down, but it does have a support here. If it bounces here again, maybe it won't. It's like 1280. But yeah, if it breaks that, then probably have a little ways to come down, some gaps to fill in there. Probably wait before going long. Eyes melting a bit. Of course, they're down 4.3. Why didn't I get a spread on my GME? I just got a naked put. CB down 7%. So we're now at the point. This is the thing with spreads though, where naked puts, you don't really have this. Not the point on this contract. This price is at a place where basically I'm better off just waiting. If the price stays here, I'll make more at expiration than I would right now closing because of that short leg gang. So this is where spreads get a little bit different. But as it continues to go down, of course, it'll be more profitable. But even more profitable if it's we wait till expiration. Unless, of course, it just goes way down. At some point, these meet up. Goes to $10. Hurry. Then it'd make sense to close. Or as a put, just a naked put, you could kind of just close it at what you think is a bottom. But then you're adding in the volatility and all of that to try and time. I like spreads. Compare that with my MU put. Which is just straight long put. Trying to kind of catch some of the IV, so it doesn't move very fast though, so it's not, you know, the contract's more valuable here than it was yesterday, even though yesterday was a bigger red day. But I guess that's because it's in the money too. Alright, SPY, little green doji there. Close at 405.90. 406.15 was the low it hit. BBBY, maybe a little double bottom on the 5-minute. Wish down 5%.
Signaling their conviction in this name. Meta Platforms, in spite of the move lower today, down about, I would say, just over around 1.8%. We are still seeing shares up about 76% so far in 2023 and up a whopping 140% from their 52-week low.
NA.
Right, understood. All right, and then there's news on FedEx, big news on FedEx.
Some major news on FedEx, and FedEx has been ongoing this restructuring for quite some time. It seems like it's paying off. So they did disclose at their Drive Investor event, they will now be consolidating their operations really into one organization. This phased transition with full implementation expected by June of 2024 will ultimately bring FedEx Express, FedEx Ground, FedEx Services, and other FedEx operating companies into Federal Express Corporation, becoming a single company under a unified, fully integrated air-ground network under that FedEx brand. FedEx Freight will continue to provide truckload freight transportation services as a standalone company under the Federal Express Corporation. They did name a new president and CEO of that newly formed entity. Also, to aid the transition, effective on April 16th, John Smith will become the president and CEO of U.S. and Canada ground operations at FedEx Express and assume leadership of some of the operations across their various brands. Richard Smith will also serve as the president and CEO of their airline and international and FedEx Express business. And during the transition period leading up until June 2024, they said there will be no change in their financial reporting structure, which is important because that is, quite some time away at this point. We're about 18 months out from June of 2024. But FedEx has been an outperformer this year. They've really taken several steps to become more efficient, more lean as a company. And for that reason, it's paying off in shares that are up about 33% so far this year, Nicole.
All right, thank you for that. Jenny Horn, good to see you. Markets correspondent here on the TD Ameritrade Network. Thank you for those stories. Let's get some insights on the news shaping the markets. And for that, we welcome in right here on set, Nate Tuft is with us, Chief Investment Officer, Manulife Investment Management, Multi-Asset Solutions. Thanks for being here.
Yeah, great being here. Thank you for having me.
So, the first thing that sort of stands out to me is the recent reports that we've been seeing. ISM Manufacturing Services, ADP, fewer jobs created. That came in 145 versus 210. Jolt's, fewer job openings. And, while my first instinct was, all the jobs are taken, it was really more about the companies not putting out or opening as many jobs because they are wondering, what is the economy? Are we going to have to do layoffs? So in this environment, what say you?
Yeah, still selling off, huh?
I agree with the sentiment. We're finally starting to see the evidence of the sizable rate hikes that we saw over the course of last year. And we always knew it would be
close your shorts at 20?
And now we're starting to see it. And for the rest of this year, I think we're going to continue to see
a
bit of downside and so in the numbers.
Now,
we're not
at 20?
particularly worried about a disastrous type of recession, but we are worried about a potentially prolonged period of time.
I trade Tesla a lot, actually. No, not a lot, sorry.
I
do trade it, though.
Where some people are going to feel it. Other people might not
I
feel
like
it
trading
because we
Tesla.
do think the general
You can do
job
spreads.
market will still remain pretty healthy.
Make it cheaper.
But we are going to see evidence of general
I
weakness
usually do
across a
spreads.
number of the indicators throughout the economy.
So at this point now, what is the Fed to do?
Yeah,
Should we just say
this is
our
maybe my
rate
most
hike cycle is
successful
finished at
ticker I
this point?
trade.
Well, I think everyone
But I don't trade
realizes they're
all
probably
that
very
often, which is funny.
close to be finished. And we're in the camp
I guess
that
that's
you
maybe why I'm
probably
successful. I
will
don't
see another
overtrade it. I
quarter
don't know.
point
Just
because
wait for
they need
perfect
to stick
setups
to their
somehow on
storyline.
accident.
And the reality is the Fed is going to stay very focused on the inflation until they get to a number that they're comfortable with. They can't be perceived to be letting up in their commentary until they actually achieve the number. So the verbal aspects of the Fed, I think, will continue to remain very kind of strong in their statements.
Yeah,
but
it
their
definitely has a lot of-
actions eventually, I
a
think,
lot
by
of
the end of
price
this year
action,
will start to
a ton of
show
traders, like,
that they have
it's fun to
reached a
trade,
point
but it's so
where
liquid.
they're comfortable with where the level of inflation
Tons of
is.
options, so
And
much
so
liquidity,
at this
tight
point now, we
spreads.
do see yields coming down. In fact, you saw me lean over. I was looking at the big board. I was looking at the 10-year, which today is at 3.26%. Okay, I had to rub my eyes because that's the lowest since September of 2022. What's the bond market telling us? Because now
Nice,
investors
Mr.
are gonna
Best.
have
Sounds
to
like you
make
got a
some
perfect
decisions.
exit.
Yeah, the market,
You know.
the bond market is now acting a bit more like,
Warren
hey,
Buffett
we're
will
going
best
into a
about BBY.
recession and yields are coming down. So
I
the
like that.
relationship between bond prices
like
and stock
that.
prices are coming back to
Interesting.
more of a normal environment. This is after a year like last year where we saw correlations go the exact opposite way as you would normally expect. But now they seem to be acting more rationally. And we
Tesla
do
call.
believe as we move
I'm
into
pretty
this
bearish
period
on the
of
market
low
right now,
growth
so I'm
technical
not
recession,
thinking
you
that at
probably
all.
will continue to see bond yields come down a bit on the margin. And the amount of reset we've seen just
Looking
in
at
the
Tesla's
last
chart.
3 weeks is pretty sizable.
Yeah, I mean, even tech is pulling back. You have rates pulling back yields, but
Doesn't
tech
say a whole
also
lot
pulling back.
yet.
Sometimes
It
you
did
know,
break
when
through
the
the
bond
support,
yields
so
pull back, then tech
it looks bearish, at least down to like
to
some of
move
these
a little
levels
higher.
maybe,
That
but
being said, I know you've had
not
you
a
know,
great setup to
lifetime in
me.
finance. You've covered global
Short or long.
stories from Asia.
But
to
yeah, I'm
Europe.
seeing the market is
there something
hopping,
that
so
you're watching closely
I would be more bearish
in
on
making
Tesla than anything.
investment decisions now at home?
Yeah, there's two things that we're really focused on from an investor perspective. While we're not outright negative on the markets, we are a bit
like a
more
bounce.
defensive in our positioning. And one of the stories that we're thinking
I'm
about
bouncing
and
a bit there.
implementing in our portfolio quite a bit is moving a bit more towards non-U.S. And I know that people have been saying that for years, oh, better valuations outside the U.S. And we've had this
Trading, buy,
30-year
sell, or
period,
just short
basically, or
selling?
20-year period where U.S. stocks have dominated their non-U.S. counterparts.
What do you mean?
But we're actually now in an environment where not only are valuations cheaper outside the U.S.
Trading on Tesla? I've only done
differentials are
options on
improving
Tesla.
outside the U.S. in favor of non-U.S.
As far as trading.
We
I
think
guess shares
dollar
too, but
dynamics are going to
I'm
be
not shorted.
favorable. So as a U.S. investor, putting some
I've
dollars
never
outside the
shorted
U.S.
shares
with a
before.
weaker dollar will benefit you. The China reopening story, we think there's some real life and legs to that, particularly for economies
Buffett is
that
a
are more
retail
closely
investor.
tied to it. And we're even just seeing the characteristics of some of the earnings and relative earnings in parts of Europe and Japan and Asia that are better than what we're seeing in the United States. And so we have a number of catalysts, not just cheap valuations, which is a poor timing tool, but other drivers now leaning us to lean a little bit more outside the United States.
Yeah. I'm glad you said it the way that you did, because sometimes they look at PE ratios and they're finished, but you really see the growth prospects. You're talking about the weaker U.S. dollar, which could help in this case.
Oh yeah, I wanted to
being
short
said,
the dollar.
If this has legs abroad, what's your advice to investors? I guess to have a well-diversified portfolio, what do you think that should be comprised of at this point?
Well, you know, we're multi-asset investors,
Pretty
so
good
we're always going to
day to do
have
it.
exposures across a wide array of diversified assets. But right now, as I said, we're leaning to be overweight non-U.S., and that includes both emerging market economies as well as developed non-U.S. And so if you're a U.S. investor, global in nature, adding 5-10% to non-U.S. exposure makes sense to us. The other area where we see interest is still quite a bit of opportunity in parts of the alternatives market, whether it's private alternatives or it's some of the more liquid alternatives where we have wider dispersion in return profiles across the globe, whether it's sectors or stocks.
What's a
Some of these
good
global
way to
macro
short the dollar?
strategies can do a
Looking at
bit better. And
UUP.
some of these private alts, particularly
Something more
on the
liquidity?
timberland, farmland, infrastructure side, offer
I
a
guess
bit of
the
ballast
futures.
for portfolios. And then the last thing I would say is where we're a bit more concerned and being more defensive is we don't really think the credit markets have priced a lot into this idea of global recessionary consistent. Spreads have obviously blown out, but not to the levels that would typically say, oh, these are attractive. And so we're being a bit more high quality and increasing our duration a bit within the more traditional investment grade quality and even government-backed securities on the fixed income
paper
side.
account, so it
So
looks like.
so government-backed fixed income. And then just on equities, which have had a lot of volatility. I mean, did have a good first quarter, but it wasn't without some heartbreak and some roller coasters. That being said, is there anything within just
Looks like that is the support so far for this buy. Just above that.
Energy, get paid to wait.
4,590.
Healthcare always seems to be with the boom. Baby boomers getting older. Tech, valuations are still less than they used to be. Are any of those attractive to you at this point?
We are leaning towards the more quality sectors and how we define quality, which does include the more stable earnings profile type of companies. And so the staples sector, the healthcare sector, but most of the tech sector falls into that category as well. Where we're tending to lean away and be underweight are the more economically sensitive and consumer sensitive stocks. And so the discretionary space, the industrial space are areas where we're a little bit lighter in exposure, just based on this idea that we're going to have a period of time here where there's outright recession or at least a slow growth environment that won't be helpful to those types of economically sensitive areas.
Great to see you. I'm glad you were here in person. Tell us all about your thoughts on, especially now as we're getting closer to the Fed, meeting, and you feel everything sort of building in this new quarter. Thank you so much, Nate Tuft, Manulife Investment Management, Multi-Asset Solutions.
Nice future trades not allowed in this account.
Plenty more to come right here on Trading 360. Our 360 Spotlight will be joined by the President and CEO of TriNet after ringing the opening bell here at the New York Stock Exchange this morning. Our disruptor today, Apple. Kevin Green's all over that, and he'll take a look at this stock after a Piper Sandler survey revealed iPhone demand remains strong among the teenagers. And our 360 round looking at mega cap stocks and big tech, what you need to know. And the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat goes to the technicals. John Kaufman of Theo Trade takes us to the trades for Walmart, Nike, and the regional bank ETF, KRE. Trading 360 will be right back.
There's no liquidity on these UP option chain. Buy more by Thursday. I mean, he saw a support break. He might be a buyer down here at 17. That gap fill. His buying has been timed quite nicely so far. Except for actually, I guess he bought somewhere back here. But this one was perfect. I'm not buying power because I've been opening up all these futures. So, good on UEP for now, I guess. was looking at 20 strike on them. I'd go lower strikes, but I think I can get basically minimum there. A huge move on the dollar. Was Amazon on a monopoly? Was it not a monopoly? It's just basically a middleman.
Give myself a decent amount of time. I'm going to use what's termed an in-out spread. It's one strike in the money, one strike out of the money. I'm going to be buying a 148 put, selling a 146 put. Just a $2 wide put spread done for about an 87-cent debit. It's a nice defined risk trade. We don't need a dramatic pullback, and I'm not asking for a dramatic pullback in Walmart. I'm looking for a nice soft,
I guess I don't understand why would they be a monopoly?
And, I think again, if those cyclical rotations come to fruition here, we'll see just that. And it does appear that tech is coming under pressure here.
How is it a monopoly?
And, maybe we see Walmart rolling over in the next few days.
Yeah, and this goes with your bearish sentiment.
Oh, dude, he doesn't have a mohawk today.
You know, JP Morgan said that we're likely to be retesting the lows. We also got some cautious tones from Jamie Dimon. Rick, take a look at the Walmart chart today.
Well, I mean, at first glance, it might look pretty good here. We broke through this downtrend that we were in starting in early November, broke through to the side, started trending upward. From this point here, where this most recent uptrend began, we're up about 9% from that point here. We broke through all three of our moving averages, which are starting to trend upward here. We broke through our volume profile point of control. So everything's great, right? Well, maybe not necessarily here. If you look at this blue dash trend line starting at those yearly highs, we've got a long-term downtrend here. And guess what? We stopped right on the money right about here today, right around that 149, 150 mark right there. So that's something to consider here. Something else to consider is take a look at the RSI, our measure of momentum. We crossed into the overbought area very briefly a couple days ago. Today we're making new highs above that close, but the RSI is not making new highs. So we're seeing some very small scale bearish divergence here, but that's still not really what you'd want to see. You'd want to see RSI following price and making new highs with price, especially when we are trying to move above this resistance trend line right here, this blue dashed line. So looking a little bit closer here, zooming in a little bit on our chart to take a look at the support and resistance, the 147 mark stood out to me. And I'm not trying to confirm Don's price target or anything. This is just the area that I thought looked important based on the highs that we saw here and here. And that's about where we bottomed out yesterday as well, right there. So 147 seems like that's about where Don's break even was. That seems like a good tipping point for the bears in this name. If we do continue to the upside and break through this blue dash trend line, the 150 mark is a potential point here. That's about where we topped out right here. And ignore this big candle here. That was a day the NYSE had some exchange issues. That's not worth considering in this analysis.
I can't stand that happens and messes up a chart. But I'm glad you pointed out. I mean, at least you explain it. And then I'm glad you did, Rick. When I look at this and I really think about what's been going on with Walmart, you know, they're saying that the inflation, CEO saying the inflation this year is going to be somewhat of an anomaly. I mean, people are calling last year an anomaly. Don, final thoughts now after you saw Rick's charts here.
Yeah, no, I'm right in line with that. You know, so I'm less of a market technician, much more of a quant, and a lot of the quantitative tools that we use here, you know, actually ultimately align well with some of the technicals, specifically the RSI, which absolutely looks like it's peaked out here in the near term and can be rolling over in the near term.
Right, understood. They also said that SNAP funding, the cutbacks in the SNAP funding for folks who get food stamps and such, that could be a negative for the company as well. That would help your a little bit of a pullback. Okay, how about we move to a big mover and shaker of Nike? Nike at 121 today. Don, what are you thinking?
I know, I was thinking quant.
All right,
you don't hear people talk about that very much.
But it is absolutely
quant,
a bullish trade. We've
Look
had
at
some
them.
niche brands, like for instance Lululemon, Nike, that have really bucked the trend, if you will, of what retail sales has effectively done. And even though that there may be a broader slowdown, you know, in retailers, these niche brands have done incredibly well. I guess, do you really call Nike, you know, a niche brand, which is, you know, it's the absolute, you know, pinnacle of sports brands. Nevertheless, it has remained incredibly resilient. And at this point in time, if it can actually reach the 130 mark, it looks like it's actually set for a significant breakout. And we've seen a lot of these, what we term gamma squeezes in the marketplace. So I'm going to take a very measured shot to the upside. And when I say that, so I use a defined risk spread. I give myself plenty of time, plenty of duration, and I look for, you know, again, this gamma squeeze to basically unfold. So inside of Nike, I'm going to go all the way out to the June 16th expiration. So it's a long duration spread. I'm going to be buying the 130 calls, selling the 140 calls. It's a $10 wide spread. It's a big spread. It's done for a $2.40 debit. So that's why I say it's a nice measured shot. Look, if we're wrong here and the entire marketplace comes apart at the seams and, you know, the Fed has to come to the rescue, so be it. But for the $2.40, for that kind of upside potential on something that, again, if Nike can reach that 130 level, it has the legs to actually explode higher, possibly to 140 and reach, you know, multi-year highs.
Yeah, later in the show, we're going to be talking about that survey of teens, Don, and Nike. The teenagers love it. They picked Nike as their best sneaker brand. So, you know, I don't know anybody who would get a box on their desk of Nike and say, oh, no, I don't want that, you know, or Tiffany or Lulu or whatever. I mean, you're probably not going to push it away. Rick, your thoughts on Nike?
It was an interesting chart once again here because we're up about 47% from those yearly lows that we hit all the way back here around that earnings event here. Since then, we've progressed upward in a broadening triangle type pattern where we have two trend lines diverging apart from each other. But around this point over here, around the start of the year, we started converging. We have a symmetrical triangle pattern that's played out since then where we have two trend lines moving toward each other. So we've got kind of a sideways price action here, a bit more range bound lately during the past several months between about 116, which is this green dashed line. That's about where price bottomed out here, saw some consolidation here, etc. And once again, ignore this big green candle, that's that same nicey issue. And to the upside, around 129, we had the point where we topped out there. That's our red dashed line, like I said, and it's just above that value area. So maybe 129 to 130 would be a good point to be looking at those highs there. RSI, our measure of momentum, converging into a smaller and smaller area, just like price here. Trend lines work on RSI the same way they do on price. That's an interesting thing to consider during your analysis here. But we're not getting much of a read in directionally one way or the other. We're right smack dab on that 50 line in the middle that demarcates bullish momentum from bearish momentum. So not really much of a lean either way. Price, as I said, is still compressing within this triangle shape as well. So let's zoom in a little bit, look at some short-term support and resistance here. To the downside, between about 118 to 121. We've got all three of our moving averages and our trend line there. So there's quite a bit of potential support to contend with at this point. This might be an area where you want to look for RSI to perhaps provide a clue directionally, maybe a breakout below that lower trend line to help us out there. But if we do continue going toward the upside, like Don said, right around here, this trend line, we've got our symmetrical triangle trend line right around the 126 level or so, 125, 126. And then beyond that, we've got those highs from 120 to 130 that Don mentioned as well.
Yeah, and hard to find that direction. I loved how you showed the compression that was happening, because it does sort of bring that question. Final thoughts, Don, on Nike at 121 today?
Yeah, I know. As I said a moment ago, it really pains me to take this wild of a bullish position, but I think it's a nice, measured, upside trade. At the exact same time, though, I'm going to say I like those new Swiss engineered On sneakers. I'm hooked on them. So I'm done with Nike myself. I can't believe I'm saying that here, but it's the truth. If you haven't tried them, I'm telling you. You'll be into
ON
this.
is the ticker symbol, right? ON is the ticker symbol of that one, right? On Holdings. I always sort of thought, I didn't know what it looked like Dairy
You guys are
Queen.
blowing up on the
what
On.
What do those things say on there? But everybody has them, right? I mean, they're very popular. I guess, look, you're saying it, so I believe you. How about we turn our attention over to the less exciting, not sneakers, regional banks. When you look at what's been going on,
They're much more exciting than sneakers right now.
From Jamie Dimon, as I mentioned earlier, talking about the repercussions that are likely to continue on what we've seen from these regional banks. What are you thinking here, KRE?
Yeah, unfortunately, regional banks, some of the pressure is we're not through it. We're just simply not through it. There's some big issues on the front of the yield curve. Okay, none of those issues have we worked through. Are there going to be other banks that are going to have major losses? Unequivocally. There's just no question of the number of banks that are sitting on multi-billion-dollar hits. One of the things you really want to watch carefully in the next couple of weeks, though, is going to be price action in some of the individual regional banks, okay, some of the major banks, including even like Bank of America, which has been taking a pretty substantial hit. Look, if you look at even the XLF, which are of course, the financials, it's ready to break, below that 30, 31 level, which again, they have not recovered, whereas, most of the marketplace has. The S&Ps are doing well right now, but that's all predicated on what tech is doing. Financials have fallen basically flat on their face. They haven't recovered. The KRE is ready to break down. That's a trade that we're going to bring up right now. So I'm looking at the June 16th expiration. Again, giving myself plenty of duration. And I'm going to tell you exactly why. So KRE, if it is to break down, I'm going to give it time because this is going to be a fairly wide spread. I'm going to go for a buying the 39 puts, selling the 35 puts. Now, in a $40 product, to do a $5 wide spread is huge, but that's one of the reasons I'm giving it so much time. And this $5 wide spread where I'm buying the 39 puts, selling the 34 puts, again, in the June 16th expiration, it's just a dollar debit. Again, a nice controlled, measured risk to the downside. If we were to break, which I think there's a fairly good degree of doing that inside the regional banks, you have a nice profitable trade. But this is one where you're going to have to hold it, be steadfast, probably deep into May and even early June to see the light of day on this $5 wide spread.
All right, thank you for that, KRE. What do you think here, Rick?
In summary, looks terrible, could be getting worse. We're down significantly. I put standard deviation channels on this chart here. Standard deviation channels measure the variance and the data. It tells us kind of how extreme of a move we're seeing relative to its own price history. Typically, anecdotally speaking, stocks go between -2 and +2 standard deviations. Typically, there's not a guarantee or anything, but you would think a bank stock, which would be even more stable, would be even less volatile, and you'd think an ETF of bank stocks would be even less because it's a basket of stocks and therefore not as risky as one single stock. We're almost at -4 standard deviations in this regional banking ETF, which is a very, very large decline here. So consider some potential support near 34. That's where our -4 standard deviation channel comes in. 40, not 34. 40 for that one. And if we do break below that 41 level, we could see that here. RSI looking bearish as well. We're crossing back below that 30 threshold into the oversold area. So
Why would it be like
a
Amazon?
rough situation for this one as well going forward.
Thank you for that, Rick. Appreciate it. Great job there with the charts.
Why would
Final
people
thoughts, Don, big picture? It's Wednesday.
go off of Amazon?
And we're off on Friday. We'll have a jobs report
Move
on
over
Friday.
to BBBY's app to buy
Yeah, you
stuff.
have to love that, right? Economic report in a day that the market's closed, but hey, the futures are open. So yeah, near term, those financials are going to take some
Prime
pressure.
moving up there.
Probably going to be putting like a cap into the S&Ps. I don't want to say that I'm just outright bearish in the near term because I'm not. I think though that the S&Ps are going to have a limited upside because the financials are ultimately going to be just a lead weight around the neck of this marketplace in the near term.
Understood.
You mean just
Don,
above
great
you
to
out
see
there.
you. Thanks for being on the show always for the big three. Don Kaufman and our own Rick Ducat on those charts. Thank you both. Coming up next, we're going to spotlight TriNet. The president, CEO of the company, rang the opening bell at the New York Stock Exchange today. So we're excited to have a chat and talk about this company next on Trading 360.
Well, there's your green candle on SPY. AMC has actually held up well today, 3%. Rivian getting a bounce from the bottom there, down 5%. Tesla also. Wanro with some GME TA. Hard to see Wanro. Looking like you've got a price target down here of 1924 before it bounced back up to retest that resistance. Yeah, that's the fib level, I guess. So there, or 1940, right in that range. GameStop and beyond. I don't think there's a GameStop BBBY merger happening. That was my computer. Don't worry, your computer is fine. GME over VWAP. My puts are actually negative now, so could add to them, but actually don't want to. Got not enough time, too far out of the money, too much capital invested. No, I'm not too far to the money. I just don't have much time. Birds. Birds down 3.3. Yeah, it's going for that gap fill. See me getting a little pop here above VWAP. Might come up to retest this level it broke down through. Gaming soaps. Gamers don't shower. Getting shredded today. Baba's down. Of fake stories. SPY climbing up. VWAP's at 407.54. Getting close to it.
previous attempt to do this, to settle these claims, and bankruptcy court was rejected by an appellate court. It ruled that the company could not go through Chapter 11 bankruptcy because it was not in financial distress. And so it's just a lot of twists and turns in this. There's also issue with the fact that the company is trying to settle these claims with bankruptcy filings. It's so-called Texas two-step, where a profitable company does a spinoff that then absorbs those tort claims. But analysts are also saying that this may be a little bit risky for the company for the near term. Wells Fargo is saying that this is providing some sort of support for the stock. It's good for the midterm, but it may actually be a 50-50 chance of fully going through.
Yeah, and I saw on track for largest percentage increase since February of 2022. I mean, look, up 3.25%. I think people will take it, at least for today, off those lows of 150. So getting a little bit of a move higher. Thank you so much for that, Renita Young. Good look there at Johnson & Johnson today. All right. You may have heard the bell ringing, and Burton Goldfield was there, President, CEO of TriNet. Congratulations.
Thank you so much. It's wonderful to be here.
Glad you got a nice feature, ringing the bell. I mean, this is somewhat of a rebranding too, right? A new brand identity for TriNet. When people say TriNet, what do you want them to think?
I want them to think about the 22,000 customers that we serve payroll, benefits, and HR for. I want them to think about the vibrancy of the small and medium business market and the need for partnerships like TriNet.
Yeah, and so when you talk about 22,000 businesses, I mean, that is no small feat. Talk about some of the relevant and timely issues that some of these small and medium-sized businesses are facing and how TriNet can step in and help.
Well, the last couple of years have been unprecedented. We've seen COVID, we've seen the PPP loans, we've seen the opportunity to get the ERTC tax credits. How do you handle remote work? How are you handling medical benefits? So all of these are challenges for small businesses that have these incredible missions, and we're there to help them.
And so at this point now, I mean, what are some themes that you're finding? Because, I mean, navigating through COVID so difficult. So many companies had to go above and beyond for their employees, but also move to digital or do some of these things, you know, through computers and digitally and software as a service in the cloud, using payroll and benefits and all these things for human resource management.
So like everything else, there's advantage and disadvantage.
Yeah.
People are working remote, which gives them access to much better talent where you are localized.
Right.
On the other hand, having them not feel disconnected, having them have access to medical benefits, and to be able to feel part of something bigger than themselves is a challenge, and that's where we help them.
Yeah. How do you think people are feeling overall, since you speak to a lot of CEOs and company leaders? I mean, we're seeing already a lot of layoffs in tech and financials, but you know, there's a concern of a slowdown, right? We saw the jolts, the jobs openings, but I think a lot of that was just that companies are not listing a lot of jobs, right?
CEOs are an optimistic bunch. Our customers continue to be optimistic, and in fact, last night I announced that our customers grew in March. And this is the first time in 8 months that we've seen that kind of growth. Now, 1 month doesn't make a trend, but with the backdrop of this economy, to see the broad range of customers in our verticals that we serve grow was something I needed to get out, because they're optimistic.
That's good news for you. That's good news for you. You're dealing mostly with small and medium-sized businesses at this point now. Coast to coast, are we seeing any regional differences? Are there other hurdles that people talk about?
There's strength across the country. So the real issue is most of the companies we deal with have people all over the country, which is part of the challenge of access to the benefits and the communications.
When you've been with this company nearly 15 years, right? And when you talk to these CEOs and you're providing these services, they must be, how long does it take? You must be very grateful to have, you know, a leader like you to help them navigate what is really a sort of a difficult time, whether it's the economy or trying to understand a hybrid environment. You know, what are some of the things with payroll or the benefits or whatever else you're doing with them?
So we shine during challenging times, and we were able to get over almost $2 billion in PPP loans for our clients. We were able to get forgiveness for those loans. ERTC tax credits and advising them on where to hire and how to hire in these markets. And frankly, with the bigger companies laying off, it gives these small businesses access to unprecedented talent today.
Oh, that's pretty great.
Right.
And getting those PPP loans, I mean, you know, for example, I was talking to someone who's Ivy League educated, okay?
Right.
And we were talking about how to get that. I said, how is someone who maybe speaks some English and runs a hair salon or a shoemaker or whatever, great business person for that particular business, how are they supposed to navigate through these difficult pieces of paperwork? I mean, I thought that I saw some of it, it looked really difficult.
It was challenging.
Yeah, you needed a great team to do that for your people.
We have almost 4,000 people in the U.S. dedicated to these customers. So if they stay customer focused, if they focus on the verticals that we serve, I believe companies are going to be successful. I am very optimistic about the next couple of years.
Oh, good. I'm so glad to hear it. And honestly, congratulations to you and your team. I'm glad you're seeing the growth.
Yep.
A lot of fun during the bell.
A lot of fun.
That's always a great experience. And really getting TriNet out there, even on a bigger footprint.
Yes.
So people know that you're available to these small and medium-sized businesses. Bert, it's always great to see you.
I love being here and appreciate you.
Burton Goldfield, President, CEO of TriNet. We appreciate you too. Glad you're here.
All right, moving down there a little bit.
Coming up next, disruptors, and Kevin Green's taking a look at Apple. There was a Piper Sandler survey revealed iPhone ownership still reigns supreme. He'll have all the details and a way to trade it next.
GME getting a little bit above VWAP. SPY kind of hanging out now. Still below volume weighted average price. BBBY at 32 cents, down 8.4%. Corsair down 4. CP down 6.5. MU down 1.3. Oh, SI kind of flushed. No, it didn't. Oh yeah, it did. Broke through that level. Where's our millionaire that's retired that's just trying to help us out? I haven't heard his harmonica in a while.
Considerable move to the upside here, but I think it may be a little bit overextended in the meantime, and that's why I'm setting up this trade in order to capitalize on that short-term pullback before a final push to the upside.
Understood. And year to date up about 25%. So I'm glad you brought us this story too about the demand, and 25% of those teens talking about upgrades. I mean, they were talking about the iPhone 14. I'm already hearing about the iPhone 15. Also, Kevin, I don't know if you heard, but as far as favorite watch brands, number 1, Apple Watch. Number 2, Rolex. I don't know where the teenagers are going to get money for Rolex, but
exactly.
I hope they do. Right? Kevin Green, thank you for that. Coming up next, it's time for 360, and that's our 360 round. We're going to talk all about mega cap tech. We'll dive into Microsoft, Meta, Google, all those names. Trading 360 continues.
See what IPOs are coming up. Toro? Oh, secondary offering. Goal in Heaven? That one's Chinese. Yep, China. Viking Therapeutics setting up kind of a bull flag here on the daily. Easy goes up 4.5. What's the news on this? No idea. AFRX. BYXS. Like when you guys mentioned this the other day. Eyes moving down here. Wicked right to that line that we have there, that 407.43 on the upside. There's just trading this lower channel now. These Chinese IPOs are still, some are still having good trades. This thing almost doubled from IPO. Got to have a good exit on it. Alice said we booked that before. MCOM up 10.
To see, obviously not the banking issues that have happened, but some of the slowdown and the pullback in jobs is what the Fed has been saying we are waiting for and we want to see. Now that we're seeing that, I think these names are the names that you want to be in. We own Apple and Google. We also have a position in the Qs as well, which has done exceptional throughout this year and has exposure to the other names that David mentioned. We like the space again, and we think they're going to do well and probably outperform in this earnings report that's coming up here in the May time period.
Yeah, looking forward to that earnings season. So we've been talking about
our side of urgency on
Microsoft,
SQQQ.
Apple, Meta, Google. You know, we left out some of the others that would be in that FANG trade, names like Amazon, Netflix. I see NVIDIA is down about 3% today. Any other widespread thoughts here, David?
Well, you pretty much named the top half of the market. We own probably the only name I don't own in that group right now is Netflix. I love the shows. I just can't make a case for the stock here. There's a point where you're not going to want to own these names, and that's going to be the very first sign that you have that the economy is starting to strengthen. A lot of money will come out of these names and move into more cyclical names that are much further down the capitalization curve. But for now, you're going to want some safety. This is where to be.
Yeah, quickly, Logan, were you surprised to see that some of these big cap tech were the safe havens when the market started to be worried?
That's a great point. When we talk about safe havens, we wouldn't necessarily say tech a few years ago, but they have become the safe havens now. The big brands that are now the places where people and money move whenever things look bad and look dangerous. I think it makes total sense. The cash balance sheet, the strong performance that these companies have had.
Thank you both. David Nelson,
They're just like slowly faded his mic.
Logan Gilland of Joule Financial.
That's pretty interesting to think about.
Thank you so much. That's going to do it for Training 360.
I don't know if I'll buy it.
At 2 p.m.
I think they're still going to have a huge sell-off.
I'm Nicole Petalides. Keep it right here. Fast Market is next.
getting a little bounce. Above VWAP, same with SPY. Probably going to be still pretty slow today and tomorrow. Next week should get exciting, I believe. Jeez. By Lily. He's been on a tear. They just increased their dividend? What? They keep increasing their divvy? Definitely need to pick this up at some point. One I hear a lot about, I've just never invested in. I don't really have much exposure in this space anyways. Well, not gonna do it now. $0.32 on BBY. Yeah. Kind of a little triple bottom there. That's true. My overnight options hedge didn't really work today, so I don't know if I'm gonna do that again. Look. Hope I can get it for 5. See if I can get him for 5 cents. Basically gone down 1 to 2 cents every day.
Lighter than expected on them. Those seem to be what the Fed wants at this point, but now we're seeing a continuation in the sell-off in yields here. As I mentioned, the 10-year down to levels we haven't seen since last September.
Yeah, you're looking at a 10-year below 3.3%. It's interesting that the Dow is hanging in there because of healthcare, because of consumer staples are higher. Walmart actually also had some good news out today. So this is a market still getting jittery
now, though.
ahead of first quarter earnings, Tom. And with the leadership that was big cap tech, it's getting a little jittery. Even on an upgrade, Meta's down today. Yeah. So I think that these stocks have run a long way. We're about a couple weeks. We're a week away from banks, maybe 2 weeks away from high cap tech if you go through the calendar. And people are getting a little jittery. Yeah. And some of the data that we thought the market would like, right? There's the miss.
Just finish his
Everyone
word.
thought weaker data the market would like weaker data, and you are getting the move in yields that you'd like to get for stocks.
That would support tech, especially.
But the overall,
that gas might be
they're not
about to make a
stocks
move
aren't
up.
reacting the way we thought they would to this. So it's kind of interesting to watch play out. Everyone thought that good news would be good news. Bad news is bad news? Where did that come from?
Well,
Who thought?
I think it might be on the backdrop that the economy is going to really start to slow here. I think maybe that's why we're seeing some pullback in a lot of names today, most of the major indices. But one stock that we mentioned is doing well today, and that's Johnson & Johnson.
on the back of an announcement setting aside some cash potentially to get rid of all these talc cases. Let's bring in Caroline Wood, senior markets correspondent here on the network to help us break this down. Caroline, good news for the stock. Shares are up over 3%, but at the same time, this still looks like a shot in the dark because there's thousands of cases against Johnson & Johnson against them about these talc cases.
Yes, and of course they still need approval for this bankruptcy refiling. They refiled voluntary Chapter 11 bankruptcy, so it's not necessarily a done deal at this point, but we are seeing the shares react positively, up, as you said, about 3% today, a little bit more than that. Really, J&J and United Health are what's leading the Dow higher today, the reason it's above the unchanged line. But as you said, it announced a nearly $9 billion settlement related to its talcum powder causing cancer. Essentially, there have been thousands of lawsuits against Johnson & Johnson stating that its baby powder and another product, which it no longer has, called Shower to Shower, basically it connects them to cancer, asbestos poisoning, leading to mesothelioma, that kind of thing. J&J said its subsidiary LTL Management refiled for voluntary Chapter 11 bankruptcy protection in order to obtain approval for a reorganization plan that it says will equitably and efficiently resolve all claims arising from cosmetic talc litigation against the company. They'll contribute $8.9 billion payable over 25 years to resolve all current and future talc claims. J&J said more than 60,000 claimants have committed to support the proposed resolution, which still requires that approval in bankruptcy court. However, Johnson & Johnson didn't actually admit any wrongdoing, stating, importantly, neither LTL's original filing nor this refiling is an admission of wrongdoing, nor an indication that the company has changed its long-standing position that its talcum powder products are safe. So not an admission of wrongdoing, just a settlement. In fact, its VP of litigation said the company continues to believe that these claims are lack scientific merit. So Johnson & Johnson, of course, no longer sells that baby powder with talc here in the U.S. and in Canada. It expects to, end sales globally this year, and instead has replaced it with like a cornstarch baby powder instead. But as you said, we are sharing shares. Sorry, all these S's apparently I can't speak. Shares higher today, up more than 3%. So maybe just a sigh of relief that maybe it's one step closer to the end. But a Wells Fargo analyst came out and said there's a 50-50 chance that this is actually going to happen.
Caroline, I've been through a couple of these, and if the price action in the stocks looks counterintuitive, what it really is uncertainty became certainty. When risk gets defined, and it's not a small number, $8.9 billion is not a small number, but now they know. Now the stockholders and traders know what it is, know what the exposure is, and that's why these stocks rally. It's fascinating, and it like I said, it goes against your common sense, what you would think, but it's closer to being over, and it's defined. Uncertainty turns to certainty, and that's why the stock's up. But Caroline, is there anything else out there that they should worry about?
Well, on the certainty comment, I think also we could be seeing shares higher, Kev, because this Wells Fargo analyst at least thought that charge could be $10 billion. So 8.9 actually might be a little bit less than other analysts were expecting as well, which could be why we're seeing a pop in shares. Also, the fact that Johnson & Johnson says, okay, the claimants can be compensated, but then they can continue to focus on their core mission. Maybe it's a sign that, just moving on, from this. That being said, keep in mind, it still has to be approved in bankruptcy court. I think the other thing to just consider is really, since Q2 started, it's only been a few days, we have been seeing kind of this tone shift in the market. It's getting a bit more defensive amidst all of this uncertainty. And I think that, we saw healthcare, which was one of the worst performing sectors in the first quarter, now one of the best, could just be kind of more of defensive posturing within the market right now as well. And this could be kind of the catalyst for Johnson & Johnson specifically today. But, a lot of things to consider, but definitely not over. but making some progress here.
And it's over 25 years, too.
Yeah.
$8.9 billion over 25 years.
Yeah, there's lawyers involved in this. There's very little chance this is over by any stretch of the imagination.
Lawyers want to get paid, Tom.
Yeah, well, they want to get paid.
They like settlements.
They want to get paid more.
They like settlements.
And Johnson's got a lot of money. All right, thanks to Caroline Wood, senior markets correspondent here, breaking down the J&J news, helping the Dow turn positive. But now let's bring in Nick Theodorakis. He's the financial risk management director at TD Ameritrade. Nick, I wanted to get your take here on the moves here in markets. Kevin made that that commentary that, hey, bad news might be bad now because maybe 2-3 weeks ago we get news like this on the jobs front, on services prices coming down pretty significantly. That might cause stocks to rally at that point.
Yeah, we started talking about this earlier in the week, guys, and this is a pretty fascinating turn of events. And I don't mean just here on the network, but just looking at kind of market reactions and volatility when we're looking at overall risk profiles. And I do feel like that sentiment has definitely changed. We saw weak numbers, for really a quarter, kind of creating this sentiment that the Fed was going to ease back. And now, the Fed's saying, Mester said this morning, we have to go a little bit higher. So I think you hear Powell's commentary from last month, like we're probably near the high, right? We're probably 1/4 point move away from being done for a while. But now the news is bad, right? So I think the market's saying, look, the rate cycle is coming to a pause, and the data is turning over, and the Fed's telling us rates are going to be high. It doesn't bode well for the next, couple of quarters for the economy. And I think it's just the realization that as things really do start to slow down, we're that much closer to, mild or otherwise recession. And we don't know how far that's going to go, right? So you see that pendulum swinging, and the bad data is starting to confirm the fact that the economy is genuinely slowing. Plus, rates are likely going to be high for longer. I know the rates have moved down and the market still disagrees with the Fed, but they sound pretty adamant right now about it. And I think the worst case scenario is we get to a spot where the Fed does have to quickly cut, because that means the slowdown has been that much more severe. So I think that's what the market's starting to pick up on is the rate cycle ends. We're likely to see a slowdown, and that's going to ultimately be bad news for the markets for some time.
Yeah, Kev. The CME Fed
Watch BBY got a little pop up there through BWAP.
By the December meeting, that maybe 75 basis points of cuts. To Nick's point, they're probably going to be a little quick if they do start cutting. But at the same time, Fed's Mester came out. She came out last night and said, "Hey, we're going above 5%."
That was yesterday. Remember that. This is not stale data.
Yeah.
This is last night.
Not
she
stale
said
data.
This. Yeah. So she said above 5. Jerome Powell said the target rate is 5.125. That builds in one more rate hike and then a pause, and that seems perfectly commonsensical to everyone watching this market. Why does it? Because they keep telling us that's what they're going to do. So no one should be surprised
GNS or GME?
by what
Are you
they've got
actually
in
looking
there.
at GNE now?
What do we do? Now what does the market do, and how does the market react? And like Loretta Mester said in her comments, how long do they leave it there? Right, because part of her comment was over 5% and
You're
leave
stoked
it
on
there
that?
till we hit our inflation
move.
target. So it's not just higher; it's higher.
The
for
direction has
longer.
been decided.
And they've
coming down, man.
reiterated that message repeatedly, like,
Coming
hey,
down.
just because we might do another quarter basis point
You're getting a
hike
good entry
doesn't
to buy
mean
some
we're going to
puts
start
here.
cutting right away. Because their target for inflation is 2%, right?
Right.
And some of this data is coming in, and it's lagging data. We know
I didn't even come all the way back
but
up to
it's positive
22.16.
for that narrative that inflation's coming down a little bit. But Nick,
Probably not.
I was reading some notes on the Walmart Investor Day. The CFO basically came out and said, "Hey, inflation's
BBY.
still a
Look,
problem.
broke the view up there
They're working
momentarily.
through it on multiple sides, automating some of their distribution facilities. Also, starting to expand what they're
Market maker's
doing and
wrong.
where they're going as far as recession-proof
Price is
type
wrong.
of groceries, kind of redoing those stores. But if you look at the inflation and you look at the 10-year yield hitting lows that we haven't seen since September, it seems like either the market's wrong or the Fed's going to be wrong on this. So, I mean, what's your take on that whole dilemma? Because I think that's a hard thing for investors and traders to figure out at this point.
It sure is, Tom. I mean, you know, if you look at, we've been talking about some element of this now for a year, right? The stagflation term. But if inflation remains high, which we're hearing, right? We're hearing now earnings are kicking off, you know, here in the next, you know, couple of weeks again. We're in that lull now, but we're going to continue to hear this. It's been 3 quarters now of, you know, what's the inflation update going to be? And to your point, Walmart kind of an early indicator here that they're concerned about it. Now, you know, the strong businesses with solid balance sheets are using this as a time to invest and create, you know, systems and create processes that are proofed from inflation, and they're going to set them up for, you know, for long-term success. Walmart's in a great spot to do that, right? They know as well as we do that if there is a recession, that they're probably going to be one of the benefactors of that. So, you know, pushing hard now, but it just doesn't add up, right, guys? I mean, rates are going to stay higher for longer. We see these slowdowns in the economic data, and then we have companies telling us that hey, inflation isn't as under control as you sort of thought. Well, all that really rolls up to a pretty gloomy forward-looking picture where growth is slow. I think GDP decreasing, and ultimately inflation remains high. The Fed's tools, you know, work, but to what degree, right? And I think that's what we just don't know yet, and why they're hedging by saying we have to stay, you know, higher rates for longer. So yeah. I think it all ties together, Tom. The short answer is it all ties together, and I'm very happy to see companies like Walmart with strong balance sheets preparing themselves for the future. So I think from an investor standpoint, you got to be looking for those sort of in between the lines messages, right? Who's going to really come through this cycle? Because those are the companies you want to invest in that have, you know, those stable earnings now and are preparing themselves well for a bit of a downturn.
Yeah, and that's going to, one of those is Meta Platforms. We'll talk about that after the break. But Kev, I wanted to get your take here because some of the components within ISM really shockingly got hammered here. Employment gauge fell 2.7 ticks. New orders crashed 10.4 points.
62.6 to 52.2 on new orders. Prices 65.6 to 59.5. Now, here's the thing for our viewers. Anything over 50 still expansionary. Below 50 is contractionary. So all these numbers, the PMI composite and the ISM, all the services, remember the services were the strong part of the economy. So they're coming down, but they're still above 50. But these are all weaker than we thought and weak. Yeah, and you know, like we said, these are lagging data points. Will that continue to move down? Although oil prices moving back up above $80 a barrel, definitely not a benefit for falling inflation. All right, guys, let's take a quick break here. But when we come back, we're going to talk Meta Platforms, which is upgraded today, now up about 77% so far this year. Fast Market's coming right back.
SPY just started to candle down there, but then just wicked right back up here into the green candle. BBBY looks like it might want to jump above VWAP again. Yeah, eggs gone crazy. Doing good, Julian. Hope you're having a good day. Don't be late next time. Ever.
About this morning during the futures show. A couple price target hikes, one upgrade on this out of Argus to 270.
And Jeffries.
Yeah, yeah. Jeffries raised their price target. They had a buy rating on it already.
They were already they just went from 225 to 250.
Yeah.
Argus went to 270.
But this is all about that narrative that Nick said. This is the year of efficiency.
Right.
And Meta's come out and said that, and they're kind of pulling away from even talking about the metaverse anymore.
No, let's say what this is. This is Mark Zuckerberg actually being an actual CEO and not ignoring the macro, right? That's what he did. He's lowering his expenses. It's probably going to make his revenue numbers and everything look better. And so he's being a real CEO. He's first time in his career he's had to adjust headcount and things like that to the overall market, and the stock's rewarding him, but he was in a free fall. $88 the stock got down to. So the fact that it's back up here is a good sign, but this is really a function of Mark Zuckerberg being a real CEO.
Yeah, Nick, and we've had that substantial rally. It's kind of led the FANG Plus names up along with NVIDIA so far this year, but it seems like, you know, he's doing all the right things at this point, but, you know, some of the growth numbers have started to slow. But he's still making about $10 billion in investments in the metaverse on a yearly basis. I mean, that's not chump change by any means. And, you know, we still haven't had any resolution to the potential banning of TikTok. TikTok gets banned here in the U.S. That's going to be a boon for other social media companies because of all the advertising dollars that might funnel to them, right?
Yeah, you certainly have to think so, and I'm sure a little bit of that has affected the price action here. You know, Facebook's still down year over year, but, you know, to your point, that 77-ish% rally doesn't come on the idea that you know, they're just cutting costs, right? There's a lot more to it. So coupling, I think Kev said it very well, coupling the real executive actions that have been taken at the firm to tighten up, you know, spending and tighten up, you know, where investments are going, along with that prospect of, you know, more users being funneled to Meta's platforms is a good thing. You know, Instagram is still the #1 used platform, you know, by
first time
you know,
sort of the old guys got some funny jokes.
younger than us. You know, and it's fascinating because you go out and you read, and it's every update, you know, every kid, every musician, everybody's on Instagram, right? So, and that Meta owns it, right? So great. They can still fund a lot of futuristic investments with, you know, the usage that they're seeing right now. And, you know, guys, if the recession comes, right, and we see slowdown, and, you know, yes, there's going to be ad spending slowdown, but they're not going to lose customers because of a recession, right? They're not. Think about the business model. You're going to be on Instagram, you're going to be on Facebook, you're going to post pictures of yourself, whatever. Like, it's an interesting model as you really think about it in terms of a slowdown. The revenues could suffer, sure. But similar to what we said about Walmart, I think it's interesting that they're making bets for beyond the cycle, and it just proves that he is an adaptable CEO, I think. And it's a fascinating story, and people aren't going to just leave because there's a slowdown, right? You pull back on restaurants and buying your new car doesn't mean you're on your social media accounts less. So how they monetize that, you know, is going to ebb and flow, but, you know, keeping those platforms engaging and invested in for the future, I think is important. He's clearly done enough to prop up, you know, the stock price, you know, from the street's perspective. Analysts are upgrading him all over the place because of the deep cost cutting measures that they've taken. So, you know, in the moment, certainly it feels like, you know, they're really balancing well the idea of realigning and cutting costs with, you know, continuing to make strategic investments for the future. And I think you have to like to see that.
Yeah, they're starting to integrate a little bit more AI into their platforms also. Video, images, audio, reminiscent of YouTube and Netflix's early years as far as that component of their business. So we talked a little bit about AI too, which helps. But you've got an example trade for us here, Nick, in Meta Platforms. They report earnings at the end of April.
Yeah, I stayed inside of that, guys. Maybe next week we'd be looking at an earnings play, but you can see that very easily if you look at the option chains.
This little 5-minute one. Sort of.
Examples in the April 21st weeklies. If you go 1 week further out, the vol jumps significantly to over 60%. And that's where you get that earnings.
This one's kind of broken down.
Earnings pick up in the vol. So, given the timing, I stayed inside of that. Thinking that there's not a ton of catalysts. The move today is real, right? The upgrades are happening ahead of earnings.
Al's target's 303.
There is some risk on the upside and downside to this trade. But if those upgrades continue or pick up, this trade could be at risk on the upside ahead of earnings. But if you sort of think about where we're at in the cycle, if others pile on and keep the price targets about the same, shouldn't move the stock all that much ahead of their earnings. So I've just gone with a non-directional, kind of standard iron condor here, looking at a 5-point wide call spread and a 5-point wide put spread. So 220, 225 call, and then the 195, 200 put. It's just about a $2 credit, kind of
5 minute
for 205. So I think the example we have here is at 203. And you're setting up pretty close to a 1-to-1 risk to return here. So
you're basically wondering if it's going to break through this low, which
call it. If you take that in 203, I think is the example on the screen. And then your max loss is just the other side of that. So just over 2 and a quarter.
It's about
pretty good, almost 1-to-1 return to risk. The reason that's a bit of a higher credit is because you are inside of that expected move. So pricing in about a $14, $15 move, with that 18-day range, and you're talking basically a 10-point range. So you're expecting the vol in the short term with a trade like this to underperform what it's currently being priced at by just a little bit.
Yeah, some consolidation after the 75% rally needed for this example trade. Let's break it down. Going out to the April monthly cycle, so about 16 days till expiration.
More than doubled.
Selling the 220, 225
call
vertical,
kind of bullish.
and then selling the 200, 195 put vertical, creating that short iron condor, collecting roughly about, we've got 203 on there, it might be closer to 205, but that means you've got about nearly $300 in risk per spread on that. You see the break-evens just below 198 and just above 222 on this one, Kev. You're collecting a decent, credit on this one where you want time decay or theta to work in your favor.
Well, the expected move is about $13 in either direction, so Nick has slid both strikes just a little bit inside that. The trade-off there, a little more risk in terms of movement, but it gives you more premium. Right? If you're right, you make more money. So the 220, remember, how do I know that? The difference between the short call 220 and the short put 200 is about $20. So that's about $10 in either direction. The move is about 13. So sliding those strikes in, being a little more aggressive. I like aggressive, Nick. When in doubt, it gives you a little more premium, right? That's the trade-off on these spreads.
If you want bumpers on the price once it's stay between there,
you're going to collect less credit.
Max profit, I think, will be right in the middle.
That's the trade-off that we have all the time in options. Collecting data, short a little Vega.
Yeah, and maybe some consolidation needed in the stock. RSI on a technical level, getting up near that 70 level, even on the pullback that we've seen today of about 1.8%, but this is definitely a neutral strategy, really short term, avoids that earnings event also that comes on the 26th of April. You do have some assignment risk on those short options into expiration over the next 2.5 weeks. All right, thanks to Nick Theodorakis, Financial Risk Management Director at TD Ameritrade, for joining us, breaking down markets and Meta Platforms. Coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio for a discussion on Constellation Brands, which is down about 5% so far this year, ahead of their earnings tomorrow morning.
Here it is on option strat and iron condor. Basically a neutral type play. Got Iron Butterfly, Iron Condor, Short Straddle, Short Strangle. This is what you're looking for. This is on Rivian. Basically, max profit is anywhere between 1650 and 1260 on this spread, this Iron Condor. That's optionsstrat.com. Options or optionsstrat.com. Just that.com. Yeah, with options you can make money no matter what. You know, no matter what the price does. If it goes up, if it goes down, if it just goes sideways. You can even do it with time. You can have it so it stays flat and then goes down, or stays flat and then goes up, or goes down and then goes flat. It's limitless the amount of different ways you can make money and lose money with options, but depending on your sentiment on what a stock will do, you can basically profit on it. You can profit on it just going up and down a lot, or just not going up and down much. Next week, well, this week we have employment, right? Yeah. So that will not have an effect necessarily till next week, but we'll probably could get a gap from it. Markets closed on Friday, but the futures are open. So tomorrow's initial jobless claims, that could move the market some, and then the U.S. employment report. I feel like this is more of a market mover than this, but could be wrong. But like what they said today, the data was bad for the economy, and that was actually bad for the market. So bad news is maybe bad news again. Once inflation isn't the scare and it's more how bad of a recession we're in, bad news will be bad news. Calls I'm on GME right now. No, I closed all my longs and went short. So closed my long calls and bought puts. I almost kept because I had like leaps, I almost kept and just did cover calls on it, but the premium's so low. It's not even, I'm gonna do it, not even worth it. So just bought some puts. I bought some for April, not a whole lot of time. Kind of stupid. But when GME moves down, sometimes it's pretty consistently, pretty quick. So I think we could see that. Happy money, anything.
Luxury, this high-end consumer, which I think is really smart. And whenever we look at its Mexican style beers, specifically its Modelo brand, when you think about other brands like Corona, even Pacifico, you know, we do see continued growth in Modelo specifically among all the other brands in its portfolios that we're tracking. The only caveat I'll say is that even though demand, I think, has risen by about 22% year over year, mentions are up more than 50% year over year, but this is a slowdown versus previous growth rates. So this is, for us, we're seeing some growth in these
BBBY
high-end brands,
looking
but we're
like
seeing
that
this
inverse
growth
beta a little bit
slow
still.
down. So that's a little bit of cause for concern
It's
as we
fixed,
head
like
into this earnings report. And part of the reason why, even though we are recording some levels of growth in these brands, the slowdown is kind of pulling our score down a bit.
Yeah. Megan, you talk about their portfolio at Constellation Brands. It's pretty balanced, right? They've got something across just about all the categories of liquor, but 3/4 of their revenue and 80% of their profits come from beer.
Enemies.
So this is a company, if you know, they've consistently
Yeah, I mean,
got double-digit
breaking the support
growth
was
out of
that was
the
the
beer
trick I was
sector.
waiting
If
for.
it slips, like I was reading, into the single digits,
So I was
what does
long
that
each
do
one of these
for
times it
Constellation
tested that
Brands? 'Cause
support. I
some
kept
of
buying
your
calls.
doesn't look that
I
great.
didn't break out to the upside, but
Constellation
broke
or
to the
beer
downside
in
today.
general.
And
Unless, of course,
that
it's
also
Budweiser. Where's
is
the
consistent with
Budweiser coming from, Megan?
with the VWAP or the engulfing candle and SPY and this
So
resistance we're at.
that's the
So the market
caveat. So
coming
we
down.
start
GME
off
also.
painting, you know, kind of the
I guess I'm not
positive
hedged
picture for Constellation
because I think
Brands,
they're both
but
coming
then
down.
on the flip side,
But,
we are seeing a slowdown in growth, specifically
yeah.
amid these beer brands.
I've been
And
planning
then
on
when
flipping
you look
from
at
calls to
sentiment,
puts
you know,
if
one
we
of the
broke this
things that
level anyways.
Constellation Brands has talked about is it's had to increase some of its pricing to account for some rising costs on its end, and we're starting to see that impact sentiment levels overall. Those have dropped by about 5 points year over year. So this is something to watch, because previously, whenever we would come and talk to you guys, Constellation Brands
That's good
typically
though.
had
It's
the
just
highest
nice
level
scale
of
out,
sentiment
nice and
versus
easy.
peers, and now it's lost its edge a bit, and a lot of that has to do with the pricing power. And what that's doing is that's impacting overall levels of consumer demand. So you can see on this chart, these are people who are talking about purchasing a product with any of the companies that are charted, and you can see Constellation
Maybe your next
Brands,
sell
that
Ace will
demand
be at
has
30,
slipped overall by about
35.
11% year over year, and that's really driven by that
They're
beer
so cheap.
portfolio that
No,
you talked
it-
about.
the
So
IV
we're
is
just
super
seeing
low on
signs
all-
of some
on everything
losing
on GME.
momentum.
It's
Another
crazy.
thing that's a little bit concerning, especially
50%?
is heading
I mean,
into
this is like
first quarter, you know, this is
getting into value
this
stocks.
is a name that looks a bit seasonal in our data,
So,
so we would expect an uptick as the weather
it's-
looks nice. As you know,
it's
you're
another
sitting
sign to me
outside
that
on
the stock
patio,
is
maybe,
fixed.
You know, you open a Modelo
But it
while
also
you're
does
grilling,
open up opportunity to
and
get
we're
huge
seeing
percent
just
gainers again
less growth
if
and
it's
less
not,
momentum
and
into
we just
that
haven't
first
seen it
quarter.
move.
So a lot of this,
yet.
you know, last quarter, Constellation Brands said, you know, they guided cautiously.
I've been
And
trading
we're
mostly
seeing
these
that maybe this was
Januaries.
rightfully so. So, you know,
Look,
there's a
Ivy's
case
higher on
that
those.
some
Isn't
of
that
this
weird?
could already be priced
seems
in,
weird to me.
but we're not seeing any
Need more
types of
time, Ivy
signs
goes
of
down.
significant surprise. We are seeing signs of just a continued
Like in
tempering
June,
in
it
that
starts to
overall
pick up.
consumer demand.
She paints with words, Tom.
Yeah.
Out of the deck, grilling with a beer.
I know.
It's kind of nice.
I live
words.
in Chicago right now. I need about a dozen beers after this election last night. But Megan, when you look at STZ
might start
and the
trading the
happiness,
Maze.
I saw a little downtick in the latter stages of some of your data there. Is that a concern? Because the stock's down
why
nearly
is that?
5%
That
so
doesn't
far
make any
this year.
sense.
It's kind of been whacked. It got hit on earnings last
More
quarter
time
just
and
due
higher
to their
IV.
guidance. But it's made up
Market
most of
makers
that
pricing in
ground.
something maybe.
Yeah, so, you know, happiness for us, that is a bit of a longer term concern moving forward. But whenever we look at qualitative mentions of what people are saying, a lot of it is related to the price point. And if you were to,
bouncing.
let's say, you know,
It hit literally right at that level, 4,590.
local, you know, lunch spot
Actually
here at
right
Life
where
Below
my
that
line
we
is.
like to look at. And if you go and you're ordering a beer with lunch, a Bud Light's going to cost you $4, a Modelo's going to cost you $8. And a lot of that is weighing on just your, you know, your average consumer who are making these decisions, perhaps like, oh, maybe I'll go with a domestic draft versus something like a Modelo or a Corona. And so I think that this is just a near-term pressure that we'll have to watch. But I think investors probably like the concept that, you know, Constellation Brands is passing along these price increases to consumers. But for us, we're looking for signs that the consumer is feeling stress and reacting to these. And we are seeing signs of this pricing pressure that, you know, sentiment level has dropped a bit and demand is also dropping. And this differs from some of its lower cost peers. So just something to watch moving forward, and partially why our score heading into this earnings, though, we're pretty neutral. So we think that the bar is low, and perhaps rightfully so, that it tracks right in
Not
line with our
BBY
data.
gift cards?
So did you have an earnings score? You said relatively neutral.
Yeah, our earnings score is a 1, a positive 1. So I think that that's about as neutral as we could be. But definitely long term, we'd like to see some resolution in that consumer happiness score for sure.
All right, great stuff, great data as always. Appreciate it, Megan.
Thanks for having me, guys.
All right, that's Megan Brantley, Vice President of Research at Likefolio, breaking down the data for us. Bud Light, Kevin. I saw that on some of her charts, and I was like, are people jamming back into Bud Light?
I do like a good Bud Light, but it's my second choice, not my first.
Yeah, baseball season started. Maybe
baseball season
they're going to be selling more at the ballparks, right?
Exactly. Well, it's that time of year. You know, you should see by definition more barbecues, more good weather, more sporting events, those things. But you know, it's hard to look at a company like this that does so well with so many products and be overly bearish. And the stock has sold off some.
Right.
That being said, I don't know what it's going to do.
Or overly bullish at this point, right?
I don't know where it's going to go. So when I don't have a clear picture, I play for both if I'm going to trade it. So what I did, Tom, here was I kept it real simple. I looked at the expected move. I went to the strikes that line up with the expected move. I did the 1 week double calendar. I did the 2:30 call and the 2:12.
That's perfect. They never get redeemed,
put.
and then you get your
so
money back.
I did the April 6th, April 14th. It looks like it's trading just over a buck. I know I placed it in at
Right
$1.
here, dude.
It's sitting about $1.08 now. But Tom, this is one that collects a fair amount of theta. You're looking for a move towards the strikes, but it does give you some time, but you got 1 day on the short call, right? And the short put. So they expire tomorrow at the end of the day. But Tom, for about $1.05, $1.08, you've got an opportunity to be successful in either direction as it goes towards the strikes.
Yeah, double calendar position here as far as a strategy, 4-leg spread on this, buying the April 14th weekly series here. 2:30 call and 2:12.5 strike put, and then selling the same strikes in the April 6th weeklies that expire at tomorrow's close. We're not open on Friday due to the Good Friday holiday, so you have to take that into consideration. Paying roughly, we've got a $1.05 debit or $1.10 debit up there right now, so that's going to be
about
risk.
$1.08. So yeah, right there.
Yeah, so that's your risk, $110 per spread. Break evens though,
is so
all the
slow
way,
today.
above $240
And
and all the way
yesterday. What was the
below
volume yesterday?
$205 as far as potential break evens on that, depending on what the implied volatility does. But IV differential between what you're buying is about 39% on aggregate in that April 14th weekly series, selling about a 92% aggregate implied volatility in the options that you're selling in the April 6th weekly series. You do have some assignment risk on those short options going into expiration at tomorrow's close, but Kev, this just takes advantage of a move either way, about that 1 standard deviation that the option market's pricing in at this point. But you want it to move, but you don't want it to move 2 or 3 standard deviations, right?
Right. This move, if you look at the extreme moves, it goes towards the strike and then it drops off as you get away from the strike. So remember, the key to a calendar spread is a move towards that strike. Now, you don't have to be exact. Right? It's a little bit, if it goes to 229, you're okay. If it goes to 232, you're okay. You just don't want it to go to 245 or 203, right? You don't want out of range moves on these trades. But they're forgiving. Calendar spreads by definition are relatively forgiving, but it's not a home run trade. But if you're right and you get the movement you're looking for, could be a nice single or double.
Yeah, and you've set up those strikes just outside of that anticipated market maker move that the option market's pricing in, plus or minus about 875 either way. So good look at a double calendar position to not have to pick direction. You just want it to move about what the option market's pricing in going into that earnings result. All right, coming up after the break, Kev, we're going to take a look at FedEx, which has rebounded about 34% so far this year and announced a restructuring plan this morning at their Investor Day. Fast Markets coming right back after this short break.
Yeah, FedEx is solid, man. That is crazy. The pickup there on FedEx. Dividend stock, 67%. Since October? What was this from? Just earnings? Yeah.
It's oatmeal.
I usually try and do a recap video. It's me. And I like to be done by 4, so cut off about 3:15, 3:30, do the recap, have it done by market close. Custom amount is $69. In the last 5 minutes recap while streaming. Yeah. I know I've actually done that. I've tried that before. I don't know. And then I haven't really figured out a good way to clip. I haven't spent the time to go about the best way to do that. Could though. I know that would be nice for you guys watching the stream, I guess. And yeah, well then you guys wouldn't have any reason to watch the video. You're just watching the stream. I don't think the quality is probably as good either. I don't know. Yeah, I use OBS. I'll Streamlabs OBS. Or maybe it's just Streamlabs. Whoa, something failed. Ooh. My BBBY call just failed. That's hilarious. No, that's a good thought. I got a fill on that. I got the half cents or the $50 April calls for 5 cents. Yes, it is. Audio looks fine for me. What's cutting out? Music? My voice? All of it?
But it's had a pretty good run this year so far.
It has. It's actually been moving to the upside significantly year to date. But yes, at this investor conference, they did announce that they're going to be consolidating some of their organizations into one big organization here. They're going to be consolidating FedEx Express, FedEx Ground, FedEx Services, and and other FedEx operating companies into Federal Express Corporation. The only one that still sounds like it's going to be standalone will be FedEx Freight here. And the reason why they're doing this is to be able to obviously reduce costs. They're finding some areas of synergy here, and they are projecting that they could find around $4 billion of permanent cost reductions by fiscal year 2025. This is also going to be complementing their Network 2.0 program as well, which should also drive additional savings. They're looking at about $2 billion worth of savings by fiscal year 2027 here. So this restructuring, obviously, we'll see a little bit of a consolidation when it comes to management structure as well. So there's several different moves that are going to be going on here. But they also announced here, Tom and Kev, they also announced a 10% increase in their dividend. The board did approve that, makes it a little bit more competitive to UPS. And now the question is going to be, one, we're looking at a chart right now. It's hitting a critical area of resistance at around that $235 level. Can it push through that? And then two, if we do see an economic slowdown here in the United States or globally, what is the impact going to be on these shipping companies like FedEx or UPS? We do consider FedEx to be an industrial company. company, and industrials for the most part have done fairly well this year as well. And we do expect that they will probably continue to do
Wanro,
well
some more
as we
TA.
start seeing some of this fiscal
Not
spending
sure
starting
what this
to trickle down into
means.
some of these companies.
I just see a,
Let's just see if it's going to also
a
benefit
line
FedEx.
here.
But once
For
again,
some
the
reason, it makes
technical
this
setup
go
is
up.
a little bit difficult, but hearing these
like it.
adjustments to their organizational structure
That's BBY,
is
by the way.
something that is bringing a lot of confidence to investors here as of late, and we are seeing it reflected in the stock today.
Kevin, this restructuring was a long time coming.
Everything's messed up. Oh, it's me. I knew, well, not new low, but testing the lows here.
Delivery
405.
E-commerce delivery.
That's probably going to flush through here.
And combining these two business plans and saving billions of dollars, lowering their headcount by 25,000 over. By the end of May, it actually says, Tom. So these are all things, much like we just talked about with Meta. You know, these are CEOs doing what they need to do to adjust to the business climate, right? Their expenses are going up. Overall delivery is starting to plateau slightly as people
New low on the day for SPY,
405.89. Brick and mortar. So this was
next level down here is 404.34.
Kevin, this was a much needed consolidation, correct?
It is, definitely. I think one of the big issues that is a little bit difficult when it comes to the stock, the reason why the expenses are going up because it does not have scale. They were literally
be a little bigger day.
Or even fly
there's a bounce
to one location to another, but they did not have freight. So in order for you to be able to...
I don't know what the blue line... blue line looks like it's supposed to be there.
A significant amount of volume to be able to offset that cost, or you need to adjust your structure, and that's what they are doing right now. As you said, they are also eliminating 25,000 employees. I think the question is going to be if we do see a ramp
it's just like
up,
drawing a line on the supports,
and then we see this ramp up in the marketplace when it comes to the consumer. How are they
starting
going
to
to be able to
round
scale back up? Because it is nice to be able to see these consolidations.
There is an RSI divergence there on the hourly.
But can you also meet the demand once demand starts to rise again? And Kev, I think that's going to be the challenge, not only for FedEx, but for UPS here in the near future.
All right, great stuff. As always, appreciate it, Kevin. That's Kevin Green, senior markets correspondent here on the network, breaking down the FedEx story for us. But now,
Give me holding makes me want to rebuy calls.
If you look at the rally that the stocks had,
it's been
pretty significant so far, about 32.5%.
What's it holding though? It's holding down 3.3%.
$230, $35 price.
It's holding down.
It's kind of created a little bit of resistance, but I would expect after this announcement and by the company, that we're probably going to see some analyst adjustments to maybe some price targets over the next couple days.
Sure, this will be applauded by the street as they get all the information on it.
I mean,
this stock has had a pretty nice recovery.
4 hour looks even more bearish than the daily, but really just that support breaking.
Changing the company. This is though, right? They had an investor day.
That support breaking is not good for me.
Here, so,
and the SPY is also weak.
The stock
so
is really reacting today, Tom. But like I said,
like a
these are
1940
CEOs doing what they need to do to make their
first
businesses
stop on the train.
Right, and implied volatility at or
maybe
near
the
52-week lows in here. So I looked at a strategy that sets up
even see
to take advantage of lower
or even here if the
volatility
market really starts
to
pick up speed next week.
A lot of people when they want to do a bullish type of trade, use an option market, you can buy a straight call. But why not offset some of the costs because the stock's already had a pretty good run.
Bouncing on that level again.
Vertical. For a cheaper price. They don't have earnings until probably June.
Larry Chang did buy at 2280, poor guy.
Because they just reported about a month ago. So I looked at a call vertical here, Kev, where I'm going to go out to the main.
I mean, I was buying too.
Series,
I was buying calls every time we hit that 22 something level.
At the money call, which is currently 230. Then sell the 250 strike call against it. So
maybe he's sold now though. He's probably not trading though. He's investing. So
some of the costs.
Little here, a little more in a couple more months.
Offsetting some of the costs and capping your gains because you're selling that 250 strike call against it. You're paying roughly about. We've got a $7 debit up here. It's actually a little bit lower because the market's weakened a little bit, more closer to $6.80. But if you pay a $7 debit, there's your risk, $700. This spread, Kevin, can expand to $20 if it gets back up to $250. Your thoughts here on buying a directional vertical as opposed to maybe buying the shares after this run up or just buying a straight call?
Yeah, right around this area, Tom, it's a triple if you get a move to 250. And this stock has been to 248 before. Right. So with these moves, with an improving economy, this is just taking all this good news, putting out a bullish bet. It's about 34 deltas.
Right, and that break even, if you're buying, paying about $7.
Look, I got 60 of those 50-cent calls.
$37, so just about $7 above the current share price here. In
some exposure
FedEx on this one.
If
with
that
this,
does start to
you've
round
got a
out.
month and a half in it, so duration-wise, you would look to if maybe possibly manage this. If the stock does jump up to 240, this thing expands, the market's opens, liquidity is provided. Buying verticals allows you a little bit more flexibility as far as management of those positions, where you can possibly adjust or close a portion of your spread on those type. But good look at low volatility environment, the type of directional play there in FedEx based on that news. All right, that's going to do it for Kevin and I today here on Fast Market. Stick around though, right here.
We don't know how much DFV holds at this point.
Coming up.
But yeah, he's not a controller, I guess, huh? Larry Chang. Am I seeing gray people in chat? It's me and Jay Scott are both gray. Ace had a free membership, guys. If you can scroll up and click on it, click allow gifting. Next buy wants to hold this support, so probably bounce back, maybe to VWAP. We'll see. It's almost 1 o'clock. Let's see, where did Europe close? Right here. See if he went and ghosted us. I mean, been a great trade for him. I would imagine he would diversify. Smart investor, probably not going to leave his portfolio ballooned in one stock like that. He did for a while, during the hearing and all that, but yeah, I don't imagine he stays that invested in one stock. It's just the cursed with us. All we have is these cursed gray people and owls looking at us. Tesla's hard to read right now. I'm bearish on it just because I'm bearish on the market. But yeah, I mean, it's just kind of trading this range for now. Looks like short term it's still going to come down. See where it finds support, 178, 166, somewhere in here, but yeah, it's not a great read. I don't like it to the short or the long side, really. Just chopping around. Plus Tesla scares you. I wouldn't get him today if you're gonna get him. Down 3.5%. I would probably wait till tomorrow if you want them before the data on Friday. Because that, or if you don't want to hold over that data, you have to wait till Monday. But if you're bearish on that data, then Tesla puts tomorrow would probably be the best.
Put some praise on my
GME moving up a little bit here. You guys have calls, you gonna sell them on the retest of this support we just broke? I think that is probably coming. don't know. I don't like trading GME options anymore though. I just get screwed by the market maker all the time. Doing a giveaway? You're really looking into it? Isn't that something I should be doing? Are you using some company to do it? Film this morning took a pretty good loss. Yeah, I did too. I was down like 15% on mine, probably on average. Which is weird because I literally was buying most all of them right on the dips. Every dip I'd buy like one or two. The last, what, like 2 weeks? Like buy, 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 buy. I'm done with shares on GME. I'm options only now. This whole till worthless. Yeah, because that low IV, I want to just own those contracts. Yeah, that's true. Giveaways do drive participation. Yeah, the IV is wild. Actually, I wanted to look at the just the historical price on some of these options. So the Januaries have probably been here a while. That's the thing, the Januaries are, the IV is higher still, which is so weird. So these leaps, 22.5, went from $3 to $7. They didn't even triple, but given they are leaps. Then look how expensive this was before. 8.22. These were $22. Now they're $4. Compare that to the stock price. Is it that dramatic? Pretty dramatic. Yeah, May is what I was looking at too. That looks like the lowest IV. Unless you're getting shorter term stuff for whatever reason. After May picks up. Oh, maybe because that's where I don't have any weeklies after May. It's still just monthlies, June, July. I'm not sure, but these weeklies are crazy. 67% on a 1 day. That's insane for GME. 54% for next week. Just looking at the money's 59%. See, it starts to go up. It's weird. 62%. I think they're expecting earnings in May. Just had earnings though. Wait. Yeah, they're expecting earnings May 31st. I think the earnings from I think the gap in earnings from this one to next one is like the shortest. But yeah, look, see this chart? Remember looking at this before the earnings? I was like, market maker's not pricing a very big move, so if there's gonna be a big move, do well in the options. They didn't even do that good though. It was crazy. So next earnings are not pricing a big move either, even smaller. However, that's probably going to increase coming into earnings. So could get a little earnings run up on the premium into May. It's estimating it May 31st. So could be in June, I suppose. That's probably why the IB is up a little bit. But what's weird is June. Yeah, it continues to increase into May. Then look, June's even still expensive. But yeah, end of May. Wait, May 23? Oh, wait, what? There's not a contract after? Oh, they just have monthlies. They don't have the last week in May yet. Wait, June. They have May 5th, May 12th, and the monthlies. They don't have May 26th yet. So if you're getting the May monthlies, that's probably not going to cover earnings. Buy bounce in there. The BBBY is now delisted. Onto the OTC. Yellowbick Road we go. Moving up here, VWAP, potential for resistance. GME might retest that breakout level. Googling it, YouTube doesn't make it look easy. 2173 hours to go. What did I say? I think I said VWAP 2159, yeah. OCTO? Huh. I like Reddit. I have no problem with Reddit. We'll pop there on GME.
Exports to China. Now, China's complaint raised the prospects of these greater tensions between the country as well as others in this what has been deemed as this technology Cold War. On Tuesday, China's Commerce Ministry did call on Japan to change its wrong practice after the country last week said it
there would have been another platform.
23 kinds of semiconductor manufacturing equipment. Now, Japan's announcements was a
if
step
you had a
towards
YouTube,
aligning itself more closely with the U.S.
Lots of forums.
But Japan's ministry did say in a statement that China will take decisive measures to safeguard its rights
groups,
and interests.
Facebook, there's lots of ways to communicate with people on the internet.
Cooperation between the two countries. So just the latest battle and what we're seeing and expecting to be some ongoing restrictions between China and the U.S. I see Japan as sort of the middleman here, unfortunately, but still an important role in the global economy when looking at a country as powerful as Japan. We have seen the U.S. implement a string of measures to prevent the most advanced chips from being produced in China on concerns they would be used for military purposes, and the U.S. has encouraged its allies across really the world to do the same. But NVIDIA, like I said, lower today. We're seeing broad weakness in the semiconductor stocks today, still up 145% though from its 52-week low.
Yeah, and while that's probably the primary story influencing the sector, one other story that stuck out to me that I found interesting, I think it's a natural headline to now see, is we know so much of the hype around NVIDIA this year has been due to its key role in artificial intelligence technology and the chips that are used in those different research areas. Alphabet has taken aim at NVIDIA and is saying that their own chips are even better, they're greener, and we actually have, of course, one player dominating a marketplace. It's only natural that some of these other big competitors are going to try to fight their way in. So that's something to monitor potentially going forward as there's other big names trying to make chips here for that particular marketplace. Going to say downvote for NVIDIA though. Last one on the list though, and I heard them talking a little bit about this on Fast Market as well. This is FedEx. quietly a really strong performer here to start the year.
And FedEx, if you can recall, at the end of 2022 was one of the weaker names, really, and we were sort of surprised given the fact that this name is seen as a barometer for the shipping industry as well as the overall health of the economy, and they have taken so many steps now in a positive direction. They did just announce at their Drive Investor event they will be consolidating their operating companies into one organization.
You don't find Reddit.
This
Reddit
transition
finds
is
you.
expected to be implemented by
Come on,
June
Ace.
of 2024,
Everyone knows that.
and it will ultimately bring FedEx Express, FedEx Ground,
Bye,
FedEx
little
Services,
Wick,
and
but
as well as other operating
seems like it'll
companies
probably bounce.
into
I don't
the
know.
Federal
Maybe
Express
not.
Corporation, becoming a single company operating now in this unified, fully integrated air-ground network under that same
HPCO
FedEx
up
brand.
6%.
Now, FedEx Freight will continue to provide freight transportation services as a standalone company under this new corporation. They did name a new president and CEO to head this newly formed entity, and to aid the transition, effective now on April 16th, John Smith will become president and CEO of the U.S. and Canada ground operations at FedEx Express. Richard Smith will serve as president now and CEO of their airline and international at FedEx Express. And they did say that now, leading up to this transition in 2024, there will be no changes to the way they report their financial structure. So I think that's
they're doing like a
important
spin-off?
because this isn't necessarily going to be a drastic, immediate change. We have about a year and a half until this is fully implemented, but just being seen as another way that FedEx is reorganizing per se. Shares are now up about 32% this year, to speak to that outperformance that you mentioned.
Yeah, and I think it's important that you mentioned that it was sort of a sluggish name, not only in 2022, but really in 2021 as well. This has been a name that has really lagged its peer of UPS, which is a little bit more domestically focused. FedEx has much more of an international role that it plays, but I think it's a really impressive move, and I think it's impressive today that it's able to kind of shrug off the market weakness and build on some of its recent success here, even with this news headline. That, to be fair, is positive right now, but you're only reorganizing things and trying to save costs because you're trying to do that. Like you don't focus on that when things are going really, really, really well. So that's something to think about. But I'm going to say upvote for FedEx. We don't talk about this name a lot. We'll see if the charts provide any more clarity when we get a chance to talk to Rick.
Yeah, and a good point. And we're only seeing shares up about 1%, which is outperforming the overall market, but not necessarily seeing some huge upside to this news today. But we'll be moving forward with our 2 upvotes, those being CrowdStrike as well as FedEx. We'll dive into the charts, look at some example trades coming up next.
Oh, rippy rip on SPY. Caribbean's moving up to BWAP. Oh, SPY just wicked there. I'm moving up here.
Key points to watch here, but another thing to be potentially concerned about here is the RSI, our measure of momentum, and that is going below its midline there that demarcates bullish momentum from bearish momentum. We're switching over to the bullish side of things. When you couple that with a breakdown below these support levels that I mentioned before, that's more of a bearish sign here. Crossing over the 50 line is a bearish sign. Crossing over that bullish to bearish indicator as we're breaking down through support is not a good thing for the bulls here. But let's zoom in a little bit and look at our support and resistance a little closer. So we can see here now that this support area near about the 125 mark, just below that we've got our orange 63-day EMA. So that could be a point to watch as well. So when you have two support areas that are lining up on top of each other, it's kind of doubly important. There's extra weight that's added to it. More sets of eyes basing trading decisions on that price level. If we do break through below that, we've got our old lows right about here that roughly line up with our volume profile point of control right around the 118 level. To the upside, I mentioned before the yellow 21-day EMA, that now becomes a resistance point near the 130 level. So that will be a key point to get beyond here. And then we've got our 137 level, once again, that red dashed line.
So 130, 137 here to the upside, Rick. And also I mentioned that the average price target is right now around 155 a share. So despite the fact that we are seeing some technical indicators pointing more bearish today, there is the idea of optimism, at least over the next 12 months. So when trading this name now, Alex, I know that we're seeing shares down today pretty significantly, almost 7% now on the session. But what are you thinking in terms of an historical trade, leaning into some of this optimism from the analyst community? I mean, still, we got some price target raises today. It wasn't all doom and gloom.
Yeah, and Rick had highlighted that 125 level being somewhat of a critical level of support. Say you're a buyer into that idea and thinking that this selling might be overdone, might have buyers come in at that level. I looked at a trade example that would benefit from this being sort of the low point in this sell-off. And so I looked at selling a put vertical below the market. It's a neutral bullish strategy. And giving it just a little bit of cushion below that support level, the 124, 121 put vertical in April. So this is a pretty short-term trade. It's 2 weeks from Friday, and it's looking at basically this is to stay above 124. So if it holds that support at 125, these options expire worthless. You would simply keep that credit, which in this case is $1. $3 wide spread. That is 1/3 the width of the strikes. It'd be a 2-to-1 risk-reward ratio, with a total risk of $200 if these ones were fully in the money, which would be, of course, below 121. The break even in this case would be 123. So support 125, max profit above 124, break even at 123. But you can see the risk profile does a good job of illustrating kind of how this one performs in different price levels. If these options are entirely out of the money at expiration, you'd be in that max profitability zone, which is simply keeping the credit. It then starts performing penny for penny, theoretically, between those strikes. And then, of course, all the
GME
options are in the money. Assignment and exercise goes through. You'd anticipate a $200 loss, not accounting for the transaction fees, as that's simply the width of the strikes, the net of that $1 credit received.
Yeah, now to switch gears here and look at a more positive name, although I say that very hesitantly because we're seeing FedEx shares start to slip here intraday. But seeing, I mean, optimism, no doubt, on this consolidation plan. I was actually reading some street remarks, and they said this is sort of following in UPS's footsteps. And Rick, FedEx has somewhat lagged UPS, but still seeing some resiliency this year after they've taken so many different steps now to be more efficient, to operate more in a way where they're able to generate more profits. So tell us what you're thinking here in terms of the technicals.
Well, I'm not going to stop ordering stuff online or anything like that, so I think they'll get my business for a bit still. But kind of a mixed picture today here, because on one hand, we broke above the 228 level. That's this light green dashed line here. That represented an old high that we saw from all the way back there in August. And we saw a bit of a breakout there, but it's fading as the day is going on here. Kind of we saw a spike upward, and then it's come back down pretty noticeably here. So looking at the price action, I started with a upward trend line going across the lows here, right around the 141, 142 level. We're up about 62% since that point here. So it's been a nice appreciation in the share prices here. And we drew this trend line going across the lows.
I remembered.
And then I was looking at it. It looked like a channel here. So I just simply duplicated it, extrapolated across the highs. This can be a useful way to gauge where you might find some future resistance and possible levels to watch. I did it again a third time here. Going across these highs here, we can see that it roughly matches up with these highs and also where price opened up today. So there can be some useful things you can do with duplicating these trend lines and extrapolating them to other areas. Is it going to work every time? I'm not going to say that, but it can provide some clues for where you might start to look for potential resistance, and it did hold up in this case today. So looking more closely at our momentum here, our RSI did not do what the bulls wanted it to do. It did not cross into that overbought area, which would be a sign of strength if we were to get above that 70 mark here. So the fact that it's prices fading today and we also didn't crack into that threshold is another potential warning sign for this stock here, given that we've also seen rather extended run here. We've saw quite a nice move up on earnings right there. So it wouldn't be crazy to see a little bit of a consolidation or some pullback on the shares at this time. So zooming in a little more closely to look at our support and resistance here, we can see once again that I mentioned the 228 level to the downside. That's the mark to hold heading into the close today. If that does break down, we've got our trend line right around the 220 level, and then our 21-day exponential moving average right around 218. That's that yellow line there. To the upside, 238.
By rejecting that 50 moving average.
Where price was topping out back in the past. So the short-term levels to watch, 228 to the downside, 238 to the upside.
Yeah, and Rick, I like that you highlighted that 228 level to sort of just hang out here into the close, because if things did continue to further break down, we could see, right now trading
Thankfully,
below
I won't be streaming.
Still seeing some
I won't have to endure the pain and shame of being wrong about GME's end-of-day price.
Holding now intra-session, but we will leave it there. Appreciate all of your technical insight as always, Rick Ducat, our chart master. And Alex, when trading FedEx, I do think that Rick highlighted some overwhelmingly bullish technical activity, at least as of late. Shares are only down about 8% from their 52-week high, which is something we really can't say for a lot of these other names, now up 61% from their low. So leaning into that, leaning into some of the optimism we're seeing today, outperforming what is it, pretty much a red day across the board. What are you thinking for an example trade?
Yeah, I brought up a strategy for this one that looks for a continuation to the upside, but maybe not a ginormous continuation. So I move higher, but maybe only slightly, given its recent outperformance and its rally off of its low. It's starting to get back into some of these areas. It just had a lot of trading activity over the last couple of years, particularly around the 235 to 240 range, of which Rick kind of highlighted with his 238 resistance point. So I looked at something that I'm referring to as a skewed call butterfly. Essentially, I just looked at a butterfly, but I just made one side slightly wider than the other in order to change the risk-reward parameters slightly here. In this particular case, what we're looking at is the April 21st, 227.5, 235, 240 call butterfly. If we do it for a 225 debit, the break-even would be 229.75.
BBBY is not trying to break out.
And this one is structured so that there would not be any upside risk theoretically if this was entirely in the money. But if we pull up the risk profile, I think it'll do the best in terms of illustrating how this one actually performs. With butterflies, you do want to move towards that short strike. So in this case, you can see the apex of the profitability, Jenny, is right at that 235 mark. So one that benefits from an upside move, but really just wants an upside move to 235.
Yeah, I think that's really well put, and I think also considering some of this strength we're seeing outside of even today, this name has been a consistent outperformer on the year, but also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are looking at all things Meta platforms, seeing some bullish analyst activity today, despite the fact that shares are lower.
Many option traders tend to focus on price and direction, but implied volatility.
BY doesn't follow their stocks. Yeah, I like that about it. One of its charming factors. In fact, I think it might even have a little inverse beta. If you look at the data on it, it's not inverse, but I think we've seen it inverse. Even on $1? What you should be praying for is that you don't get greedy when it's ripping and not take the gain or break even or the small loss that you might have to make the decision on. Because that you can change. It going up to $1, you can't do anything about that. $0.96. If you really just want to break even, you should just put a limit order right now and do good until canceled. It'll sit there for 60 days. Don't even have to look at it. GME, BY, AMC all still move together. Not intraday, just when there's volatility. That's the volatility swaps or whatever they're in. Even Carvana we saw move.
All things Johnson & Johnson, which I would say is arguably the story of the day. It was the first headline I saw, at least this morning, on the fact that they announced their subsidiary, LTL Management, has refiled for this Chapter 11 bankruptcy. So tell us more about that.
Definitely, and it's actually moving up all of these healthcare stocks as well, which is one of the leaders in the session here today. So Johnson & Johnson, as you said, they announced that their subsidiary LTL Management has refiled for voluntary Chapter 11 bankruptcy, and they're also trying to be able to contribute up to $8.9 billion to be paid out for the over the next 25 years to those that have been impacted by the talc powder situation that they've been trying to resolve here for years now. And that's actually an increase from $6.9 billion, but it actually is lower than the street's expectations. The street was looking for Johnson & Johnson basically having to pay out about $10 billion to settle these claims, and it's over 60,000 claims at this point in time here. Now, Wells Fargo is looking and is pretty optimistic when it comes to the price target for the stock. They still have their overweight rating, and they also have a price target of $195, but there is a 50-50 chance that it will actually pass or go through. And Jenny, here's the reason why. The judge throughout this whole situation, the litigants in this were really a little bit upset that Johnson & Johnson basically tried to spin off a separate company and basically have it go to bankruptcy to be able to protect its own assets. And the judge that was in this case was really not a fan of this. So it could be a 50-50 shot that it does go through, but it would set an interesting precedent that could actually be mirrored by others, not only within the healthcare industry, but just as a whole, that are looking for ways to be able to mitigate risk and try to pay out as little as possible to claims that their products or service may have harmed them, in a bad way at this point in time. So it's going to be a very interesting ruling that will have an impact on corporate governance moving forward.
Yeah, Kevin, this is so wild to me because we've talked about this litigation, this settlement for quite some time now, as it's not really news, but developments in this have made it so fascinating. And the last time I talked about this several months ago, it was that judge that was hesitant to approve the fact that they were basically going to completely offset this debt, like you just said. And so there is the thinking that this will not go through. And I actually saw that similar note from Wells saying they see a 50-50 chance. So you mentioned, I think, a very key term, mitigating your risk here. I mean, I guess, what is the risk if this this doesn't go through, if it's the coin flip and we see that they're not able to completely offshore, just, you know, rid of all of this massive amounts of debt they're willing to pay in regards to this talc settlement.
Yep, they'll have to pay a little bit more until they find an agreement, unfortunately, here. Once again, I think it's the manner that they went through this whole litigation that left a sour taste in a lot of people's mouths. And so they're going to have to be able to try to provide a settlement that the claimants are going to be satisfied with at the end of the day here, Jenny. But once again, we have to just kind of go back to how this could potentially change corporate litigation moving forward here, because a lot of companies could try to front run a scenario where they may identify an issue internally and then they spin off that particular issue and then or that business, and then if something does come down the pipeline later, they could just claim that it's this subsidiary and not the overall organization that could be at risk. I think that does have a little bit of a moral hazard situation that could be built into it. So this will be unprecedented, and we could also see the settlement and potentially a little bit of pushback from either parties at this point in time if there's not an agreement that's going to be made.
Yeah, I guess in the near term, at least it does ease some uncertainty fears because we finally got a development. It's been quite some time since we've got an update on this case. So I guess I can appreciate at least the near-term case for some bullishness. I mean, Johnson & Johnson
dollar from here is what, 300%?
6 consecutive trading sessions. So outperforming some of the overall weakness we've seen, a really interesting name. And like you said, propelling a lot of these other healthcare-related stocks also higher. But we will leave it there. Appreciate all the insight on a very interesting story. Who would have thought that Johnson & Johnson would be the story of the day, Kevin? We'll leave it there. Now I'd like to bring back in Alex to discuss our FOMO name of the day, and that is Meta. We have talked Meta so much this year, I'm beginning to think it's like our new Tesla. But Meta today, not seeing a move higher. It feels actually abnormal to say that we're talking Meta on a day when it's down almost 2%. But still, the analyst community still loves this name.
Yeah, and like Johnson & Johnson, it just simply changed its name when it found itself in some scrutiny. But, you know, jokes aside, you mentioned this is one that has been a darling for many as it's made its shift to efficiency away from investment in growth. But that's not enough today, as you just kind of see the overall market really weighing on some of these mega cap tech firms, of which, although, you know, Meta's come down a ton from its all-time high, at a $550 billion market cap, I think it's safe to still call this one a mega cap.
Definitely, and I would say that this analyst note, actually, I can maybe understand why we're not seeing necessarily a huge reaction to it, because when you pick it apart, it's a little bit, I would say, in reaction to news that was that of 2 weeks ago. So Argus did upgrade shares to buy from hold with a $270 price target, which does imply, I mean, about $69 of upside from here, or excuse me, $59 of upside, but they said the company's deep cost cuts should boost its profitability even in an uncertain macro environment. They also highlighted the slowdown in digital advertising and the impact of Apple's ad tracking policy and how that weighs on a name like Meta. They did add that 2 of Meta's competitors are currently experiencing problems that could slow their growth. One being TikTok, which is facing that potential ban in the U.S., as well as what they said was sustained hostility of the U.S. government. And Twitter is, in their opinion, not shaping up to be as much of a competitor to Meta. So those are both, you know, obviously tailwinds for this name. They did raise their 2023 GAAP earnings view to $8.21 a share from $7.53, as well as their 2024 forecast to $9.43 a share from $8.06. They do continue to praise Meta on the wake of the latest job cuts, as we did see now what has been some of the deepest cuts in tech. They are in the process of laying off 2 sizable rounds of layoffs, one being 10,000 employees, one being 11,000. Meta has been one that they increased their hiring by almost 90% over the last 3 years. So I would say this does feel like a rightful reduction and just maybe normalization. But I also think it's important to keep in mind when we say things like the year of efficiency, which I must have been saying, I mean, I must have said this like 6 times already today, Alex, but it does also impact, there's a trickle-down effect, because that's still, what, 21,000 people out of jobs? That still is significant. It's almost like we undermine that because Meta stock has been so strong, but it is important to keep in mind these are still people and their jobs are being affected. This analyst, though, sees this as a great way for them to become more lean. They're operating more efficiently, obviously. So the street likes this, but it's important to keep in mind that, you know, the outlook isn't necessarily perfectly rosy for a name like Meta, which, like you said, it's still down about, you know, 8% from its 52-week high. 12-month chart, though, doesn't look as positive.
It's a lot lower than 8% from its all-time high, though. This stock was $385 essentially not that long ago. So I know it went down to below 90, and it's had a really, really impressive attempt at a recovery here. But let's not shrug off the fact that this thing, was basically cut down to 20% of what it once was.
Wish is going to come back
in
up.
pretty short order. But I also saw Jefferies likes it as well, moving their price target to 250 from 225. AI investment sneaking into Meta now as well. A lot of conversation around the efficiency stuff here, Jenny. So the street is picking up on what Meta is kind of throwing out there, but it's got a long, long ways to go still. Impressed with where it's gone so far in a really, really short amount of time.
I also think, not to be so pessimistic on Meta today, but I also think that there's a lot of optimism priced into the fact that TikTok will go away or be under new management. I do not see that happening, at least not in the near term, because I think TikTok is too powerful. I know that there's controversy with, its leadership being under ByteDance, which is a Chinese company, but I think TikTok is powerful. If I were to guess, TikTok's here to stay. So I think there's a little bit too much enthusiasm from people that don't fully understand social media, frankly.
Yeah, I guess my thought on that is just because you're potentially on TikTok, does that mean you have a mass exodus from Instagram? Are you never clicking on that app? I mean, I still feel like you kind of got your rotation. You click on one, you click on the other. Maybe one you like a little bit better than the other. But from a trading standpoint, I'm just going to lean into the analyst viewpoints here, build on some of the strength. I know it's down a little bit today, but in the grand scheme of the last few months, this is a pretty drop in the bucket type of a move, only down $3 after the stock basically went from 90 to 210. Looking at buying a call calendar above the market, this is the first time we're going to have a June option within a traded strategy here. So we're really just flying through time already in 2023. But May, June call calendar, the 235. If you looked back over the last year or two, you're going to see that there was a kind of a good attempt at getting back towards 235 after that massive gap down in the selling post some of the earnings of last year. If it's able to get back to those levels, so that'll be the peak of this particular profitability graph. This one has a 250 debit, so that means $250 in risk, not accounting for transaction fees. But because it's a longer term trade, it's May to June, it doesn't need to get perfectly to 235. You'd want sort of a slow grind towards that, and the likelihood that this would expand and the difference between those options would increase, which is beneficial for the trader, is higher the closer that we are to that May expiration and the closer that we are to that 235 strike price. But the nice thing about this, Jenny, is this is one way to look at it. It's super easy to customize this particular strategy, and there's tons of strikes, tons of expirations available in a stock like Meta.
And I was actually saying the 12-month chart looks a lot different than the year-to-date chart, but you're right. The max time frame chart tells more of a negative picture in this name, despite the fact that it has been a pretty consistent outperformer on the year and a name that has been shocking, I think, to many that have followed Meta for the last several years. But we will leave it there for our FOMO segment. Now, coming up next, we will talk another name that can often invoke the feeling of FOMO, maybe perhaps in a different way. That is Bed Bath & Beyond. Shares are lower today, now trading at around 33 cents, but perhaps getting a lift from some consignment store interest. We'll discuss more with Caroline Woods coming up next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah, I'm going to take off.
Now, you downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
I'm Nicole Petalides, live on the floor of the New York Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network.
Oh, well, the mighty have fallen. Bed Bath & Beyond, a shell of its former self, at least in terms of the meme stock days. Jenny, we're now talking about a stock that if it goes down 2 cents, it's a 6% move nearly. Really incredible stuff. $33 stock.
I know I had to check the price like 3 times, make sure I was seeing it correctly. Oh, how the mighty have fallen is a great way to put it. But here to tell us more on why we could be seeing shares even lower today, I'd like to welcome in Caroline Wood, senior markets correspondent for the network. So Caroline, I read this vendor consignment agreement story. I don't even really understand what that means, but it's not being seen as a positive, clearly.
Hey, Jenny. Well, yes, let's break it down what this vendor consignment agreement actually is. It obviously isn't impressing investors right now. As Alex said, shares are off about 5.5%. But yes, this is a penny stock trading at 33 cents a share. But this is essentially a merchandise lifeline that's really aimed at getting product back on Bed Bath & Beyond's shelves. So that way, if customers come in to shop, they have something to buy. And this comes after its vendors cut some of their limits. They tightened their credit limits. They started requiring prepayments because they were worried about not getting paid. So this helps get those products back on the shelves. So it's a $120 million merchandise lifeline, or it's a vendor consignment program with an investment manager that basically the investment manager will purchase that $120 million of merchandise from its suppliers on a revolving basis at any given time, usually the most popular products that people actually do want to buy at Bed Bath & Beyond. So that way, it has something for customers to buy on its shelves. The CEO said that this capital light solution can allow them to strengthen merchandise availability and better fulfill demand, adding, "We are doing what we must to sustain our business immediately and unlock our true value over the long term for all stakeholders." But there's not a lot of value for stakeholders right now. As we said, shares off about 5.5%. This is a company that's working relentlessly to avoid bankruptcy protection. Offered some share purchase programs. They basically said if the latest one doesn't work, they will have to declare bankruptcy. And investor sentiment right now doesn't seem very positive, to say the least.
You know, Caroline, this was clearly a retail favorite when it was the meme stock, and it's moving, you know, to the upside and big moves, and it's volatile. But is there even much chatter about this anymore? Is it kind of gone in its own way? I mean, at 33 cents, I can't imagine there's a ton of chatter on the trading floors about Bed Bath & Beyond.
Not just a retail favorite during the meme stock craze. I used to love those Bed Bath & Beyond coupons for 20% off. I used to spend lots of time there until they all started closing down around me. But yes, you know, it's actually interesting because I was looking. Obviously, a lot of analysts have jumped ship. It's a penny stock. Penny stocks don't usually get that much attention from analysts on Wall Street. But according to Refinitiv, there are still 9 analysts that cover this company. So not nearly as many as a few years ago, but still pretty impressive given what it's valued at right now. And actually, 2 of those 9 analysts still have a hold rating on shares of the company. Jefferies is one of those. Actually just cut its price target yesterday to 50 cents a share from about $3, I believe, was its previous price target. JP Morgan is the other hold with no price target. The other 7, of course, have sell ratings. When you look at the median, it's $1.25. So very low, but would actually be a pretty impressive run higher if these shares are able to get to that point. I mean, I do think it is important to note, though, this is a company that still had $1.2 billion in sales in the fourth quarter. Now, when you compare that to the fourth quarter of the previous year, it's pretty abysmal because sales were about $2 billion in the previous year, so almost cut in half. Comstore sales fell between 40 to 50% in the quarter, but it still has $1.2 billion of sales. So it's not like, you know, no one's going to this you know, chain anymore. That being said, it doesn't seem like there's a lot of investor interest at this point, given so many bankruptcy
Caroline,
concerns.
not to cut you off, but I mean, if I spend $5 billion and then sell, you know, I make a billion back, like that's not sustainable. And that's really been the issue with Bed Bath & Beyond. It's not that they're selling stuff, it's that they make zero money when they're actually selling this stuff. So they spend more on workers and real estate and the goods and everything combined than they do actually selling the stuff, and they're losing money.
Right, but they did say, yes, negative. They're continuing to see negative operating losses, but they haven't completely depleted their cash. So yes, you can't spend more than you bring in, of course, but I think that cash position's also pretty important, and they haven't blown through it all yet. So, you know, at the end of the day, this is a company that has said we may have to, you know, we're trying hard to avoid bankruptcy protection, but we may have to do it. And that case, you don't necessarily want to be owning shares. So it's a risk. And, you know, some analysts, too, at least, are a little bit more, you know, a little bit less bearish on the company. So we'll have to kind of see how this plays out, especially given its latest stock offering.
Yeah, and it wouldn't be, I guess, completely unprecedented for a bankruptcy filing to be the end of Bed Bath & Beyond, because, I mean, there's names like Hertz. Hertz, it was the best thing that ever happened to the company that is now faring quite well following its Chapter 11 filing. So I guess completely different companies, but it doesn't necessarily mean doomsday, I guess. To take on a more optimistic approach, I think that I need to go to Bed Bath & Beyond, Caroline, frankly. I need to see the store. I need to check out the inventory. I need to assess that who is shopping there, and then I will make my final conclusion, because I mean, frankly, they're all closed.
Check for us, Jenny.
Exactly.
Let us know what those inventories look like now that they've gotten this merchandise lifeline.
Exactly. I need to go right to the field to get the answers, but we'll leave it there. Appreciate all of your thoughts today. Caroline Wood, Senior Markets Correspondent on Bed Bath & Beyond. 33 cents, though. Man, what a brutal move lower it's been. But now, coming up next for under 30, we are looking at Dutch Bros. Actually seeing a nice move higher today. Shares are up 1.8%. We'll dive more into some analyst activity.
That was interesting. We get short like it did. Where would the price be at now? I mean, like from when they did the share offering? 80 cents. Woman's planning. BBY is above you up there. See how it kind of inverse betas at times? SPY's coming down, Bed Bath's going up. Still got time. Got a lot of time. That is interesting too. Analysts just have a hold on it. I mean, today's looking better than yesterday, really. Yesterday had that little rally, but it is starting to kind of round down on this bottom. As Wanro's lovely TA showed, you know, the downside moves are becoming less and less, basically. From steep dropping to less dropping. Eventually, hopefully some flattening. Which, yeah, it's maybe getting there. Maybe I've started to get to a bottom. Just wait until we retest this level. We don't make a new low. Good first sign. And S up 4.5. Oh, to fill the gap? Is it getting close to where I wanted to pick it up? No, it's not there yet. It's got like another 50% to go. Yeah, 50% still. Little dead cat bounce. 5 bouncing here a bit. Jenna, your teeth.
Price target to outperform from neutral. Now, the analyst said they view the company's 125 million, adjusted EBITDA guidance for 2023 as not only realistic but conservative. They said that they think their current valuation is overly pessimistic. It's an overly pessimistic view of their medium and long-term annual growth opportunities out there. I think, to your point, this is a company that's grown a ton. IPO'd in 2021. If we look at some of the numbers there, the revenue was up 52% in 2021, 48% in 2022. They even increased 44% in Q4 in their last earnings report. Having said that, they've got a lot of competition with Starbucks, as well as Dunkin' Donuts, and they're in an environment where consumers are very careful with their money right now, and so it is a concern for some investors out there, some of the long-term growth strategy for this company.
And speaking of that long-term growth strategy, Jeff, I'm looking at a map. Obviously, it starts in Oregon, but it's been slowly creeping around the country. California, Texas, as far east now as I see some locations in Tennessee, but I still see a lot of blank spots on this map. Unlike Starbucks, it has a lot of untapped potential still out there.
Yeah, so that's the big choice for investors out there right now, right? They know that Starbucks makes money, it's profitable. That's not necessarily the case with Dutch Brothers yet. However, they have this huge growth opportunity. They have about 671 stores, 275 of them are franchised. They expect to open another 150 this year, hoping to get to about 4,000 in the next 10 to 15 years. But if you compare that to Starbucks, they're sitting at around 36,000 stores. They're expected to get to 50,000 by 2030. So they certainly are quite a bit ahead of what we've seen out of Dutch Bros. With that said, that opportunity of growth is definitely there for the company in a way that it's not there for Starbucks right now.
Yeah, so Jeff, I was just going to ask about how this name competes with the Starbucks, or if they're just completely in different, realms of this coffee world, because I do know that people are very loyal, people that love their Dunkin' coffee, their McDonald's coffee, their Starbucks coffee. I mean, is this name on par with some of that loyalty we're seeing from consumers?
Oh, trades, man.
It's not on par in terms of scale. Certainly, we can see that by the number of stores. We can see that by the revenue we see in comparison. But there is, a wave of followers for Dutch Brothers or Dutch Bros, and we're seeing that in the same way that we saw that growth out of, Starbucks from the 90s on. And so, is it possible that they're starting to steal more market share? That could certainly be the case. I know that they have a pretty strong drive-through section of their business, which we're seeing more and more. Starbucks, compete with that with drive-throughs as well. So they are certainly specific to a segment. As you said, most coffee drinkers pick their place and they stick with it. But it's possible with the growth we're seeing that this company, may be able to steal from some of the Starbucks customers out there.
And do you have any insights on price point here? We know Starbucks just keeps getting more and more expensive. There hasn't been a mass exodus yet from the consumer base, but you hear rumblings on social media from time to time. And I would imagine that the market, in terms of where there's opportunity, is be that slightly cheaper alternative that's still perceived as high quality and reliable. Any insights there on where they're competitive in a pricing front?
They are competitive in the fact that they're not planning on raising prices. The company has said that this is a gamble from an inflationary perspective. If inflation could persist, that could certainly hit their top and bottom lines. They did say, obviously, that customers like it. They do expect that low single-digit growth from pricing will roll over into 2023. So hopefully that, that continues to stay positive for them. Having said that, if you look at it, Starbucks, to your point, has continued to raise prices. Starbucks has said themselves that their coffee is an affordable luxury. They think customers are willing to continue to pay for it. And, if you look, if you're around a Starbucks at any point, you do see still a lot of consumers walking in there. You've seen some decent numbers come out of Starbucks, certainly as China's continued to reopen. So there is a pricing difference in the fact that Starbucks has been very willing to raise prices. We're seeing Dutch Bros start to they're stopping the price hikes for now.
And I guess that's good news for us as consumers. We talked about Conagra Brands earlier in the show, and they have no guilt about raising prices and offsetting a lot of these costs on their consumers. So good to know at least one company out there is preserving some of these low costs, because I know Starbucks has gotten so expensive. It feels like not even just in the last couple of months. It's been like a years-long journey to get these $5-6 coffee drinks. But we will leave it there. Appreciate all of the insight, as always, Jeff Pierce. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Pedalini.
Finally making it to VWAP. Alright, that's me, guys. I'm trying to see if I can get any margin on TD. Can't get any for Bed Bath. I made it to VWAP. Bed Bath is now over VWAP, only down 3.4%. It doesn't seem as exciting as yesterday, because we didn't have kind of a volatile move up, but today is honestly better. It's just not down as much. Less exciting, but better.
right, 2 hours left in the trading day. The Dow is up 62 points. We have had some back and forth action. Take a look at the numbers right now. Here's a look. The S&P at 4085, down 15. The Dow, 33,464, up 61. The NASDAQ down 1.1%. This has tech has been under pressure. And the Russell is down 1.3%. Most of the economic news we've been getting in has been showing a little bit of weakness. And we are getting a big jobs report
coming
on
back
Friday
up to
morning.
that resistance.
For some of the
Power
biggest stories
support.
in the markets, we welcome in Renita Young,
340.
markets correspondent for the TD Ameritrade Network, to take a look at the semiconductors. A big move. What's behind the move here?
Well, right now we're seeing, Nicole, a few of the semiconductor stocks, the majority of them really lower today. And that's after China says that it will respond to Japan's move to limit the components from Japan to go export to China this time around. And now we're looking for China or Japan to say something next. You know, this is turning into somewhat of a technology battle. And so China is saying, or by the way, let's first look at the chip stocks. They're right there on the screen. You can see all are down, but Qualcomm, which is just up marginally, it's just hovering around unchanged. This has turned higher over the past couple of hours, but earlier today when we reported on this, it was lower. And so this raises the possibility of even more tension between China and others in this simmering tech Cold War. Now, last week, Japan joined the U.S. in announcing that chip restrictions on China. It's restricting 23 kinds of different semiconductor parts from, or equipments, pieces of equipment from being exported to China. And meanwhile, there are rumors that the EU is moving closer to a CHIPS Act, and Reuters is reporting that the EU's 43 billion euro act will likely get the green light from EU countries and lawmakers on April 18th. Now, this CHIPS Act was announced last year, and it wants to cut the European Union's reliance on both China and the United States after those global shortages with the supply chain.
And look at that inverse
impacted
beta.
their
SPY's
businesses
moving up,
greatly.
BBY is moving
And
down.
they're also looking to increase their own output by double to about 20%.
Understood. Okay, so we'll keep an eye on that group without a doubt.
I think that might be unrelated, though.
Meta. News of an upgrade there, some job cuts. That's been a typical theme we've been talking about, but tell us about Meta.
It has been a typical theme with Meta. It's continuing the year of efficiency with Mark Zuckerberg. But first, let's look at the stock. Shares are lower today, even though the company did get a price target hike at Jefferies. Jefferies took the stock to $250 from $225, and that represents maybe about an 18% move to the upside from where it's been trading today. And so the analyst says that this combination of an investment in AI is leading to higher engagement within this platform and higher engagement with some investors, and that easier comparisons should drive accelerating revenue growth in the second half of 2023. Now, also, we'll be looking to hear more about this year of efficiency. The analyst says that Meta's year of efficiency, the additional job cuts that it's making, along with other things, and share buybacks, could drive earnings for the company a little bit higher. And one more thing, Jefferies sees upside in Meta's underappreciated click-to-messaging business. It believes that Meta can generate a $12 plus earnings per share by 2024.
Yeah, thank you for all of that. Renita Young, thank you so much. Good to see you. Now let's take a look at the bigger picture. James Locke is with us, co-founder Pool Locke Associates. Well, we got in the ADP employment report showing a surprise, and the surprise was there were fewer jobs created than what was anticipated. And this comes on the heels of the JOLTS, which basically showed fewer jobs openings as well. What's the theme here and your takeaway, which seems somewhat evident, but curious your interpretation ahead of the jobs report on Friday?
Yep, and I think the jobs report is going to be kind of more of the same, showing this cooling, right? I mean, we've seen job openings under 10 million for the first time in 2 years. We saw just today, we saw the private sector hiring, was lower than expected. So it's all signs that employers' demand for workers is easing. albeit still in a strong labor market, right? Job openings, like I said, under that 10 million. So it kind of fits the overall picture, which is what you said, right? In that slightly cooler labor market. So we'll see what happens on Friday. And despite, layoff announcements from companies, you were just talking about, Meta laying off more people, new filings for unemployment benefits haven't increased significantly from, recent low levels. So we're kind of reaching what seems hiring limits at the moment. We're still seeing earnings estimates fall in 2023. But other than that, we're seeing the economy not looking too bad. So the health of the economy and really the resulting future path of interest rates is really going to be the key focus. And we'll see, what goes on. We had manufacturing decline for a fifth consecutive month. So, I have a feeling Friday's hiring data is going to be more of a little bit of cooling that we're seeing. And hopefully the Fed doesn't do anything too crazy to, drive us over a cliff. We're cooling. We don't want to cool. We don't want to go into a deep freeze.
And deep freeze, would that mean if the Fed were continuing to raise rates, would 25 basis points be terrible, or would it mean continually raising or more than 25 basis points? What are we talking about?
Yeah. So the Fed's standing out there still saying more and longer. I think they should take a pause, right? Because these are, backward-looking indicators. We need to let the rate cuts, which apparently have been working, right? We're cooling off the economy. The problem is if the Fed does it too much, too fast, then we're going to, the medicine's going to kill the patient. It's going to send us into, recession, and that's going to solve any inflation problem we have just in the worst way possible. So I would like to see them take a pause on the next one and then reevaluate. I don't think another quarter point is out of the picture, but keep on pushing it further and further without, taking a break to see, hey, is what we've done in the past working efficiently? Maybe these things, are building up some momentum. Might be a smarter play. But again, you and I are not the ones sitting in the hot seat.
Right.
That's pal.
James, I was thinking on the last Fed meeting, and I was thinking to myself that if they were to say, we want to take a pause on the heels of what's just happened in banking, we're worried about the repercussions. We don't know some things here. We want to take a pause right now. It's sort of just happened. It's fresh. We do have a lag effect for some of our hike rates that we've seen. We're going to take a pause and we'll regroup in May. I think that would have flown if they decided to take a pause and then hiked in May. What I'm not sure is if they pause in May, that they can then raise after that. Because then it would seem weird, right?
Yeah, you're absolutely right. If they, because they already kind of, they're already, even the rhetoric when they talk, they're already committed. It sounds like they're already committed to another quarter point hike. And again, I'm certainly not against it. I would like to see them hold off, right? Let's just wait and see what happens till next year. And go for that would be the kind of the solution.
Yeah.
You're spot on.
You're talking about.
Yeah.
Yeah.
If they raise,
no, look, there's plenty of people who agree with you. There are plenty of people who agree with you who think that they should basically say this rate hike cycle is over for right now, and we will regroup, and that is the end of this for now, and in the future we'll follow up. Let's move on to the other things. I want to talk banking. I want to talk oil, and you have a few names that you like. Just so I make sure to give the names the proper feature here, names that you like include Citigroup and Southwest. Why is that? Why those names?
Well, just big picture, everything we're always focused on. I'm always focused on value, higher dividend paying investments, things like that. And I'm looking ahead. We expect to see, like I said, earnings estimates to continue to fall, more volatility due to macro events. Like I said, the banking problems. Investors continue to guess on the Fed pivot, which we just talked about. So despite all these different kind of storm clouds of recession, history suggests that now is the time, to kind of buffer for the upcoming storm, so to speak, to reposition a portfolio kind of in a post-tightening period to come, in 2024, maybe earlier. So that kind of downdraft will end, and barring any sort of global calamity, we should expect to see stocks to be higher, let's say, a year from now. So Citigroup, I like it. It seems a little odd, right? We just had enormous banking problems. What the heck is going on? And certainly it got hit just with everyone else, but it doesn't stop it from being a good company, right? Low valuations, high levels of capital, even more capital now. Higher interest rates make lending more profitable. The large banks hold, nearly twice capital relative to before the financial crisis. Assuming the run on banks crisis is completed, which, listen, you never know. We see what happens tomorrow, but we're not seeing a domino effect of banks going down, particularly the bigger ones. So companies like Citigroup are positioned for sustained earnings and strength and likely price growth throughout the year and into 2024, right? The other one, and I've even talked about before, Southwest Airlines, they're really a hyper-efficient leader in the industry. They had all their problems kind of at the holiday times, but they seem to be, stepping past that in stride. They have a nice dividend yield. Like I said, corrected those systems that people are going back to Southwest. They're committed to the company, and we're looking at a price target up around in the low 50s. So that's up 50% from here.
That's good. Yeah, look, it's at 31. Quickly, we have less than a minute left. I want you to touch on oil. I know we had the OPEC cuts. Also, what's been going on in the banking sector. Do you feel that you did have Citibank as your pick, but just a big picture on each of those sectors, a quick thought.
Oil, the OPEC companies have made it quite clear that they are driving oil prices. They don't care about the United States. If we want something from them, we're going to have to bring it to the table. They don't care if it helps Russia or anything like that. They want $100 a barrel, period. Saudi Arabia is trying to build all these fancy kind of things to bring in tourists and things of that nature. So they're pushing that. I think oil's going higher. We're somewhere around 85 right now. I wouldn't doubt it if we see $100. They're probably going to stick to their guns unless we can come with some sort of reason why they shouldn't, and I don't see that happening. So
I kind of rejecting that.
As far as that is concerned, we're not going to see anything change too much going forward. They're not going to magically start raising production, and then we're starting to see people move out of alternatives and into bonds now. Right, we're starting to see that in pension funds and things like that. You're starting to see with the interest rates going up, these pension funds can now get that kind of 7% yield that they're trying to get without taking on enormous risk or illiquidity risk. Last year you'd have to have a complicated illiquid portfolio to get 7%. This year you can get 5% from bonds and have a 30-year portfolio in fixed income. We haven't seen fixed income on the institutional side in a long time.
Yeah, a good point. Worth noting. James Locke, thank you. Co-founder of Pool Locke Associates. Thanks, James. Coming up next, potential market leaders and some defensive stocks for your portfolio you may want to consider. Then we're talking drive-through fast food. Two names, in fact. We're looking at Dutch Bros, right? And McDonald's.
Awesome. Bouncing on VWAP now. I can't remember who set up the tweet bot, but it's not working. Did it relocate? Birds. And notice thing broke that resistance line. Up 8.2%. Bounced on this support back here. This thing might start to get squeezy. I shouldn't have sold. Oh, there it is, birds. 24.25. I don't have buying power. Can't chase it. Probably good. Still have the options, but they're super illiquid. Yeah, it actually bounced on that 50 moving average nicely. %10 now on birds.
ConAgra seeing gains after an earnings beat, raising the guidance for the rest of the year. Ready-made food company reporting earnings per share of 76 cents a share. That was above 64 cents consensus, and it's up 13% in the past year. FedEx upside, announcing plans to consolidate its operating companies into one organization. Shipping giant now expects to see $4 billion in cost savings in fiscal 2025. And FedEx also plans to boost its annual dividend by 10% to 44 cents a share. Right now, it's trading at its highest level since August. On the downside, Microsoft and Amazon are both facing macro headwinds. Potential for further investigations by UK digital regulators. The Office of Communications says a study uncovered practices that could limit competition in cloud technology. Amazon is down about 2%. Microsoft is down about 1%. And we like to check in on Bitcoin here. We've had a mixed market. Right now, Bitcoin is down about 0.75% at 28,155.
A little volume here now on birds.
Now let's catch up on the major markets and get some insight here. And Paul Schatz is with us, President, Chief Investment Officer at Heritage Capital. Paul, you've been a bull in the market for quite some time. Tell me now, what are you thinking here? What stands out to you?
Oh, it's hitting that resistance right there.
And always good to be with you. So, yeah, I mean, at least the last 7 months we've been super bullish, and probably a little longer than that. We were early in the end of Q3 last year, where the risk reward far was in the investor's favor. And I think now, while we have rallied significantly off the October lows, I don't think the rally is over. Yes, we can get a pullback because we've rallied so smartly, especially in, the NASDAQ has been by far the leader. And that's been a lot of fun, especially for retail investors who are so laden with technology. They've got a little bit of a reprieve, but the Dow and the S&P have been really participating as well. The concern is, if you want me to rain on the parade a little bit, the concern is at the mid and small caps, and whether that's from the problems in the banking sector and access to funding, you could say that could be a reason, or that the economy is slowly, very slowly, and begrudgingly moving towards recession, and that may impact small and mid cap companies before the large caps. But that's my concern, are the smaller companies, mid cap companies. But the big caps still look good, leadership is still decent, and a pause to refresh here would be certainly okay.
Yeah. So, you talk about, yes, we could pull back, but you have your eye set on a level of 4,400 in the S&P 500. Ooh. That's really not in the range. That's up and out of the range that we've seen.
So last year in the fourth quarter, and every time I'm on with you, I give you some scenarios. Look, in a perfect, if this year goes perfectly,
that resistance,
which I'm not sure where it is, but I said we could see 30% this year if everything broke absolutely perfectly. Well, I didn't factor in Silicon Valley and Signature and Credit Suisse and Deutsche Bank. but I still think this could be an up 15 to 20% year. And here's a cool stat. When the stock market in Q1 does not breach Q4's lows, almost all the time the market's higher on the year. So it gives us a little cushion that the pullback should be shallow. We shouldn't see, 12, 15, 20% in the downside, which means weakness should be bought. We're still in the third year of a first-term president. Those haven't been down since Germany invaded Poland in 1939. So a lot of the stats and backdrops and data mining items still point to higher prices. And look, semiconductors have been leading. You can argue it any way you want, but for me, that's a really good sign. And you want to poke holes in it and say, well, the banks stink. Yes, they do. They need to at least stabilize and then retrace some of what they lost. And I grant that is a concern, because it doesn't look like the banks are really getting any interest on a value level. But to me, semis and bios are leading, and on the other end of the barbell, which I hate using that because everyone's overusing that phrase, but utilities are soaring and staples are soaring, telling us that the market's expecting some kind of economic weakness. It may be uneven, like post 9/11, but it's certainly coming.
Okay. So that being said, let's go through your picks here. You have Tegna. That is your first one. You also have AIG and Ecolab. Let's start with Tegna.
Okay, and as always, I never try to give the stuff that correlates with the market, because then you can just buy this in the SPY or an index fund. Tegna was the one from yesteryear that I had given, and then it got a buyout offer multiple times. So recently, Standard General made a deal to buy the company, and now the government, the FCC, is kind of beating their chest and giving the big Heisman, we're not going to let this happen so quickly. I think the deal probably goes through begrudgingly, but even if it doesn't, you're just starting the election season, and Tegna owns media stations. So that's and their big earnings push is coming into election season. That's a big one. The fundamental concerns, I think, are overblown. It's a $4 billion in equity. It's throwing off $500 million of free cash flow over the last 3 years. So to me, whether the deal goes through or not, the fundamentals support this stock going to the low 20s by the end of the year. So that to me is a special situation. AIG, which I remember I said I would never, ever buy AIG after the debacle in 2008, and I haven't bought it ever since, but now I bought it. So let's unpack it a little bit. The property casualty market is strong. Can't argue that. And I think besides the fact that the stock got blown up with the banks and the kind of contagion, but it shouldn't. It's not part of that sector. Things are still good. There's a thesis that climate change is leading to bigger disasters, and that eventually will impact property and casualty. I think that's a little overblown for the stock. Lower inflation is going to juice earnings here. It should run to the upper 50s this year.
Wow, and it's at 50
Twitter.
now, so you see
I think
some
Twitter
upside
shut down
there.
TweetShift.
Go ahead.
That could be a
TweetShift.
20%
The bot
move
for our
under a year.
Discord
That's
got
nothing to
suspended.
sneeze at. That's real money. And then finally, Ecolab I've given before. It used to be pre-COVID. This was always a super expensive stock. I always had trouble buying it because the valuation was nuts. So I played it in the short term. But look, they spun off a weak division in the pool division a couple years ago. That was their really crummy performing asset. It's a great play in commercial standardization. We're not, COVID may be over as a pandemic,
calls on
but
BHC.
sanitizing things is going to go on for this generation.
Spike.
And look, this used to be a commercial company. They're now
does
doing
look
a
definitely
consumer
interesting.
line in Home Depot.
Oh, I'm way down on my calls at this point. So I'm just holding
It's
them,
got
I guess.
legs for, again, a 10 to 20% move by the end of the year. So three kind of off the beaten path ideas
I have 44
that
days on
aren't,
it, but yeah.
that aren't Apple,
Maybe holding
they're not
shares
Meta,
with
they're
Divvy, I'm not sure.
Nvidia.
There's been more news on it?
Thank you for that. Thank you for all of those. I mean, when you talk about the upside
$1 per
potential
share.
for these names, I think people would like, to see that actually come and happen. So we'll keep an eye on all of that. Paul Schatz, President and Chief Investment Officer at Heritage Capital. Thank you. Good to see you. Coming up next, we're going to drive right through. I mean, the drive-thrus, right? We're going to explain this.
I don't know much about it.
Nick Setien standing by. He's going to talk about Dutch Bros and McDonald's and what's going on with these fast food type names coming up.
What do you know about it?
the loyalty that people have to this name. The menu pricing keeps it attractive. The guest counts continue to drive same-store sales growth. Tell me a little bit about the big picture here. Nothing's going to change. It's only going to get better.
Yeah, look, I mean,
I think it dropped on the. There was a tweet that came out.
Gainer,
So it ripped on the news of them winning or something with the Apple litigation.
Continue to be laser focused on operations.
That's what the rip was on, and maybe the news of the dividend. I don't know if that was announced then or not. But
being on trend with
then it dropped. There was some tweet
as well.
Saying something super negative, and that's what made
messaging working very well. And they've got the higher end cultural messaging.
Donra was following it. I don't know exactly what happened, but
to the extent that they continue to gain market share, I see very little probability of downside relative to expectation.
Bird's still holding up, 10.5.
You know what's interesting? I mean, McDonald's 3 years ago was around $167. It just pulled up a 3-year chart because it's really at these all-time highs. It went from 167 now to 284 and change as the new highs. Still seeing 300 for this name?
I certainly do, yeah. I mean, to the extent that they're going to have positive transaction gains in an environment where it's very difficult to come by positive transactions for everybody else, that's going to garner a higher multiple, particularly in a very defensive environment.
And should we be talking about the other names? Are there other ones that you have also outperformed since the upside? I mean, there's so much competition in this. I think of the hamburgers, and I think of Wendy's and Burger King, which falls under the bigger umbrella, but there is a lot of competition. Even Starbucks can be a competitor. Are there any competitive names here?
Domino's is very intriguing at the moment. I certainly haven't outperformed on Domino's. They're closer to their 52-week low than their 52-week high. Management has a lot of low-hanging fruit they can take advantage of, both in the near term and medium term. And once they choose to do so, I think we can see an acceleration in comps, particularly in a incrementally value-focused consumer environment. And so that's a name to me that is poised for some upside. I also like Wendy's quite a bit, with the almost a 5% dividend. You really just need the stock to go up $1 and your return's 10%. And ultimately we have a relatively high degree of visibility into their top line trends, both sort of near term and medium term. And this is a very, very good management team at Wendy's. So I'm less concerned about any risks to the margins and their EBITDA guidance for the year as well.
Nick, good to speak with you. Thank you for all of that. Love chatting with you.
Thanks,
particularly this topic is a good one too. Nick Setien, Managing Director, Restaurants Equity Research at Wedbush. Okay, still ahead in the second half of our show. Let's take a look at some of the biggest trends in ETFs, from Bitcoin to regional banks, cannabis, nat gas. Which ones performed best or worst? Let's head to break. We'll be right back.
Nat gas is the worst. $235. It's just above VWAP, down 0.3% today. Pretty mellow down day after yesterday's engulfing candle, so probably one more day of mellow price action. But trend is down. There's a flush on birds. MC still climbing up 3.2%. Working its way up. All right, broke that little resistance from before. The 407. Next level really is 408.66. Guess it could stop before there. Maybe 408.22 or so. But on the move up. Fret not.
I'm Nicole Petalides, coming to you live from the New York Stock Exchange. Some back and forth action, but stocks are looking lower for the week, it seems. You are about 90 minutes away from the closing bell. Let's check out the exact numbers right now. The S&P at 4089, down 11, while the Dow is gaining 96 points at 33,499. Tech has been under pressure. The tech index of the NASDAQ is down 1%, 12,968, and the Russell is down 1.1% for small caps at 1748. I'd like to check in on a developing story. Jenny Horn is with us, markets correspondent, to take a look at Walmart with its guidance and its outlook. Let's hear what the company has to say. Jenny
You
Horn.
put glasses on, Jenny.
There's so much to look forward to, really, Nicole, following its investor event, which took place on Tuesday as well as today. And we are seeing a nice lift today despite the overall market weakness. But I'm actually surprised we're not seeing more optimism, because really the company laid out so many key trends that the street typically likes to see. They did lay out this new growth strategy, which does aim to increase their sales by 4% over the next 3 to 5 years, while also strengthening their operating margin. In the next 5 years, the company predicts that nearly 90% of its capex will be in high return areas such as e-commerce, supply chain, and store investments. Now, on the e-commerce side, Walmart does plan to keep scaling its digital capabilities like curbside pickup, as well as different fulfillment centers, and improving really their overall delivery options. They are also predicting that by 2026, 65% of their stores will be serviced by automation.
That's why we're all here, it's me.
Well, 55% of their fulfillment center volumes will move through different automated facilities, which could improve their cost averages by about 20%. That to me seems so cool, that the company is now adding these robots to its fulfillment centers and to unload pallets, as well as automatically retrieve items to cut down on the need for workers to do those tasks. So while I do think that is scary, naturally, given the fact that their workforce will shrink, to operate in a more efficient, technology-focused way is something that's very important, especially when you're Walmart. They employ roughly 2.3 million people across the United States. This is such a massive company. D.A. Davidson did also make note of this automation push, saying that they see it having some huge upside benefits to a company with scale as great as Walmart. Walmart did also reiterate its financial guidance for the fiscal first quarter, as well as for their current fiscal year. The guidance, which they issued during their latest earnings release, was more cautious than expected at the time, but the market has seemed pretty content with Walmart, all things considered, with shares now up about 5.5% year to date. Another interesting aspect of this report is they have said they will not they will keep their costs low at the sacrifice of some of their operating margins, and right now they are keeping these new customers by their commitment to keeping costs relatively lower. Sam's Club is also a huge bright spot that has grown its membership by nearly 30% over the last 3 years, driven by actually a younger demographic, with the millennial base increasing by about 65%, while its Gen Z base was up 120%. They do plan to open about 30 new Sam's Clubs in years ahead, with the first one opening in Florida in 2024. So that to me was wild, that Gen Z is like their growth metric right now here, Nicole, and a lot to look forward to. CEO Doug McMillon is typically one that seems very committed to appreciating that this is a company that serves a more mid or lower consumer, because I think that's so important. When you have Walmarts, they have like 12,000 locations across the United States. Their commitment to pricing fairly right now, given the inflationary environment, seems so important.
Yeah, absolutely. Thank you for all of that. A good look there at Walmart. Jenny Horn, markets correspondent on the TD Ameritrade Network. Thanks for that. I want to turn your attention to the ETF market, and we usually look
Upstart.
to inflows to understand
3%.
how popular, what it's saying, but it turns out the ETF inflows are not so easy because we're getting some conflicting signals, and for that, Aniket Ulal's with us, VP ETF Data and Analytics at the FRA. So you said that ETF inflows significantly lower. Primary and secondary ETF markets are showing conflicting signals. So what does that mean? What are we to take away from this?
Well, really, you know, there's two aspects to the ETF market. One is where are the flows going? In other words, what's the primary market activity? What we've seen in the primary market is much more caution, investors showing much more concern about protecting downside. We've seen a lot of money move into government bonds, about $44 billion moving into sovereign treasury type ETFs. We've seen a lot of money moving to high quality ETFs, about $12 billion. So as far as fund investors are concerned, ETF investors are concerned, they're much more cautious. Whereas if you look at the secondary market where ETFs are just tracking the S&P 500 or the broader stock market, of course, there we've seen a much more of a risk-on approach. The best performing categories have been things like Bitcoin themed ETFs, technology, and so on. So certainly kind of contrast there in terms of what's happening in the primary and secondary markets for ETFs.
Right. Expand on that. You mentioned technology, large caps. How popular have those been?
If you take a sector view of ETFs this year, it's clear technology has been the strongest sector. If you look at all the gig sectors, tech is up over 20%. A lot of that is actually driven by large caps. Microsoft, Apple have been some of the biggest contributors to technology returns ETFs and tech ETFs this year. Not surprisingly, financials have struggled, obviously, with what we've seen with regional banks. Regional bank ETFs were down about 20% this quarter. So we've really seen also a lot of sector disparity, much more than we see traditionally. Tech has been the strongest performer. Financials, healthcare, energy, the sectors that were doing well last year are down this year, and the ones that were weaker last year are doing better this year. So it's kind of flipped from 2022 so far.
Interesting. So we always used to say the dogs of the Dow are next year's winners, and that seems to be what you're facing right now. With the outflows that you are seeing, are you able to evaluate or have a takeaway from any of that and extrapolate anything that might be helpful to an investor?
There are certain categories where we've seen outflows where I think tell a longer term story. One is ESG. We've seen ESG ETFs lose about $4 billion this quarter. The same quarter last year, they took in $4 billion. So we're talking about an $8 billion swing in ESG.
Yeah, UNG, look, it is the worst.
For this. One, of course, is the fact that ESG ETFs generally tend to be overweight asset-light kind of businesses. They tend to be overweight technology. They tend to be overweight consumer communication services and so on. And they tend to be underweight energy. So last year, they really kind of underperformed for these reasons. And so I think there's a bit of a lag effect here where ESG didn't do well last year. Money's been going out. ESG has also become a little bit of a political football. We've seen in some states politicians questioning ESG methodologies, questioning the rationale for ESG. And so I think all of these factors have really led to ESG kind of seeing some outflows. Another category that's seen outflows is domestic equities.
Have access to them in a quick way.
Surprisingly, this year, domestic equities have actually had negative outflows in the ETF space. By contrast,
just an inconvenience.
Global equities have taken in a lot of money. The same quarter last year, domestic equities took in $160 billion. That's a very big number. This year, they actually down
maybe
$2
something
billion.
could happen.
So we've seen a significant rotation out of domestic equities into international equities. Now that could change. Obviously, we've seen the S&P 500 do fairly well. This quarter, it's up over 7%.
Curious,
so
but
some of those flows could reverse in the
Orb
next
is moving.
Right, understood. You know, I mean, I don't want to make this an ESG segment, but I wonder, I mean, I can't imagine ESG is finished. you know,
I mean,
because
I don't
there
trust
were all these
computer
projections
share,
of
some
asset flows.
random
and
Australian
it was
company.
very popular. Do you have a quick
Any more
thought
than
on that? I mean, you don't
these
think
ones that are
ESG is
FDIC insured.
finished as we know it, because it came
And
in pretty fast.
SIPC, I think it is.
I don't think it's finished. I think there's much more to be
There's
played out
news on
here.
board, but for the
I
cash
think part of
injection.
it is performance. If technology does well this year and continues to do well, ESG could outperform
Emergency
the broader
cash
market.
injection.
We've seen some big ETF issuers enter the ESG
On board.
space, most notably Morgan Stanley this year. They may put some distribution muscle behind ESG.
Right.
And so I think there's more to kind of watch here.
Yeah. But still a big fan overall of ETFs. I mean, you mentioned some of them going into more high quality or sort of bonds.
He's gonna get halted.
Final thoughts here. I mean, I know
just
people
did,
are
actually.
playing it a little
Oh,
bit more
no, it's not.
cautionary and safe. But ETFs, do you think the big picture here is still
You see this headline?
a very hot
Telegraph reporter Matt
category?
Field tweets.
ETFs as a
The
product
bankruptcy
structure
call
not
now.
going
Virgin
anywhere. They're
Orbit
just
and
gonna keep
employers are
growing.
trying
We
to
don't think
agree
the
an emergency
outflows,
cash injection
or the
or
lower
debtor in
inflows
possession.
rather into ETFs
Financing
this
at
year
around
are a
31 million
statement
with the
on
court.
ETFs themselves. I think it's more investors rotating
This
into
dude's
other
tweeting
products
stuff
like
from
money
the
market
bankruptcy
funds,
call.
particularly in response to what we saw with the bank lending crisis. As a category, ETFs
Market
are
cap 67
going
million
to
here.
succeed and do well. But certainly this quarter, it's been a case of flows being much lower than expectations.
Yeah. Aniket Ulal, wonderful to see you. Thank you for all of that. VP ETF
Great.
Data and Analytics at CF.
Oh yeah, they should news you went bankrupt.
All right, coming up next, we're going to discuss Constellation Brands ahead of the earnings
I think it
report that's
mentions
due
the
out
bank.
tomorrow. What the company is watching for.
injection.
It has the beer brands, right? We'll talk all about that.
Telegraph reporter's tweet just caused that stock to go up 30%. That is neat. %. Still going. I'm surprised it hasn't halted. Making commotion. 46%, 47%, 50%. There's your pullback if you want it. 32%. Jeez, MCOM. It was up like 8% pre-market. Now it's down 8%. It's looking like BBBY. And birds gave it up. Good thing I didn't chase that. Ten minutes to CNS closing. Power hour.
Pacifico command higher prices. Top line beer growth of 7 to 9% is expected in fiscal 2023 and 24. And beer tends to be a affordable luxury for most consumers, making it recession resistant. Imports, though, volumes were flat in the 3 months ended November. Mexican beer volumes fell by 11% in November. People don't trade up to imports when they have less money to spend. So the weak economic environment could impact Constellation Brands. I'll be listening closely to hear what the company has to say about margins and depletion trends.
Yeah, I do see what you mean. And those names, some of those are very popular, like Modelo and Corona. I don't know about Pacifico, but I mean, I know those to be very popular. When I looked at the 4-week sales that I saw the last print, I saw some up arrows for beer versus down for wine, for example. Gerald Pescarelli of Wedbush, please tell us your thoughts. I was combing through your reports here. You reiterated your outperform rating. Tell me all about your thoughts on Constellation Brands. What do you think we'll hear? Are you expecting a good report?
Sure thing.
All right. So, Andrew, while we just finalize there, just tell me more about some of the competitive nature. I mean, it's not just Constellation Brands. We talked about, right, the names that are under that umbrella, but there's also TAP, there's Sam, there's Bud, right?
Well, I think that Constellation Brands has been the beneficiary of a market share shift over the last decade, where consumers have moved away from the big domestics to high-end beers. And interestingly, I think you've seen a discussion from many consumer beverages and alcohol all this year is price increases. So Constellation raised their prices in the third quarter by 5%, and sales from distributors to end consumers decelerated. Budweiser and Molson Coors raised prices more aggressively. So in turn, distributors and retailers who are also dealing with higher costs, they raised prices on Constellation products, but Constellation Brands did not get the full benefit of those consumers paying more. So we'll have to see how persistent higher material costs impact their margins.
It seems that in the Wedbush note here, which Greg had sent us, he talked about some near-term pressures, but gave some good ideas pertaining to guidance. When we think about what happens on going forward for these kinds of names, Andrew, do you think when we talk about margin and earnings, which is what we're going to talk about all the next few months as we get earnings for all these companies, and I think there's a lot of worries about earnings overall, but beer is sort of recession-proof a little bit, right?
Yes, consumers do tend to consider their favorite beer an affordable luxury. I think what's interesting here is that the question is there going to be a positive catalyst for Constellation? And innovation has not been a meaningful part of Constellation's growth story to date, but they are launching, or they've just launched Modelo Oro, the light version of Modelo Especial. That marks a change. And I expect that to be accretive, and it could be a positive catalyst this spring.
And as you know, we're just waiting to speak with Gerald, but I will give you some food for thought, and that is within the categories, it's not just beer, right? It's hard seltzer, which came on very strong, and that was very popular with the young people, only to see that pull back, right? And then we also have FMB, which thankful to my producer for looking this up. Patrick looked this up. Flavored malt beverage. I didn't even know about that one, Andrew. When I think about these companies, they do have to be innovative. I think the spiked seltzer did very well, then not. You know what? I'm going to give that question over to Gerald so he can give us his big picture thought. I was just talking about not only beer, Gerald, but also other things such as hard seltzer and FMBs.
Sure. Well, apologies for the delay here, but thanks very much, Nicole. Yeah, for Constellation Brands, they came out with a seltzer. They're doing a couple of other things as it relates to RTDs, but for this business, by and large, you're really going to need to see Modelo continue to gain market share of the category, and you're going to have to see Corona hang in there as well. Their portfolio and their revenue trajectory really comes down to those two brands. And so while hard seltzer and RTDs are kind of nice to have, they are going to be too small just in terms of the overall size of those other two flagship brands for Constellation.
Yeah. Just quickly, Gerald, when I was looking through your notes, it looked like the earnings per share may come in line or even a little under versus your outlook. It seemed a little more positive. Do you like STZ?
Bounce on.
Are there other names that you like better in the group? There's competition.
Big Bed Bath
Yeah,
Candle
sure.
there.
So we're recommending Constellation brands as outperform. In our preview,
average.
we were a little cautious on the setup headed into the print here. You know, you recall last quarter, they put up a 5.7% depletion growth number, and the stock sold off 10%. Depletions likely decelerated from there, and so I think that it's going to really stem on management commentary around a potential recovery in their beer business. I do think that there's upside likely to some of the 4Q estimates, because when you look at their full-year guidance, they really need to see a pretty meaningful turnaround in trajectory on both the top line, and they need to do like a 33% margin to kind of hit that 38% that they're guiding to, which is a meaningful decline. And so I think there may be some upside, but I think it's largely going to stem on depletions, on guidance, and on some favorable commentary either on Modelo Oro or just what they're seeing in beer in general.
Yeah. Well, cheers to you both. Thank you for being on the show today, Gerald Pasquarelli and Andrew Wong of Runnymede Capital. Thank you both very, very much. Appreciate it. That's going to do it for us here on the watch list. I'm Nicole Petalides. Keep it right here. Market on Close is next.
Meat kind of kept climbing. Went down 1.8 now. All right, 3 o'clock. There it is. It's coming down a little bit there. BWAP.
Russell, both those two indexes have been under pressure pretty much all day. This is positive 25 bips right now. Not much, but at least it's going in the right direction. You've got healthcare companies doing some legwork there. Today, though, does continue some of the theme from yesterday. And to that point, there is some interesting action underway. Let's go through it. Bonds are bid. Treasuries are catching buyers, and the 10-year yield is pushing below 3.5. It's pushing below 3.4. It's pushing below 3.3. I think this might be trend continuation. Stick around till the end of the show. I think the risk radar probably needs to reflect the strength in bonds. This has been a level that we've tested over and over again around 3.5 in the 10-year, and now we're getting the lowest year-to-date yield. I think this is a big deal because right now the question has been how stocks will respond to lower yields. How stocks will respond to higher yields was basically answered all last year, and it was a negative thing. So the flip side was that when yields go down, the market starts to think about the Fed maybe easing back some of its aggression, and then stocks go up while yields go down. But it's not what we're getting right now. And I do think that this could really be a very meaningful shift in regime. We've prepared for this. We've talked about it. We've been looking for the signs of when it would occur. And I think that the signs are pretty compelling right now that lower yields are not leading to gains in stocks because recession fears are just too high. And also the possibility that the Fed maybe won't back down even if the economy does slow. That basically puts the risk of stagflation back into the conversation in a way we haven't heard really in some time, because you see growth companies, long duration assets, as many describe them. That's debatable, but what we've seen is that generally growth stocks, speculative crypto have been the two main components alongside long duration bonds that all trade as one group. Now, that used to also include generally stocks and generally gold, but today you have some strength in gold again, and you've got the ARK fund, the high growth companies in the tech world down. You've got Bitcoin down. A little bit of a shift from today compared to the last couple days as the dollar is actually kind of firm. Again, I really want to watch that dollar to see if it holds its year-to-date lows, because if it does, I think the dollar might tell us that the Fed still has to do something, or at least can't cut, because if all of this meant the Fed were going to go on some deep cutting path while the other central banks around the world are still tightening, you probably have the dollar really getting slammed. For the most part, the dollar has been quite weak. numbers, and investors come right back into what the stable stuff, the dividend payers. So there's certainly a little bit of a narrative building here this week that we'll get a big test for employment on Friday. But we're going to be watching futures because the market's closed. What a mess. All right, let's bring in Renita Young and Kevin Hanks joining me here, host of Fast Market on the line, and Renita here with me in the studio. Let's talk some specific companies here, Renita, and generally kind of starting with the stuff that's down. A lot of it is tech-centric. Yesterday, we had certain companies in tech dragging. The day before was Tesla. You get a little bit of that again today, actually kind of coming back. The whole EV trade is not really the hero right now by any means.
Not at all. So let's start with what's breaking down, and that's the EV trade, just as you say. It's reaching new lows, and it's a few different reasons. We see Tesla down, Albemarle down, Livent down, as well as the Invesco Wonder Hill Clean Energy ETF. And it's a few different reasons. First, several car companies are speaking at a Bank of America auto conference this week. GM, which we know earlier this week talked about the $1 billion it's saving by doing voluntary buyouts of 5,000 staffers, right? That might have been a positive thing to some, but when it comes to EV sales, reality hit that the company may take a little bit longer to sell 400,000 EVs in North America between 2022 and 2024. That was a negative hit. Then over to Rivian, which said that it could get to positive gross profit margins by the fourth quarter of 2024, when markets were expecting, or Wall Street rather, was expecting the third quarter of 2024. And then we have Ford that says its Mustang Mach-E and the E-Transit van would qualify for half of the tax credit, the EV tax credit. That's $3,750 starting April 18th, not the full $7,500 credit. And this is because the IRS started requiring vehicle companies to do a little bit more, or incorporating other qualifications that it hadn't incorporated before. And now that specific one, Ford said it's losing half of that credit because it does not meet the domestic battery manufacturing requirement. GM and Tesla are the best positioned to be able to make use of the full tax credit because of that one thing. A lot of vehicle companies actually have their batteries made in Asia specifically. But another thing pressuring EV stocks today is Albemarle's downgrade. We talked about that earlier today, to underperform from neutral with a $195 price target, not too far from where it's trading right now. But this is about lithium, and because the prices of lithium, which have been pretty volatile lately, that is expected to continue to decline right now. Of course, we know EV demand drives demand for lithium-ion batteries and the lithium that goes into the batteries, and then that impacts stocks that are tied to lithium. So it's quite a bit going on. It's also a whole other side of today's market story. You want me to get to that with healthcare?
Let's look at this real quick, because I want Kev's thoughts on this too. That's a really good rundown. There's basically everything in this trade outside of Tesla is near the year lows. And I'm not sure that people really appreciate that right now, because Tesla's been kind of in a world of its own. We've seen the way Ford is struggling. I mean, a company like Rivian that just like keeps moving the goalposts, and you wonder if they're ever even going to get there. That ETF you mentioned, PBW, that has a lot of the green energy plays and vehicles in particular, $1 away from a new year to date, a new 1 year low. So Tesla kind of in its own world. How representative, Kev, do you think this sector is generally of the overall kind of growth trade that came back with a vengeance the last few months, fizzling out now kind of right when it counts?
Well, I don't know if we can connect the dots between large cap tech and some of the car makers, although Tesla, you know, Oliver, I think the EV space is its own unique universe of competition. And I think Elon Musk, much like we saw other CEOs do, Mark Zuckerberg, incredibly competitive when it comes to other names in their sectors. And a lot of people saw those price reductions by Tesla late last year, early this year as a sign of weakness. But if you really read into it, it was a sign of competition and them really putting the pressure on some of these other car makers to lower their prices when, frankly, they can't afford to lower prices. Tesla now has scale. They now have high enough margins where they can be even more and more competitive in terms of pricing. And I think what Elon Musk is doing to the EV market, the pressure he's putting on some of these companies to not only produce good cars, but produce lower priced cars, I think he is throwing a wrench into all these master plans for some of these cars, because he keeps lowering prices and producing lower price point cars when everyone else is just trying to get a car on the market. And so these numbers are, for some of these companies, are miserable compared to Tesla. So Oliver, I think this is fascinating, but it shows, whether you want to or not, and Renita just mentioned, Elon Musk has got these cars in line with the tax credits, and now the battery credits and things like that, how they all flow into one. His competitive nature is really coming out, and he is showing dominance. He's so far ahead of these other companies, Oliver, that you can make a case, unless a lightning bolt hits, they may never catch up.
Well, I think that's we're starting to realize that, because when he made some of these comments about Rivian, Rivian and Lucid rather here, it was kind of a question at the time. All right, is he kind of being a bully and kind of trying to push his competitor around? I think probably the answer is more like he sees some of the macroeconomic stresses in the group and knows that they're in a very different position than he was when he was building out his runway, right? A much more uncertain outlook here. And so some of these companies really do seem like they're having some issues getting off the ground. So a big difference between how Tesla's trading and how the peers are trading. What about what's working today overall? Let's talk about that, Renita. Healthcare trade, utilities doing well, but healthcare in particular always gets this kind of like sector safety bid, but then you throw in some pretty great developmental stuff with some of these drug pipelines like the one at Eli Lilly, and you got a good recipe for some green on the board today.
Oh, absolutely. So first off, healthcare is the second best sector today in the S&P 500. And so it's not just up on Eli Lilly. We talked earlier about United Health getting that price target hike and an upgrade over at Raymond James, but when it comes to Eli Lilly, it made a significant citing, saying that its experimental Alzheimer's drug reduces brain plaque in patients who are in the earliest stages of the disease. And this is important because researchers have argued for years that the accumulation of plaque on the brain is a critical first step toward the cognitive decline that tends to happen with Alzheimer's disease. And this is part of Eli Lilly's decades-long goal to finally get an Alzheimer's disease drug to market. So it's going to continue this. It is encouraging news for people who are impacted by it and people with family members who are impacted by it. But ultimately, this company also wants to be able to compete with its huge competitors, which includes Biogen, among others.
Okay, almost back to the highs. Another sign that it seems like our leadership regimes are kind of shifting here a little bit. Quick thought, Kev, on the market kind of turning back to some of the reliable healthcare names when things get a little rough out there?
Well, one comment on Eli Lilly, and as life expectancy gets higher and higher, Alzheimer's and dementia have become such a big part of ailments for the elderly that this is a breakthrough drug that can touch the lives of millions and millions of people, Oliver. So it's really significant. Now, in terms of the overall market, this market, they haven't done much damage to it past the opening bell and a little bit of continued weakness in NASDAQ. But I think the Dow Jones is an impressive, healthcare and staples in the Dow Jones is keeping that positive for the day. And really, the S&P, we're going lower, but we're not really accelerating lower, Oliver. We're just almost a consolidating lower. I think markets are getting jittery going into earnings next week, Oliver, and I think until those numbers start hitting, there's a little bit of defense on the field here.
All right, nicely put. Defense showing up for sure. Thanks, Renita Young, for taking us through the stock stories. Appreciate it, Kevin Hanks. All right, let's bring in Mark Lopresti, joining us, co-founder and chief market strategist at Battle Fin. Mark, it seems like the market here is getting a little bit shaky Welcome back to the show. Tell me what you think is on the mind here of investors as we see stocks drop in the last couple days as data on the economy is a little bit soft.
Yeah, listen, Oliver, it's good to be back on the show, and I'm glad that I was able to wrestle Nicole's chair from her. I'm coming live from the New York Stock Exchange, of course.
It's tough
this
work.
Is a classic case. It is tough work, and nobody does it better than Nicole. Listen, this is a classic case, in my opinion, of a little bit of market schizophrenia, right? Are we in a recession? That means we go risk off back again. We take tech out to the woodshed and we shoot it in the head. We go back on to the dividend payers, to energy and healthcare, which were the second and third worst performing sectors in the first quarter. The NASDAQ, of course, leading Q1 of 2023, and the tech sector leading the bull charge into this year. The market trying to figure out, is this enough for the Fed, the good news, bad news, the jobs numbers, the ISM report that we had this morning? Should that be enough for Jay Powell to say, you know what, 25 bips, then we're done. We're not going to keep hiking rates. We think we've got inflation under control. We're getting all the indications from the market, all of this data that tells us that it's not getting worse. We've passed peak inflation. Are we reaching peak rates? That's what the market's trying to figure out right now.
All right. The peak rates story, is that good? Is it bad? Because it seems like that's the first start, right? If we get peak rates, maybe the Fed pauses, all right, that's the first piece of information. The second one then is why and what is happening in the economy that caused that. Do we know what that is yet?
Yeah, I mean, no doubt, and that's part of the big question, and I actually think it's not that difficult to answer. So that bad news in terms of the economy, all this economic data coming in, ISM, jobs showing labor market cooling, sales coming down in some of the earnings reports that we had in this most recent earnings season, should be sort of long-term negative for stocks, right? But they're going to be short-term positive as it's an indication that the Fed may be done after this next 25-point rate hike.
Will that be good for stocks the way it has in the past, or is this market growing up and realizing that a slower economy slows earnings as well? What's that trade-off like right now, you think, Mark?
It depends on the duration, right, Oliver? So in the short term, I don't think the market's learned its lesson, to ask your first question precisely. Short term, it's going to be good for equities as Jay Powell comes into this next. Of course, we've got 3 more inflation prints before the next FOMC meeting. But if we get that 25 basis point hike and we get dovish word from the Fed, a dovish tone that they may be done, we're going to see the market react to the upside. But as things start to evolve and as the reality of weakness in the overall economy, as is indicated by these very numbers that we're talking about here, start to come to light, I think we could see some bearish pressure going into the third quarter.
Okay. Now, where will we, if we see that bearish pressure in markets, where do we
looks like the Fed is fighting inflation.
What stands out to you
like
as
Congress,
potentially the areas that might be a little bit more insulated?
Yeah, well, listen, we're going to
inflation.
see, as I said before, Oliver,
But
again,
we don't
that
need to talk
rotation,
about
that flip-flop from
What are you talking about?
risk and tech
Who's planning not to fight
into
inflation?
dividend payers, into companies that are have very strong balance sheets, limited debt. That, of course, in the wake of Silicon Valley Bank and all of the changes, the credit contraction coming out of this banking crisis, the market's going to favor companies that have a stronger balance sheet, that are those dividend payers, those staples, as it were, and tech's going to be hurt. But in the short term, we think, as I said, in the short term, we think tech will actually benefit from this anticipated dovish tone from the Fed at the next meeting.
Okay, a few things that are on your mind. Want to make sure we get to specifically, kind of off the beaten path a bit. You're watching lumber as one of your commodity inputs. Tell me about that, Mark. Where are we right now, and how does that apply to the housing situation?
Yeah, well, listen, lumber is a very interesting future. It's a non-tradable future, of course, but it's a leading indicator of where other commodities are typically anticipated to go. Lumber, of course, off 65% over a preceding 24-month period, up almost 2% today. It does seem to forebode good things in terms of maybe this housing contraction is not as bad as some of the home builders might think, but we're looking at it, Oliver, more in terms of what it might mean in terms of price correlation to other commodities, things like copper, silver, and perhaps even gold.
Okay, right now, still kind of downtrodden over the last couple quarters of disinflation, but I like the macro context for us to include this in, and very helpful. Mark, appreciate you walking us through your views.
Always a pleasure.
Yeah, you got it. Mark Lopresti, co-founder and chief market strategist.
Thanks, appreciate it, gentlemen.
Let's talk some earnings and whether or not booze is a staple. We're going to find out tomorrow morning with Constellation
I've been
Brands.
just chilling today. It's a pretty slow day on the market. We've got little guy napping. Thanks, Ace. Appreciate it, man. On Restream, it's funny. It spells out what the little emote is. So it says pair character flying in the air with a red cape and a smile on his face. Thank you for that pair character flying in the air with a red cape and a smile on his face, Ace. Cheapers. Spy bouncing a bit there on the 50. Looks like you might win that bet on GME. Got about 30 minutes to go. Held up strong. Buy below VWAP, GME above it. It's one of those days I could have waited on getting puts. But I do see a bear flag. It did break that support. Yeah, I'm telling you, it being fixed is going to attract bigger money. It should, at least. You don't have to be nervous until it gets volatile to the upside. Probably won't see big volatility to the downside.
of their business. And so in Nielsen track channels, which is what we analyze, we can see that California alone has been about a 500 to 600 basis point drag on their revenue growth in track channels. Beyond that, though, I think the consumer we think is downtrading in beer, or showing at least less of an appetite for premiumization, which was what prompted us to downgrade the stock in early January, as well as upgrade Molson Coors, which has a much bigger exposure to value price beer. The reality is that the Corona and Modelo portfolios are very expensive relative to the overall beer category.
Wow. I guess I didn't realize such a big difference, but we've seen that pretty much in so many sectors, the pricing down, so I guess ultimately makes its way through everything. Your market perform on Constellation, it seems like it's kind of the exception within some of these so-called vice categories, if you will. Philip Morris outperform. Pepsi on the snack side is an outperform. So this is a bit of an outlier, right? You think this should be a couple bucks lower from here?
Yeah, we think the valuation largely is fair at these levels. So I'm not calling for a material degradation in the equity price. Otherwise, I would have an underperform rating on the stock. But I think given the absence of true earnings growth, that I think the valuation is fair, and I think the shares will likely remain range bound for the near term.
Got it. Okay. What about the cannabis biz and the legalization effort that's happened across the country? This was supposed to be, I guess, a big growth avenue for them. Is that not the main driver at this point still?
It's not. They've been supportive of some of the moves that Canopy Growth has made. They're proposing to consolidate some assets they have into the U.S., into a U.S. holdco, and that's going to require several rounds of shareholder approval. But Constellation has said that they are supportive of that. Canopy Growth, which we cover with the market perform rating, has really struggled in the Canadian business, but they do have profitable assets in the United States, and so their aspiration is to consolidate those assets and be able to report them as part of their reported earnings. That does run them the risk of a delisting by the NASDAQ, which the company has acknowledged.
All right, thanks very much for the rundown. Very helpful. Appreciate it, Vivian. Thanks. All right, tomorrow morning the earnings and expectations here for the company by the market are for about a 4.5% swing. Certainly would be within the realm of the price target from Vivian's analysis, but still a lot of proving to be done here as investors are pricing down in every category, including booze, it seems, like the reference to a little bit of market share for Coors business instead of the pricier Modelo and Coronas. Coming up, let's talk some options. Tom's got two bullish trades. One in a consumer staple that has, for the most part, held on to its dominance. Shares have faltered a bit, but for the most part, Starbucks has been rewarding to investors. We'll check out United as the bearish trade. Someone's fading the airlines. Stick around.
percent increase in comparable transactions. International still down, fell 13% last quarter, and now they're facing some illegal anti-union tactics. The CEO, the interim CEO, Schultz, was in front of Congress testifying against that, basically saying, hey, they're using everything in their power to kind of push back against this, the forming of unions at some of their outlets. And think about what they've done for workers. You know, they have a stock sharing plan. They pay for partial college tuition. I mean, just to beat back against this company and the scale that they have, pretty astounding that you know, unions are getting formed because they pay better than most in this particular industry. But that being said, we're starting to see somebody take maybe a bullish stance in here because they were in there buying some really short-term calls, really quite big as far as the number of contracts that traded on these 106 strike calls that expire at tomorrow's close. So just really short-term positioning. Over 30,000 of these were bought up today. Average debit of only 12 cents because there's only one day, right? These are out of the money calls. But that break even of 106.12 over the next one day is about 1.2% above the current share price. So you don't need a big, massive move, maybe another move like we're seeing today. But it's pretty interesting that somebody's taking a shot here to the upside just into the end of the tomorrow's close. So yeah, about 36,000 of those have now traded on the day. Really low option premium that they're outlaying here on this position. But yeah, maybe some more gains tomorrow. If this market turns around, we could easily see you know, 1.2, 1.3% pop in the shares to get above that break even.
Well, it has worked in a lot of environments, so I can see kind of where the bullish appetite stems from. Solid on the year, you know, a little bit higher, unchanged to slightly lower last year. It was volatile, but ultimately it came back and closed real strong. Yeah. And then, of course, it was good in 2020, 2021. So even despite some of the kind of headline news that's been negative here and there and the drama around Schultz and laborers and whatnot, but ultimately it's worked.
Yeah, think about the pickup that they're going to see in China probably, right? They saw a decrease in international sales. And remember, China was just coming out of the lockdowns that they had in place
Virgin Orbit going again.
Year. So that part of the business should pick up. There's some channel checks that we've seen so far from some of the analysts that have said it's not rebounding as much as they would have liked at this point, but that's one of their big growth areas moving forward.
Okay. Let's talk some ConocoPhillips. Yep. Your other bullish trade here after the nice energy bounce from the weekend. Still carrying through, up 1.5% for COP.
Yeah, and if you saw the moves yesterday in the individual energy names as opposed to crude oil, crude oil was relatively flat yesterday, still above $80 a barrel.
Yeah, stocks were down though.
Yeah, but all the stocks were down. Some of them were down 5 to 8% in today's session. So maybe some profit taking in that particular space because we've got crude oil still above 80, near $80.50 a barrel after that production cut from OPEC Plus. And the stock got
this is a different ticker. This is Virgin Orbit, so this is just a space.
About 105. Now, they had a hold on these shares. They were they had a price target that was far below where the price of the stock was currently trading.
They declared bankruptcy.
But now stock's still down about 8% so far this year, even though it's up over 1% today. It's hovering right near its 50 and 200 day moving averages on the chart. But traders were in there kind of loading up in this May option series in ConocoPhillips. They did a combo trade.
Oh, this is one that launches off of the Boeing.
Sometimes we refer to that as a risk reversal where you sell a put to help finance the purchase of a call.
It's basically strapped to the bottom of
on this one. So they bought 4,400 and they made 120 strike calls pretty far on the money to the upside. They financed part of that by selling 4,400 of the May 90 puts. They paid a debit of just a nickel. That break even of 120.05 to the upside.
Super bullish.
Over the next, super bullish. Over the next 44 days,
Virgin,
it's about 11% above the current share price. Now remember, last November, this stock was trading 137, so don't think it's out of the realm of possibility if we continue to see crude oil move higher that ConocoPhillips can't get there. But you can see there from the risk profile, Oliver, you'll lose a nickel that you paid for the combo trade all the way down to that 90 strike. So you don't have a lot of risk between about 90 and 120, just that nickel that you paid. But you have a lot of risk to the downside below 90 bucks if the ConocoPhillips goes down there because you are short a naked put down there. But you get all that upside above 120, and they're giving themselves time. About a month and a half, you'll capture some earnings in this also.
Got it. Okay. Makes sense. Very bullish. Pretty solid little comeback here for the energy companies after dipping yesterday. Your bearish trade today is back in the airlines.
Yeah.
I feel like this is often the bearish breeding ground of traders in the airline sector. It's like there's always bearish stuff going on here in the options corner.
It doesn't make any sense. If you look at the chart on UAL over the last 30 to 35 days, this stock's down 24%.
Yeah, it crashed after making a 52-week high.
Yeah, it hit about 55 bucks a share, and now it's trading, 24% below those prices. I know TSA numbers aren't going down at this point. Maybe crude oil over the last few sessions have had a negative impact as fuel prices will go up. But Citigroup actually came out with a note today and said this is they put it on their short-term catalyst to the upside list. So some positive commentary there that the sell-off that we've seen over the last 30 days has been overdone at this point.
That movie.
But that didn't stop somebody from taking a bearish stance in here. But what they gave themselves on this option trade that was unusual to me was that they gave themselves duration. They went out to the January monthly cycle of 2024. So giving yourself plenty of time for this thing to move lower. 289 days. Trader bought 6,000 of the Jan 30 strike puts for a debit of $2. So these are far out of the money, over $10 out of the money to the downside. You're still paying $2 premium for those because you've got 289 days. The break even for this trader at $28 to the downside, that's 32% below the current share price in UAL. But anything can happen. What if we go into a recession? What if crude oil continues to move higher, goes above $100 a barrel? This could be a hedge maybe for an existing stock position, but you're paying a hefty premium for these out-of-the-money options on this one. So if it's somebody speculating to the downside, the key for this trader is duration.
All right. Interesting. So they need some time for this thing to fade, which and looks, I mean, hey, we'll see what happens around $40, but
yeah, but that's true. A lot of stuff
the stock
was
trading, was trading around $31 just about 6 months ago. So it does have that ability to fall pretty swiftly, as we've seen over the last several years.
31 to 55 and down back again.
Yeah.
All right, thanks, Tom. Interesting options trades. The super bullish trade.
I didn't know about any specific space to be right now.
And maybe Starbucks as a little bit of a hedge for consumer staples. What about Chipotle and Sweet Green? What do they have in common? Well, today they're both down, but there's also a little bit of drama between a couple of the fast casual chains. Choose your fighter. We'll see which side Jenny Horn is on in a moment.
The strength on GME. Climbing all the way back up. Drop. I wasn't sure if I'd be able to make it all the way back up here. Might add to my puts. I'm moving up. Got about 20 minutes to close. We'll see. Might get a wick down. 21.59. Takes hours to get up here, and it could take just 1 minute to come back down here.
Chicagoland area, an average Chipotle chicken bowl is around $9. So if you want to go with price parity, Chipotle is the cheaper option. Sweetgreen's bowl, though, looks absolutely nothing like Chipotle's bowl. This is a wild story, but we are seeing Sweetgreen already shake off some of those losses. So I don't necessarily think this has a ton of credibility, but we initially saw shares sell off. So worth discussing because Chipotle is clearly the better performer of the two, at least on a 12-month year-to-date basis.
Yeah, seems like maybe there is a reason to appeal to the Chipotle chicken triggering that those words might have in someone's mind. I was most interested by the ad, the person who's like going for in their ad, I don't know if you saw it, that's like going in there to make the dip and their photo is like all tatted up and stuff. So I thought that was kind of interesting. Like, I guess they're going for a certain consumer. But I'm with you too. It's like nothing can be called Chipotle now. I mean, that was like a spice before Chipotle came along. I mean, my local grocery store at home, there's a Chipotle sauce. I mean, like, what, can nobody use that term anymore?
Exactly. Chipotle mayo is like a very commonly used
Chipotle
condiment.
mayo.
I mean, I think this is ridiculous. And I guess it had more to do with like the lettering, the color of the lettering is this adobo red font. It doesn't appear to be red to me, at least on Sweetgreen's website. So I was absolutely mystified by this story because, yeah, does Chipotle get the rights to everything that is Chipotle? Absolutely not.
Yeah. Okay. Yeah, it's a little strange. I'm going to say it's a little strange. I will say, though, with these stories, it always seems to have like the reverse effect where now I kind of want to go check out this Sweetgreen bowl, you know, like.
Me too. And I actually live where there's a Sweetgreen directly across the street from a Chipotle. So it's like the battle of which will I go after work.
All right. Well, for vegetarians, I don't think it matters, but that's okay. Thanks, Jenny Horn. I appreciate it. Let's bring in Dan Demi, managing director at KKM Financial.
BY moving
not
up
one to
past you
shy
out
away
there.
from a chicken bowl, I don't think, Dan.
Absolutely not.
That's
yeah.
right. That's right.
I'm a
I
big
knew that
fan.
that's
I
right.
love
I watched that
your
documentary
Choose Your
too.
Fighter analogy. Actually, I got
That
a
was
musical
interesting.
reference here for today, Oliver.
Oh, beautiful. I love the Dan Demi music references. I never get them. Go ahead.
I don't know if you saw it, actually.
Nova Twins, Choose Your Fighter from Supernova album last year. Great album and a great track. Very
right.
powerful. So there you go. Check it out.
Yeah, Dan Deming with the offbeat rock records always. We're going to start a
it's a
playlist here.
It's a powerful one, that track right there. They're a fun band. So keep an eye on the Nova Twins.
Love it. All right, tell us about what's powerful in the market here, Dan. What's catching your attention ahead of Friday?
Yeah, some of the general trends, Oliver. We're seeing, in the commodity space and the areas of the futures markets, we're seeing, the dollar continuing to try to hold off those February lows. It was successful today, coming off those lows. Didn't quite get down to the February low, but still hovering in that 101 handle.
Right back to that
also, yields are kind of moving lower on some of the data points this morning, and we're seeing the 10-year yield actually going to the lowest level since September of last year. So that's another dynamic on the back end of the curve where we're seeing some action. And gold holding up here again at the highest level in basically a year as well.
You're like,
so various facets playing out
graphic
in
design
different
and
parts of the
photography type
market.
stuff.
And in the equity markets, Oliver, the one thing I'm watching is
saw it
healthcare
on,
today, as we're
what was
seeing
that
a
photographer on
react
YouTube?
possibly to the J&J news, but overall,
Wait, he's the one that made it, isn't
we're
he?
seeing healthcare
That
finally
redhead guy?
catching a bid.
Yeah, we were talking about some of that. Kind of seems like the market's getting a little bit more interested in some of these
Can't remember. It's been a long time
safer
since I saw it.
assets, perhaps.
Right. Absolutely, yeah, because they have underperformed year to date. Now, last year certainly outperformed, but they were, they were selling off here throughout the first quarter as money flowed back into some of the areas. You saw a mean reversion basically taking place, particularly with the interest rate environment shifting, and that's something that you got to keep an eye on as we move towards non-farm payrolls later this week, because we continue to see the interest rate environment shifting, even though the Fed continues to reiterate the fact that they are not backing off at any time soon.
True. We got the dollar a little bit firmer today. Seems like that might have some bearing on what you're saying here, because yields are dropping, but the dollar's a little bit more sluggish, and I feel like that is a Fed-connected trade.
Yeah, it could be, and also maybe just a little oversold as it has trended back down towards those February lows. So, not surprising probably to see a little bit of back and fill here over the next day or two as the markets digest the various numbers. But the general trends appear to be still trending in the way that the dollar is probably going to break through that 178.5 level. I think was the intraday low, or somewhere in that vicinity. I do expect that to continue to see to be breached here in the coming weeks as the markets are pricing in a higher probability of economic slowing and the Fed possibly pivoting, and some of the various narratives that have been out there for a couple of months, but now slowly starting to come to fruition.
All right. Well said. Thanks, Dan, for the check-in. Appreciate it, sir.
All right, Valor.
All right. And the music tip as well. Nice little list we're getting of Dan's groups, the Nova Twins, today's recommendation. All right. Schwab panel's coming up next. Be right back.
Yeah, I use Premiere. I don't edit enough anymore to be fast at it, so I'm super slow, but yeah, when I need to edit something, I usually use Premiere. I wasn't able to have time to do a video today, so we'll just stream to the end. Eyes holding above view up here. BBBY is really strong today. It's just VWAP, really. It's not bad. GME, look at this. Almost green. Total fake out from this morning. Not sure what to think if today's candle just ends up with a wick down there. I don't know. Those little green candles add up to just one big red candle. Those little green candles add up.
Strategist for the Schwab Center for Financial Research, and Mr. Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab. Good afternoon, gentlemen. So we've got this bond move continuing from Cooper. Let's extend our conversation from yesterday. The 10-year really feels like this thing is moving now to the downside. Any area down here where we might see a little bit of support for yield resistance for bond prices, or are the bulls really back in control?
You know, we are continuing to see yields move lower, and I think that continuing on the conversation from yesterday, we saw this morning there was
probably
another
green
sign
now,
of
right?
the economy slowing. ISM came out. We saw prices paid decline. We saw all the major categories decline. So the prices paid number, that bodes well for inflation potentially coming down longer term. But really, we're seeing those signs of the economy slowing, and I think
so.
that's
June calls, you're going to be covering earnings.
Drift a little bit lower.
Not to say you're going to hold that long, but you might be paying a little bit of a premium.
Really showing some
conviction
like about what it thinks the Fed is going to do. I don't know if the dollar is quite on the same page. We haven't made new year-to-date lows there as yields are. You kind of think the dollar will follow, especially with what we talked about, Jeff, with some of the other central banks.
This
still
happens where it comes back up and
is there something we can extract out from there, maybe about what the Fed's real goals or plans might be?
I'm Not flipping yet. I'm holding my puts.
I don't know. I mean, a little bit of a surprise to see the Reserve Bank of New Zealand aggressively hike by 50 basis points. That was a
For my
surprise.
payday.
Yeah, a big jump, right? I mean, and it's interesting because New Zealand and Australia have kind of a similar backdrop right now in terms of their unemployment rates, their inflation rates, looking at what's going on in their housing market, down 10% in both markets. Yet Australia decided to pause, and New Zealand went with a 50 basis point rate hike, going full Volcker on the situation. So I don't know that that really gives us any clear indication, except that it tells us that there's a lot of different opinions. And I imagine that's true within the Fed as well, and very difficult to come to a conclusion as to what the right policy
no, that's good to
is,
get time.
given the fact that inflation
Most ones I was
remains
getting,
stubborn. And
my big position was
yet
were
we
all
still
January,
see,
so.
some economic data that's a little disappointing, like this morning.
So what's their inflation like over there, Jeff? Like in the land, very far away, where they, film all those.
See if it breaks up above this.
That's what we're talking about right here. Australia, New Zealand, and whatnot.
Yeah, so what the Hobbits are
I
seeing
think
right
we're
now
out of the
in New
channel. I
Zealand
think
is
we're coming down now.
The
But
Hobbits are now 5'5".
Yeah, we're looking at about 7% inflation both in Australia and New Zealand. Unemployment's about 3.5% in both places, and home prices are falling at about 10% rate. And they're experiencing the same thing we're seeing everywhere around the world, which is that manufacturing and trade has fallen into a
can't be an island because we didn't get a gap down.
Retail and construction seems to be holding up a little bit better. So it's a very similar backdrop, but
island
very
bottom
different
only
approaches.
happened.
And again, I just think that's
I guess there is
reflective
this
of maybe
gap
what's
here.
going on in central bank deliberations behind the scenes around
That'd be
the world.
big though.
All right.
That'd be a
Good
gap up
context
above
here is,
60
folks
cents
are
at
still,
open. So
ready to fight and hiking rates.
probably not an
Man,
island.
I've got so many Lord of the
But it
Rings,
could be bottoming
economic
though.
jokes I want to
Because
try
as
and
we
do
see
now,
the
but I'm
price
gonna
actions,
save us all
it is. It's
and myself the embarrassment.
steep.
Let's
It's getting
keep
less and
going.
less steep.
The
so
data today, Cooper, how
just need to find a
daily
day
do
where
you
you don't
think
make a
the
new
drop
low.
in ISM,
Maybe it's tomorrow.
data
I don't
were?
know.
I got no good Hobbit jokes for you on that one, Oliver.
And we'll be
But I do
back in the
think
flat
that-
range like here.
Well, good for you.
I mean,
Thank
it
you
might
for that
just
one.
kind of it doesn't necessarily have to stay
I think if we
flat,
look at
but
the numbers
it
today,
does
we
this, and
kind
we're just waiting for a break to
through
the
eyes of
upside.
Fed policy.
If it just kind of
Probably
use,
doesn't change what we're seeing in Fed policy.
could come up,
I do
find
think that it
resistance,
was
and come in a
notable that Loretta Mester
retest,
came out,
or
talked
just could
cheap,
keep going.
It toes the line of what the Fed has
But
already been saying. Is that
TA on this thing is kind of silly just because it's so
she anticipates further hikes of interest rates.
driven by
So there's
shorts
gonna be
and
some
then
tightening
news
there. But
catalysts.
again, I think what's very notable about what's going on, Oliver, and this is continuing on from what we've discussed recently, is how different the market's view of the Fed funds rate should be and what the
Using
Fed
money
is
that probably
actually
shouldn't.
saying where it should be. So again,
Probably,
the
yeah.
Fed believes hike and hold mode, whereas the market expects at least 4 rate cuts by the end of January of next year. So those two differing views, again, that could potentially be a sign of volatility on the short
1
end of
and
the yield
2 million
curve.
share
So
buys.
that's really something that I think we'll watch to see how that plays
pretty
out
good.
going forward.
Okay. So the numbers start to soften up a little bit, kind of
See that?
continuing.
GME's
How
not-
predictive
not
do you
breaking
think,
through that
Cooper,
level.
this will be?
Crazy
for
it actually
employment on
retraced all the way
Friday?
there, though.
How much can we project?
Yeah, the ADP numbers that came out this morning, they tend to have a low correlation with the actual
That's a
employment
full
numbers. But if we take
right to
the
that fib,
culmination of
basically.
things, it has been softening. So ultimately that means, well, what does that mean for an investor to do, and what should they be doing right now? So what we're suggesting to our investors on the fixed income side of the coin is to stay up in credit quality. We
Oh,
think
1
that
minute to
right now
close. Here we
it
go.
makes sense to take outsized bets.
Flies
on
bound
credit
and streaming.
For corporate bonds, that means focusing on investment grade corporate bonds rather than high yield
Oh,
bonds.
shoot, I need to
And
close.
then in the municipal bond
Ah.
market,
I'm gonna turn the
really
bell
most
off.
of the muni market is highly rated, so we think that
Dad, it's
There.
Mom's bell.
Oh, that bell, yeah. Different bell. Reaching for the biscuit. You've not heard that, man? That's a phrase from like the 50s.
Mom didn't turn the bell off.
She didn't know. How many kids I have?
Yeah.
A nice amount.
Hey, Dad, should I turn it off?
No. Okay, you guys didn't hear that.
Earnings
All right,
season,
yeah,
maybe
good. It did just
with
ring.
economic data exceeding economists' expectations, maybe earnings exceed analyst estimates for the quarter. I note the PMI has a pretty solid long-term relationship with earnings growth. Purchasing Managers Index, one of my favorite economic statistics, the dip below 50 in the global PMI from August
All right, there's the bell.
to
GME.
January actually firmed up in February and is right around 50 right now,
GME
which
closed
is
at
the dividing line
22, only
between
down
growth in earnings and
1% on the
contraction
day.
in earnings. So that's
SPY down
suggesting
a 1/4%.
that the recession in earnings might be very mild, at least on a global basis, and we could see some upside
BBBY
surprises
only
in the
down
first
actually
quarter despite all the
4.5, which
concerns here around
really
the
isn't
banking
too
stress
bad.
at large.
Better than
great stuff, guys. Nice,
all these days since they
combo
announced
here.
that share
Really
offering.
good topics and a nice way to finish off our session with a little preview into Friday. And
every day has
season
been
further beyond. That's the big picture.
basically
Cooper
bigger
Howard
than
and
that.
Jeff Kleintom.
See, it was
Nice
yesterday.
work,
Actually,
guys.
yesterday
Fun
might have
one.
been smaller.
Closers panels coming up. Caroline and Kevin Green, you're going to give us some thoughts on a few other subjects from this session today that's going to end mixed that we haven't quite
Yeah, I think yesterday's candle was a little bit smaller, but still, it seems like it's slowing down.
The lows of the day.
The
At least we
absolute
finish
just
somewhere
bloodfest.
above them as the Dow does pull off
MACD
an
did flip
advance, and
bearish, which
the Nasdaq
isn't a good sign,
significantly
but
better than where it was
more about
a
this
couple
price
hours
action at
ago.
this point
Basically
with how
since
big of a
11:30
move this
Chicago
is.
time, we've been kind of grinding back a little bit here.
Yeah, could be starting to round down. Might not be till next week. I feel like tomorrow we still could get new lows, but maybe not. And we need to break to the upside. But without a news catalyst, I don't think any shorts are closing, and that's going to be what's going to rip it. So even if it's bankruptcy news that they're filing Chapter 11, that could be the catalyst for shorts to start closing, or the reverse split, or anything else. News this morning didn't really affect it at all, I guess. I don't know when that came out, but of that lender concession thing, whatever, or consignment. SPY still kind of choppy, maybe until tomorrow, and then jobs data on Friday, and see what happens next week. Engulfing candle still is a good bear sign for me. What the heck? Look at that candle. Look at that. Where did it actually close? 1 minute doesn't show it. 5 minutes shows it. Is that extended hours? Yeah, it's showing it on the 5 minute though on normal trading hours. GME, it showed pretty good support underneath that level, but yeah, I think still since it broke it, I think we probably are going to come down still. I mean, the market kind of did the same thing. If you look on that daily candle, kind of just wicked down there. So yeah, I'm not closing those puts yet. The rest of our account fared pretty well because most of it's shorts. Wow, look at that fake candle too. This one's super illiquid. Corsair.
Look at that fake candle.
Look at that one. EVTL. Not great. Our short on MCBs. One did well. Our short on MU did well. This one is only actually down 0.4 on the day. A lot of stuff had a big rebound. So yeah, pretty choppy probably until tomorrow. The next week probably get some movement. And like they said, earnings, which I'm not very bullish on. Let's see. Cash care put on Rivian's down. Rivian came down quite a bit today. MCOM was up some. And now it's down 8%. Yeah. Birds had a little move up. Oh, look, now it's showing GME broke above that level. Birds up almost 4%, but still underneath. Can't do it on there. Still underneath that level. That kind of support resistance now. Yeah, traded the futures. I guess I just held the futures from yesterday. So these are ones I opened last night before bed. Mark was up a penny bit. I just got 5 of them, and then I did open a little micro oil short today. I think oil's probably at a level that it's going to reject here. Last time they did this, was it here? This is last time. Oil got basically, the supply got cut. We had this big gap up when I think Saudi Arabia, or I can't remember, maybe Russia at that point. And then it actually sold off after that. So thinking that gap fill comes on oil. Probably with the market coming down as well. Yeah, otherwise pretty boring day. Thanks for your dono today, Ace, and your support. Thank you guys for your likes, your subscriptions, your thumbs up. Friend that has 7 kids. 3.35 kids. Can't even go to the movies in one car. I mean, there's definitely 8-passenger cars and 9-passenger cars. After that, then you have to get a van, 10-passenger, 12-passenger van. But you can get cars with 3 rows in it with all benches. Come on, man. They had wagons. You have old like Caprice wagons that had 9-seaters, benches in the front. Suburbans used to have it. Actually, you can even in some new Suburbans, you can get a bench in the front. Down in Mexico, I bet all of them have benches in the front. Typically, GME dump in the morning, then slow grind up to dump again this in the morning. Yeah, we'll see. Skip earnings. Thanks, guys. Thanks, Jills. Thanks, Jonathan. Thanks, Ace. Thanks, Jay Scott. That's not enough. Thanks, Austin. Yeah, stream to the end today. No video. We'll be back tomorrow. Same time, 9:15. Make sure you subscribe, you've hit the bell. Sub up, like up, comment down. Happy money sticks around. We will see you on Discord or on Twitter.
Of course, we'll hear from them later this month when
Twitter,
they actually report
or
earnings,
sorry,
so maybe
yeah, Discord. The
kind of
Twitter
softening the
thing
blow
is still
there. We'll
down,
have to
so
wait and see.
didn't have any really news.
All right. Very interesting story
well,
today, where it's almost like the
get him a car.
market's pressure
Takes
pushed
like $40
the
a
company
day.
to make that clarification and put the numbers out. And
Yeah, get him a
they
car
weren't
with
exactly great, but at
7
least,
seats.
we got
Even
some
minivans have 7
numbers.
seats. 2 rows and then 2 bucket seats in front. 7.
Total deposit
Oh, that's 8.
last month. So it
Yeah,
was
that's
a little
8. Come
bit
on, get out of here.
suspect
Minivans with buckets have 7.
you know, at first, and I think
Thanks, guys. I appreciate it. We'll see you tomorrow. Have a good afternoon.
so, you know,
Peace
some
out.
may say, you know, when they actually broke down
Peace out.
what they've been seeing.